Alrighty. Are we live? Wait for
Alrighty.
it. Oh, there it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate course. But, ladies and gentlemen, we are finally moving here in pre-market. It's a pretty nice gap up. It's bringing us to the higher end. I believe it is taking you now almost near the high of Powell, and that's probably going to be our target today. And it is all off of the news from yesterday, a.k.a. China stocks, Japan, everything overseas from China and the Alibaba yesterday. It helped lift some things up. We had some earnings. Some of them were bad like MU, but people looked at the optimism throughout all of it. So pretty decent day. The banking issue, people are still thinking it's getting a little better, but people are worried. The bonds are moving, and really we're going to see if we get any updates. I do believe we will get another testimony. Yesterday was the House. I think you're going to hear a Senate testimony with all of those officials. We'll see if anything changes, but yesterday was more so of a non-event when it came down to that. But either way, the futures are up, the dollar, the bonds, everything's moving. It's middle of the week, and we got a couple of interesting moves here to wrap up the month and wrap up the quarter. So, ladies and gentlemen, I hope you're ready for it. It's game time. Oh, good morning. Matthew, God bless you, bro. What's up, baby? Oh, good morning, Open Face. Good morning, AI Trades. I see Jay Yacht in the house. Tyree, baby. Candy Upton. Good morning. Tim Whitman. Laker. Jay. Oh, good morning. What's up, Joe? Caressa. I hope you're doing good. I saw that you said it was delayed, so I'm going to keep praying for you. I hope it gets better. Good morning. What's up, Maria? What's up, Cherpoka? JD. Pugsy. Oh, Lateral. Lost one. Dan B. Good morning. Christina. Good morning. Oh, Jules. Jay. Cody, good morning. Alaskan Assassin in the house. Ryan M. ready to play. Kurt McGirt with the peach. I know he's ready. Oh, good morning. What's up, D. Sane? What's up, Stacy? What's up, Matthew? D. Xavier. Andrew Lopez. Colt 45. Eric. How you living, baby? Good morning. What's up, Car Plaza? Good morning. Mason, good morning. It's a good day. It is a good day to have a good day. Who's with me, huh? No one's with me. You know it's a good day to have a good day. That's what they say. Oh, what's up, Xavier? What's up, Kevin Bliss? Oh, good morning. Good morning. Oh, Brian Hunn started off. Yeshua. Oh, what's up, Chad? What's up, Astro? Good morning, Octavia. Oh, I like you ever watched the show The 100? Yeah, I like that one. That was good. What's up, Payday Devil? What's up, Samuel Gunn? What's up, Preforms? 333, you ready to play? Mr. Lima, good morning. Kobe Maguire, Hailstone. Oh, Chattadonia, we love to see it. Bright and early. You're lurking on this fine day. Amen, man. Nothing wrong with lurking. I hope you have a great moment lurking. I hope you're blessed. I hope you're peaceful. Are you ready for it? Yeah, ready for it, Chad? It's going to be a fun one. It's Wednesday, man. We about to wrap up March, man. You know, this is the best quarter in 3 years. So assuming the NASDAQ does not drop in the next 3 days, this would be your best quarter for the NASDAQ in 3 years. So even though this month wasn't that crazy, again, you did a lot of work January and February. So let's see, Chattadonia. Let's see. But let us get to the news. UBS. They brought back Sergio Armati as CEO to oversee the Credit Suisse interrogation, replacing Ralph Hamers in a surprise move less than 2 weeks after the takeover. The Swiss chairman starts April 5th, reprising a role he held for 9 years. Hamers will remain in transition period, shares Rode or Modi. He's the best pilot for this voyage than Hamers, as he shrunk an investment bank before. The scale of the job cuts will become clear soon, Hamers said. Retention is a large part of the execution risk. UBS will avoid importing the CS investment bank bad culture. CS is still helping rich Americans hide assets from the IRS, according to the U.S. Senate. U.S. futures and European stocks rose as a rally in Chinese tech boosted sentiment, and concerns of contagion from banking turmoil continued to wane. Treasuries were steady. City strategists say positioning has turned bullish in some parts of the curve. The dollar advanced. Oil rose while gold fell. SES surged in its near deals to combine with Intelsat to create a $10 billion European satellite giant. Macy's CEO Jeff Gennett will retire in February, ceding the position to Bloomingdale's boss Tony Spring. UBS is said to hire former Morgan Stanley banker James Gray to help boost investment in the firm's business with the PE firms. Jefferies reported a profit plunge as a slump in investment banking overshadowed a bump in equities and fixed income trading. The result offer an early snapshot of how Wall Street's biggest banks may fare when they report for the first quarter. More bullish oil momentum. U.S. crude stockpiles slumped by 6.1 million barrels last week. API data is said to have shown in what would have been the biggest drop of the year if confirmed by the EIA. Gasoline supplies also sank in the Middle East. One of the top producers in Iraq's Kurdistan region started cutting production as a spat has halted. More than 400,000 barrels a day has dragged on. Oh, yeah. Wait a minute. Happy birthday, Benny Silverio. Oh, no. Yes. Oh, I was getting too excited with the nose. Oh, my goodness, Benny. Oh, we've got to take we thought at least this will be our 4th birthday, I think, man. God bless you, bro. We're wishing you the best, and I hope you know that Chad loves you, man. And God bless all of your service here in the chat. We love you, baby. Amen, and happy birthday. Amen, amen. Hey, man, wish Benny a happy birthday, baby. God bless y'all. Whew. The BOJ, Shinichi Uchida, indicated that any yield curve control adjustment would be communicated ahead of time and that they will keep the market on her toes, with some concluding it's the only way to avoid a bond sell-off in advance. It comes as bets on policy normalization help the yen make a comeback as a haven. It's the month's best-performing major currency, and Morgan Stanley sees it strengthening to $1.20 a dollar in the next 12 months. SVB's collapse is a reminder that the world's favorite risk-free asset still comes with dangers, though U.S. Treasuries remain safe in the sense that the government is very good for the cash. They've already bitten those investors who ignored interest rate risk. The big take is that there may be more surprises to come. Hot dog. The chart of the day is the Fed tightening cycle has had many straying bedfellows out of technology shares and treasuries. You may think that they would have widely different fundamental drivers, but investors seem convinced that there's one key dynamic that binds them: yields. When they both go up, treasuries and the NASDAQ go down. That is making it all the harder for anybody to seek diversification. 10 a.m. today, Fed bars testifying before House Financial Services. 10 a.m. February pending home sales. 10:30 EIA crude oil. 11:30 $22 billion of 2-year FRNs and $36 billion of 17-week bills. Then 1 p.m. $35 billion of 7-year notes. Earnings include Cintas, Paychex, and Constellation Software. Joe Biden will call on new rules on mid-sized banks. The Washington Post reported the measures will attempt to reestablish rules deregulated by Congress and the Fed during the Trump administration. U.S. 30-year fixed mortgages rates edged down to a 6-week low of 6.45. MBA data shows pending home sales may decline 3% month on month after an 8.1% jump in January. The U.S. and EU are close to an agreement on a critical minerals accord that would give European firms access to some of the green subsidies in Biden's signature legislation. French labor groups will meet PM Elizabeth Borne early next week to discuss the government's pension reform plan. The ECB will need to increase rate cuts if recent tensions in the financial system stay further contained. The Bank of England warned that the next blow-up in financial markets may be triggered by corporate credit after a massive buildup in private debt over the past decade. It found riskier corporate borrowing, including high-yield bonds, leveraged loans, and private credit, is particularly vulnerable to rate rises. The UK pension regulator said that they will issue updated guidance on LDI strategies in April. China warned that it will respond to any meeting between Taiwan President Tsai Ing-wen and U.S. House Speaker Kevin McCarthy, saying it would amount to a serious provocation. Tsai left Taipei today to visit the U.S. and 2 Central American allies. Hong Kong's residential property prices are expected to increase 8% this year after the removal of COVID restrictions. Australia's February CPI growth decelerated more than expected to 6.8% from 7.4% in January. Bank of Thailand raised their key rate by 25 basis points. The slump in South Korea's property market may lead to defaults on project financing loans, but policymakers have put in measures to stop wider failures. The financial watchdog said the country will consider lifting their ban on short selling later this year. U.S. gasoline inventory shrank by 5.9 million barrels last week. The API is said to have reported that'd be the sixth straight decline if confirmed later today. Crop titan Cargill will stop exporting grains from Russia, the country said, a move that will add uncertainty to the future of Black Sea shipments. In metals, Pilbara Minerals aims to almost double lithium output by 1 million tons by 2025. WTI extended gains to above 74 a barrel. RBC noted the pace of China's reopening continues to exceed expectations and predicted prices will bounce, but the S&P cut their forecast for global consumption. Zinc led in advance for best base metals, while gold nudged lower. Wheat jumped more than 2%. Broadcom's proposed VM takeover will get an in-depth review from the UK's antitrust agency after the firm did not offer any remedies to allay their competition concerns. The agency set a deadline for September 12th. Airbus ended talks for a 30% stake in Atos Avidian business, though the two companies will continue to discuss other options. Around 4 companies are considering selling high-grade U.S. bonds today. Underwriters say Aviation Capital is a likely candidate, and 10 borrowers have priced in more than $10 billion. Carl Icahn has nominated 3 people to Illumina's board. The Wall Street Journal reported in a letter to shareholders, he argued that the current board failed them by allowing management to close the acquisition of Grail despite antitrust concerns. Micron's better-than-expected sales forecast raised hopes that the worst for the chip slump may be over. Lululemon jumped pre-market after sales outlook beat, even as nagging inventory issues ate into margins. In China, PetroChina and Sinopec posted record annual profits. Bluebird expects a delay on FDA sickle cell drug application. Jamie Dimon is to be deposed in Epstein lawsuits. Jamie Dimon to be deposed. Apple launches K-pop offensive in Samsung's home turf of Korea. Some cervical cancer patients in England to get Merck's Keytruda. Honeywell sees air taxis starting to slow in 2025 and soaring by 2030. J&J cans RSV vaccine is leaving Pfizer. GSK in race to finish. Apple to open 5th retail store in South Korea this week. Microsoft price target raised to $316 from $270 at KeyBank, and then Disney Cruise Line to start vacationing in Singapore in 2025. And attention AI whisperers, a red-hot jobs market is mushrooming around ChatGPT technology with newly created roles paying upwards of $335,000 a year, and for many a degree in computer engineering is optional. They are called prompt engineers, people who spend their day coaxing the AI to produce better results and help companies train their workforce to harness the tools. $335 a year to be an AI prompter. ChatGPT, bro. Fizzy Investments. Champagne isn't just for celebrating in a special occasion. The finest bottles also pour out heady investment returns. And as the market bubbled over higher in 2021 and 2022, speculators pounce. Here are 8 expensive bottles worth splurging on. An incredibly rare find, a collection of 5 editions of William Shakespeare's works, will be offered as a group at next month's New York International Antiquarian Book Fair with an overall asking price of $10.5 million. The collection includes each of Shakespeare's 4 folios, along with the first edition of his collected poems. Paris will decide in a referendum on Sunday whether to ban shared e-scooters citywide in what would be a global test for micromobility regulation. Mayor Anne Hidalgo has pointed to private operators' use of public space and user safety, but supporters say a ban would deprive locals of efficient transportation. A judge balked at a suggestion that it may be too burdensome for Rupert Murdoch to testify in the defamation lawsuit over the 2020 presidential election reporting. Judge Eric Davis pointed to Murdoch's plans to travel while celebrating St. Patrick's Day engagement to Ann Leslie, saying that doesn't sound like someone who can't go from New York to Wilmington. And then on this day in history, Scott of the Antarctic froze to death in 1912. Captain Robert Falcon Scott had led a party of 5 that reached the South Pole on January 17th. Less than 5 weeks after Roald Amundsen, a rendezvous with dog teams from his base camp failed, and Scott and his companions died 12.5 miles from the next depot. Their bodies were found along with the first Antarctic fossils, which proved the continent was once forested and joined to other land masses. Well, there you go. Some guy went to the South Pole and froze to death in 1912. That's what happened here on March 29th. And Benny Silverio was also born. So I don't know. You take that how you please. You take that how you please. Good morning, Chattadonia. So we'll see how that plays out. I do have a couple of pre-market movers for you. So have no fear. We still got a couple of plays Arcturus Therapeutics, ARCT, they jumped 28% after the biotech beat analyst estimates for the fourth quarter and repaid debts that allowed a cash runway for 2026. Bluebird, they slipped 12% after the struggling biotech company said they expect to fall short of their goal to seek regulatory approval for the sickle cell gene therapy by the end of March. Carnival rises 2% as Susquehanna upgrades to positive, noting that the strong so-called wave season this time of the year when the cruise industry offers discounted rates. Dave & Buster's play falls 3.3 after the food and entertainment value operator said on the conference call that they are roughly flat to down very low single digits year over year. Lululemon gained 17% after the company gave an annual outlook and surpassed analyst expectations driven by higher demand. Micron rises nearly 3% as the largest U.S. maker of memory chips issued a forecast and adjusted revenue that was better than some had feared. There you go. That one's better. At least somebody, okay, better than feared. Newark Group, NMRK, climbs 8.5 after the Wall Street Journal reported that the Federal Deposit Insurance Co. hired the company to sell $60 billion of Signature Bank loans. Nextracker, NXT, increases 4.8 as Bank of America lifted their ratings on the solar tracking company to buy, citing positive leading indicators. Paychex rises 3.7 after posting third quarter profit that beat average analyst estimate. Sharecare, SHCR, drops 11% after the health and wellness software company gave a revenue forecast that was weaker than expected. SomaLogic, SLGC, tumbles 15% as the healthcare company's projection for 2023 revenue disappointed. And then Stratasystem rises 12% after the Nano Dimension submitted a revised offer to acquire the 3D printing company. Wow. So what time is it? Oh, we got a lot of time. Chad. So that's your news. That's your plays. I hope you got a couple more plays here in a little bit. But I'm going to go to the restroom. I love you. Good morning. Follow me on Instagram at The Trading Fraternity. Turn up here on Wednesday. Bring up some of the energy levels. Like the video to make sure you're alive. You know, it's like a wellness check. And get ready. Good morning.
Yeah, I guess the question is whether you can deal with both these issues separately.
Yeah, that is the question going forward, and it'll be interesting to hear from the rest of the Fed officials. Right now, it looks like they are dealing with inflation. You take a look at what's been happening in the economy. It has been slowing. The Red Book retail sales numbers that come across on a weekly basis show a decline in year-over-year activity at the same time that PCE inflation is going down. Now, we'll catch up with the PCE. These are February numbers on Friday when we get the latest update. But as Priya said earlier on the show, these are backward-looking data. So what are we going to look at more forward-looking? We can't get anything that's actually going to tell us the future. But the most immediate things in the background are things like this, the St. Louis Financial Stress Index, which does show the greatest amount of stress in the financial sector over the past couple of weeks since the pandemic and before that, the great financial crisis. Now, these numbers only go through the 15th. So we'll be waiting today at the end of the day to get an update on whether financial stress has come down or not. And then you have the question of what's happening with banks. And as Neil Dutta was saying, and you quoted him, it's either a bank crisis or it's not. Right now, so far, it's not. We're looking at lending there from all banks and from small banks. And as you can see, not only have they held up, but last week they rose. So we'll see if that continues this week when we get the data on that at about 4:15 on Friday. We'll see what's happening with the banks, and we will see if we are having a crisis or not. So the Fed speak is going to have to depend on reading the tea leaves of these more coincident indicators than on looking backwards at things like PCE on Friday, as important as that'll be to traders.
Mike, you and I have talked a lot about whether policy is truly in conflict. I think a lot of people have written about that over the last couple of weeks. Seth Carpenter at Morgan Stanley totally disagrees. Mike, you wrote this over the weekend. Central banks are deliberately tightening financial conditions in order to slow their respective economies and thereby bring inflation down. What the bank's disruption does, however, is make it harder to calibrate the correct...
Makes it harder to calibrate the correct line of policy. Good morning. Good morning. Correct line of policy, huh? No? Okay. Anyways. Well, let's see. Again, here is our daily post. I think our Chad survey of the day. I asked, do you think the bank run is over? Out of 526 Chads, 28% believe it is, 72% believe it is not. So let me see what we got here. We got some top comments. I got a couple. You got was this adding to the ZM play. Jesus posting the Alibaba news there. Apparently, they had a conference call to discuss the new organizational governance structure. That's actually really good news. Thank you for that. Gen Z says if there are other banks like SVB in unfortunate interest rate positions, things will get tighter for these banks if the Fed continues to raise rates. Sick format holding EBS. Hard PHILO watching Note CDX and A-Bus. Sergio Amrati, again, this was the big news here. Again with UBS. We'll see how that plays out. Day trader Zach, he says lift April 14th puts, Elf May 100 calls, Baba weekly 110. We'll look for something in the longer term, keeping an eye on Lulu and VKTX. Tokyo Bank of Japan, this one was big, so we got to watch the what's it called, the yen and what they were saying, but pretty much the Bank of Japan deputy was like, we're going to hide our next moves. EBS, SQQ, CDTX shares, IF April calls. If April 5th, 390 puts drop down to $1 this morning, buy it. Random play. Get out now. $100 bank play yesterday. I closed 10 FRCs, 331 at 10 cents, and then a single bet on the Deutsche Bank credit swaps. That is what caused all of that turmoil last Friday, believe it or not. So there you go. Getting that thread updated. But Chattadonia, what else do you got? Now you got it. You got to hear a little bit. You see, that was the organized way to do it. That was the organized way. So now we could go to the unorganized way. Chattadonia. What's your first play of the day? What do you got for me? What do you got? Let's go. Post your play. Apple puts. ENVX, Malaysian factory, shorting pet rocks. He's talking about gold. Holding Apple puts, Ford, NVIDIA put, calls on Getty, SPY puts, coin calls, Tesla call, Tesla short, Riot shares, calls on the Chad, EBS, closing Lulu long, watching Micron, Lulu, Ford, Josh call, cashing in on Lulu calls. Selling SPY calls, sit and wait for the long term. SPY calls above 400. Long on bacon, EBS, HIMS cover call, TLT, Tesla call, Amazon, MES short, HYMR, HRMY, Mara calls, TQQ puts on Micron, holding Lulu long, FRC call, sell, ad call, calls on HUD, long GME, buying for the future, EBS, HRMY puts, XLF call, FCMA puts, TQQ, Baba calls, Square calls, closing some tech long, SPY calls, Lulu puts, do I get out of my tech puts, Lift puts, short Russell 2000, SQQ, long, Boyle, long on China, GIS calls, Bros calls, Yang, Taiwan visit, Lulu puts, Macy calls, SPY calls, Lulu calls, short hell, selling premium, ATKT puts on Darden restaurants, Yang, DX, Rivian calls, MSTR calls, ETH call, Trimble, TRMB, NVIDIA 270, EUFN puts, Neo calls, XOM puts, holding EBS and riding out the bizarre Baba straddle. I'm short at 4041, FRC calls, Blink calls, 23andMe long unchanged, short tech soon, note, work calls, shares, 23andMe, you say it every day. I feel like that's so weird. Natural gas calls, random plays, Lulu puts, morning to Ari, MPW play is up, HYG, Dish, CLF, Micron calls, Oxy puts, Intel, and short more Intel on a pop, ladies and gentlemen. Wow. I like it. You know what I noticed about today? It's a little less straightforward. That's what I've noticed about today. Yeah, you know, usually it's like bull, bear. I feel like everybody's kind of 50-50 today, no? I feel like we got a little bit of a 50-50 environment. So I got a couple of plays. I'm going to be watching Lulu and Micron post earnings. Both of them made big moves, even AMD as a sympathy. Then Baba and Baidu. Again, Baba's not up as much, but even in Hong Kong, Japan, China, all of the other names started going up. So there was a very big and broad China rally after the Baba news yesterday. Then EBS, they did get the drug approval for the prescription or the over-the-counter Narcan. Then McDonald's and HD, again, defensives and some of the industrials. I just want to keep an eye on them. I think they've been pretty interesting. Then Square, remember we had that play. I might want to double dip, but keeping my eyes on that. And then Amazon as well, too. They were kind of leading some moves yesterday. So we will see what happens. And hold on, why is my AC is on? It's cold in here, bro. Bap. So yeah, that's what we got. We got how much time? Oh, we got like 1 more minute. Yeah, Fed bar. We're gonna do the same thing as yesterday, but it's gonna be ahead of the. I think this time in front of the Senate. or the House. It's one or the other. It is one or the other, my friend. It is one or the other. Target price on EBS, I don't know. I'm surprised it's even up like this. I mean, the good part is that it's dropped like 50% in the last couple of days, but I have no idea how far this thing could go. So we will see what happens with Chattadonia. Ladies and gentlemen, boys and girls, you know how we get down here. It's very simple. Before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to the people who have sacrificed more than most of us ever have and ever will, and that is the veterans of the United States of America, ladies and gentlemen. So on behalf of the cult, people here, people not here, I want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country. For real, God bless you. Thank you for your service. Even shout out to all the families. We love and appreciate you, and I encourage all of you to do the same for all of your veterans, because they have given us a very, very priceless sacrifice. So thank you, and shout out to anybody else out there giving back to their local community, all the doctors, nurses, teachers, firefighters, police officers, garbage men, trash people, people volunteering with the nonprofits, people helping out the old lady. You know what I'm saying, man? God bless you, and I hope you know you are appreciated as well, too. And God bless Chattadonia. Ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Senator Jets! Oh, it's game time, baby. Or nah, let's go. Oh, good morning. Good morning. Wake up. Wake up. Oh, it's game time, Chattadonia. It's Wednesday. Wednesday. 2 more days of March in the quarter. How you feel? Tell me how you feel. Amazon. Oh, 1.3. Yeah, a lot of tech is up 1% right now. And again, the tech stocks or the chip stocks, they should be benefiting a little bit there off of Micron. I don't know why, though. I hated Micron's earnings. I hated it. Micron results reinforce bull case for tech. That's the latest headline. So we will see. We got about a minute and a half here till the bell now. Chad, post any plays. Call out any news, source that info. You got any questions? Don't be too shy to say hi or too high to say shy. And let's go, man. Let's go. We're going to have an interesting one. Again, it seems like the big driver here today is simply it's not as much banks as it is positive news from China and things kind of chilling out. But like I said in the morning, I would just be looking to see if we could get above the levels from Powell. So that's really going to be your level here. Wait, where's pre-market? So you're going to be like right here. So I'd pretty much watch 401, 402 on the SPY, and we'll see where that is on the SPX. But SPY is running into the cash open. Let's see what happens. Got 45 seconds, 45 seconds, 45. Don't be shy. You'll be good, man. Let's go on hump day. Ba-da-ba-ba-bop. 402. You get above Powell, people will be excited. Because remember, day after Powell, market, after that big drop, we started running back up, and people are like, oh, we digested Powell positively. So that is probably what is going to happen if you do get around or above that same level. So we will see what happens, ladies and gentlemen. But get ready, 10 seconds. Woo! Ooh, bob up. Let me get Micron and Lulu. Those will be both interesting. Micron's unreal. Round 1. Fight. All right, EBS. Okay, we'll keep that one. I'm going to put that on a different screen. We'll see what EBS. I'm going to watch to see if pretty much I think it needs to get above 11. And then Tesla's up 2%. So they're already running up here. Boyle at lows. SPY is opening up 0.94. Dow Jones up 0.75%. And the NASDAQ is up 1.1 right now to start off. So very, very big open. Let's see how long this one lasts for. Again, Micron's up 3. Lulu's a good earnings, but it's just up so much already. Everything is in the green right now. The worst on the day is healthcare, staples, and energy, and they're all up about 0.5%. So Lululemon jumps 15% at open. That is the most since March 2020. Not bad. Not bad. Oh, yeah, they back up to very, very big level. So we'll see. If that sells off a little bit, maybe we go for the post earnings. Otherwise, I'm not going to chase that one. Looks good, though. And then bonds are dropping, or they dropped here to open up. Again, still holding 1%. Let's see our levels. SPX 4010. Jeez. So again, last time we were here, I guess it was a couple of days ago on Wednesday. So it's not too bad, but 4010, 416. I do have other levels. Pretty much 4017, 4037, 4039, 4052 to the upside. And NVIDIA is still moving. Qualcomm. Was there big news? Just China. It was just kind of a carryover for China. And then once again, I mean, less bad news for the banks. And we are going to get that Senate testimony and real estate data here in about 30 minutes. EBS. EPS is the, I don't know, what's the other one? EPR? That's the equity property one. But EBS, they did get the approval. Grab 25 Tesla, MPW. Oh, wait, they're up 5%? Okay, so that could be off the mortgage data again. Mortgages came out here today, so real estate could do good on that. There's a big drop in the rates. What's up with Boyle? Intel over 30. Grab Tesla, TQQ. I put TWW. I don't know if that's trading properly or not. Hard to say. It looks like it kind of is. AMD. Amazonian is up 2% right now. Where's Meta, Netflix, Google? Meta's up 1.4, Netflix up 1.4. VRTX is on the high. Apple's running. We're going to hold EBS probably for a little bit. I mean, it's already 20%. That's a big run up, but we'll give it a little bit of time. Tesla pop. Yeah, Tesla's leading here. I think they're up the most. Tesla and Amazon. And then where's young NVIDIA? NVIDIA is up 2% too. Micron's still going 55%. $62. My goodness. Even Qualcomm's getting a bid, 2% up there. Lulu's still holding 13. MU's actually discussed dude, that's so one article says it was better than expected, and then another article that's getting circulated is pretty much saying it wasn't as bad as feared. So it's quite the interesting earnings there. It took you 2 minutes to sell EBS at market? Really? Now you make me want to test it out. MU got 4 upgrades, scammers. Nike's on the low. So watch out if any staples go down. I mean, they're up. Dow Jones is up, but it's not up as much as tech or anything else. Coin 66. Coin is up 4. I think all of the crypto plays, even Ethereum went above 1,800. Snap is dumping. I don't know. It was leading the last couple of days, so that is interesting. Square's on the high. 65. I think this is where we sold out, no? We sold out a little bit lower here, but Square's running. Again, everything tech-related is doing good. JP Morgan giving up overnight big gains. I haven't even seen XLF. XLF's still up almost 1%. But watch if those banks do go negative. Today's fake run-up is from China. So remember, BABA went up 15% yesterday. And then on the Chinese session, they all just did very, very good. Coin is running 66. What was that other one? 3M. EBS is dropping now. So they gave up 10% from their highs. Biotech opening sell-off. Bob is down. Yeah, all the China names are down. I'm thinking Some of them might go up because in the China session or the Hong Kong, they did very good. No, I sold out of SQ yesterday. Can we get a QQQ for your boy? I got you, man. The Q's up 1.4. Again, even right now, even with the levels and where we're at, let's see how this plays out. I mean, right now you're holding 40.10. Your gap up is at least 30 points, 40.17. That will be our next big level. Then we'll see Jefferies is on the high. They had bad earnings, and they're doing better than JP Morgan. Jefferies is going up. NVIDIA is moving there. Tesla again. Tesla's up 2.8 now. There's Boeing up 0.8. Coinbase still up 4%. Amazon is killing it. 2.6. And then Tesla one more time. Watch Jefferies. That one's quite fascinating. Chips are still at the high. Every single one of them. I guess AMD. AMD's not doing as good, which I think is interesting. Yeah, MPW, they're pretty good today. They're giving it. They're not like running up into it, but not bad to start. Zoom green. Tesla 3% now. Tesla's outpacing Amazon. EPR still got EBS. SES confirms that they're in talks on possible combination with Intellisat. INTEQ. Intech? That's what it says the ticker is. Oh, reorganized. Why is the dollar rocketing now? As long as the banks aren't collapsing, that will help the dollar. That's the instance where the dollar gets helped. But it's hard to say. Again, you know, like I've been telling you for the last 3 days, I be careful trying to explain everything. You know, just get ready for a wild ride of uncertainty as we go back and forth. I mean, right now, just today would partly be boiled down to you didn't get any bad news. China had a rally. People are feeling optimistic about overseas markets. And then, again, you just have not had a bad set of news for banks in now about 3 days, depending on how you want to interpret it. FRC is going straight up. Speaking of which, again, there's Wall and Pac W. I think they're all up. A decent amount, though. That could all change, though. We'll find out. Snap, XLF trying to bounce off the bottom. Healthcare is the worst on the day, but it's still green at 0.3. Lulu. Bluebird is resumed trading. They delayed their sickle cell drug. Damn, they're down 20% already. ENVX. They had that Malaysian thing Jay Alt said. Micron, WDC on the high. And then Jefferies, again, that was a bank earnings. Schwab nosedive. Yeah, Schwab is down. Bank of America is also down. Yeah, bro, Micron is going insane. ENVX, 2 big candles here at the high. VIP Shop raised to outperform at Daiwa. Price target 1730. Intel above 30 again. 3M's coming down, but they're up 0.5%. J&J. Again, everything's green. I don't even, let me see the breakdown of today. You have only 34 names down on the S&P. So 468 names in the green, only 38 names in the red. Let's check young NASDAQ. NASDAQ, 2,000 names in the green, 629 names in the red, 900 names break even. Not bad. Not bad. Let's see. Save McDonald's is holding up. HD is still holding up. Please display Dow Jones. In a second. It's up 0.7 right now. 282.75. All right, I grab, excuse me, I grabbed 50 shares of HD, going for defensives and industrials, even though tech is the one rallying today. HD, yeah. HD, we could build your portfolio. You could build your portfolio. We could help. That'd be a good slogan, sir. That'd be a good slogan. Quite interested. Quite interested. Micron is still ripping. My goodness. Google tweaking. Even ACAM's up. I think we're only down like $1 a share on that one now. Square new high. Oh, yeah, 65. They're up 3 now. Google fake wick. I don't see the wick you're talking about, so probably. Market surprisingly hasn't even moved that crazy. So you got a couple of red candles here. We're just like holding. It's crazy for a 30-point move. Just look how like small this is. Right now, we really haven't done much. Very interesting open. HD. I'm not buying HD for the long term. That's just like a mini swing trade. Again, with everything, like the last couple of days, we saw a little bid come back to defensives, and then even industrials are moving. And then like looking at it, at least HD is more at a discount than not. Yeah, I closed the Micron short yesterday. Very easy, like very quickly. I took a $100 loss. I just right when I realized the earnings were bad and it wasn't coming down, I said, "Fuck that! I'm not trying to wait." Micron was wild. Micron was wild. Oh, there was something else. Google. Amazon, Fit2. Boeing's on the high. Com running. EBS. Yeah, they gave up 15% from the open. Very disappointing on that, but we'll see if it does one of those stupid biotech moves. Coinbase breaking out. Micron is still at the high. SPY's getting a big candle now. That's a very big candle. Let's see. Cargill will stop elevating Russian grain for export in July. We had that in the morning. A big pop right there. For what it is. Again, you haven't moved much, and then 3.5 points in 1 minute. Dollar big red. FRC. I think all the banks are up except for like Schwab, then Bank of America and all those, and JP Morgan. They're still green, but they sold off from the open. So again, 40.17. That is going to be our next level here. Lulu's still up. All the earnings plays are still doing good. Apple. Oh, there's something else I wanted to see. Dude, Micron. Unreal. Right? All crypto. A lot of, even Coinbase isn't even doing the best out of all of them, but it's up 6% now. But like even Riot, Mara, some of them were up like 10%. Yeah, ABS is probably going to go negative here. They could do that in 10 seconds. Google's on the low. That one's an interesting one. Yeah, Google is starting to sell here. So that's their first tech stock kind of giving up some of this. HD or Apple is still up 1%. FRC, yeah, FRC is 7% right now. That is a very, very big run. It hasn't had a day of just straight green on the open in a long time. The Qs are down 4%. Microsoft starting to work its way up. They're up 1.5, right below 280. Redfin 4.5. MPW back to 8. Why does that seem very? That sounds big. I think we're in like what 850. Well, not bad. Oh, whoa! Switch gears. So big candle, 3.5, 4 points up, and now you just took a 5-point candle down. And again, Google is starting to dump right here. And then HD still going, or excuse Micron. Bro, that was wicked. So you just spent like 10 minutes not doing anything, 3.5, 4 points up, and then 5 points down on that candle right there. So that's cool. At least you're getting some bigger morning moves. I would hate for it to do nothing. Again, Google is dumping now. Google is about to go red. They're up a quarter. Meta's giving up some too. Netflix still holding. Well, yeah, all big tech is taking that. And then bonds are trying to climb, but they've barely moved today. Range has been very, very tight. Healthcare, I don't know. Healthcare has been weird all year. Again, even before this week, it was on like 9 weeks of decline. But I think it has to do with everything from both interest rates in the economy all the way down to now the banking stuff. And then, where people are viewing, a real safe haven, more or less. Snap rumor, Evan Spiegel may give up CEO position via Oracle on Twitter. That could be interesting. Snap, but what happens to all his monies? FRC 1475, they're running. That's up 9% now. Yeah, EBS now down 1%, or up 1%. HD, ASML's running now. Again, chips are just loving today. Bonds taking a bounce, or taking a new high, but the market's bouncing with it. So again, little bit of back and forth here in the last 4 or 5 minutes. Nvidia's working its way up. Meta. Again, Google was just the one that just started tweaking out. You're right back up. So you're moving. Bob, a little green shoot. SPY, new high of the day. So get ready. We are approaching our first level of the day, 4017. You haven't been here in a little bit. Been here in a couple. Actually, last time you were here was Powell. So if you could get above 4017, you'll be good. But now you are trading almost 10 points higher than the highs of the day after Powell. So this could get interesting, my friends. Google trying to bounce a little bit from the low. ACAM, where's WWE? Yeah, Baba's still red, but if that does start to work up, I don't want Baidu, but I still think Baidu's kind of expensive. NQ running in ENVX. That's pop number 2 at another high, up 12% now. At the KSS Divi. Where's the other real? I think all real estate stocks are doing good. Nvidia's on the high now. So they weren't leading the same way. Even AMD, they were lagging. At first, it was just Micron. But Micron's still up. Micron's up 7%. That's unreal. I'm very glad I closed that short, but holy shit. Coin on the high, AMD, 4015.60. I feel like we'd be moving a little faster, but still haven't hit it yet. 4016. All right, one more point. So watch 4017 leading into 4037. So if you get above here, it's like a 20-point range. And then NASDAQ is up 1.5. SPY 1.1. Dow Jones 0.78. And then bonds, I don't know if that candle is real. Dollar has dropped again. Another one of these stupid candles. That's what I'm saying, man, Chad. Just be careful again and just see how this plays out. But the range is very tight, and every single new high has been met with a instant Clifford. Yeah, the snap rumor. So I could see. I don't see it coming up anywhere. I know it's going on Twitter, but that's about it. Baba's on the high now. Whoa, what was that? AVAH? Ava up 5%. PayX. Gordon Haskett rumor. Take it with a grain of salt. Oh, that's for Snap? Yeah. We'll see. Is this the end of the quarter? Well, no. This is the beginning of it. I mean, a lot of it. I mean, people will make moves today, but realistically, I mean, tomorrow, Thursday, give it 2 days, and then Friday. But this could be some of the start. But that is just get ready for some weirder moves towards the end of the month. And it has been a very historic quarter already. So we will see again that Clifford met with 2 green candles. You're doing a very interesting dance over here. So let's just see what happens when we get to 4017. Bookmap doesn't even show really any crazy orders here. HD's coming down. McDonald's moving up. Boeing trying to move up here as well. They're still up 1%. Good morning, boss. What's up, Najee Wolf? How you living, man? Beautiful day, beautiful day. Baba's going green. So they were red about like 1.5 earlier today. Baba. Okay, another move up. Pay X on the high. I think they had some news in the morning. They're going up. Beautiful day, baby. Hey, man, bonds are dropping. So it's weird because we were climbing up with the bonds going up. You would assume TLT, IEF going up won't be good for the market. So down would be better. Well, we'll see. You're still holding up again. Solid 1%. Only been, it's been less than 30 minutes too. And actually, how's the volume looking like? 10 million in 30 minutes. No, not bad. Seems a little bit more active than the last 2 days of the week. CRM on the high. And then watch Alibaba. Yeah, CRM's holding 194. Hood. Micron's finally chilling out. But then it looks like AMD and NVIDIA took the reins. Pins 1% down. And then Snap's chilling down. Microsoft's moving up now. Meta's still in the green. Again, Google was, they were tweaking out a little bit earlier. They still haven't bounced. EBS still hasn't gone negative, but it sold off the early gains. Tesla's up 2.6, so, and then SPY hitting a level, or just under the level. We will see what happens. Intel, what a open. A very big open, but, I mean, the bigger point was just even pre-market. Even the futures, it was just China. China was so good. Even your futures, when they opened up, you were, that's it. You were already gapped up. So, like, our intraday moves are smaller, but there's a lot of carryover from China, Hong Kong, Japan right now. Yes, at opening price. Humana, again, is healthcare selling off again? Healthcare is still the worst on the day than consumer staples, but everything's still green. Intel, Fire, yeah, 3%. And then Micron at 7%, which is absolutely wicked. Square at the high. Apple. So Tesla's finally giving up. Watch Amazon too. They were another big leader. Is the Fed balance sheet coming out today? It might actually. Soma Logic sets record low as outlook disappoints. HTLF on the high. Heartland Financial. And you went right below the level, then did another red candle. Not as big as the other ones. At least this was 2 red candles. FedEx on the high. And HD pretty much right where I got it. UPS. These moves are insane. It's a lot of whipsawing to go nowhere, which is quite, and then like just considering how much we moved pre-market, I mean, you're not doing anything right now. Quite fascinating. What was it? Note. Oh, they were on that. Said they were higher on the high ticker. End of quarter pop. Zim is on the high. PayX, man, I keep seeing this thing. Yeah, they're up 4.7 now. I forgot. I think their news was off of good earnings. They have an earnings run up. And then Micron's finally giving some back, but still up 6%. I'm still holding EBS. I think you've asked that like 7 times now. Sir, we are still in it. Still waiting. I had 20%, did nothing with it. Apple coming down, red candle. Tesla. Amazonian. Am I going to hold MPW for the entire year? Yeah. I plan to hold MPW forever unless they cut their dividend or they lower the dividend. That might change some things, but that's a long-term play. So I do plan on holding MPW in the long term for a while. Let's see, $8 will be good, but it's kind of weird because not all the other real estate stocks. I mean, real estate's number one on the day, but it's not like all of them. What's the other one? SBX. What's Simon Properties ticker? Simon SPG. Yeah, they're up 1.7. It's weird. They're not all up, but some REITs are doing a lot better than not. Actually, real estate's number one on the day. Real estate's doing better than tech. So based on that, you could even assume that some of today is based off of the bank fears calming down. Because remember, I mean, REITs got hit on any concerns with banks slipping and rates and all that. Sell MPW calls unless the premium's like really high. So I haven't looked at it, but and then I think we have like 500 shares. I think you wait until it actually like bounces. So like MPW is still down a lot. I think it's too early to sell covered calls. You could sell some yearly ones out, but the payment's not that much. I would rather wait till it's like actually like bouncing, kind of like even Redfin. Like, you know, wait, if it goes up 10, 20%, then maybe. But, I mean, we need to still get back up to here. You get around these prices, I mean, I think you'll be good. If it goes up 10, 20%, then sell a covered call. But as of now, I don't like the premiums for covered calls yet. Speaking of which, where's Air? Whoa, is that real? I don't think so. Roku's on the high. 3M is dropping. Another day of Bill. Dude, Bill is like, this is the highest yield it's been. Shout out to rate hikes. Home sales in 2 minutes. Yes, and the Fed testimony. So we're going to get to hear part 2 of that today. I think it might even be getting ready to start. McDonald's pop in. Yeah, pending home sales are expected to come in at -3. Last time was 8.1% gain. And again, mortgage applications are on like 6 weeks of increases with rates at a 6-week low. The testimony could affect the market, but I mean, yesterday was kind of a non-event. I mean, some people just took it as more regulation, no announcements of stimulus. So, but then again, I mean, you see it here. No other bad news today with banks. There's a little bit or a lot of bit of relief, more or less, coming off of that. HD and the bonds are coming back down. So I think if bonds go lower, we make another move up, that might be able to help it out. And yeah, pending home sales came in positive 0.8 versus estimate of -3. And then home sales year over year, though, are down 21% year over year. So they month over month was good, but that was still even a bounce, though. People were expecting a lot lower of a number. And I was like, what's that noise? That is the Congressional meeting. They're getting ready for this. This one looks way more packed. This one's interesting, actually. Where is this? Yeah, this one looks to have way more people. A lot of chatter. I feel so weird just listening to their conversations. All right, AX Markey, hola. Hola, and good morning. And then again, Baba was just at the high. Bonds are catching volume. See if Amazon takes off again. That was the leader in the morning. And then if Google pops, I think the market will get a little bit of relief there too. EQT said to delay $3 billion IPO amid volatile markets. PE, is that PE or Pfizer? I think they're on the high. Pfizer kind of moving up. Again, healthcare is not doing good. Where's oil? I think you're going to get oil numbers here later today, too. VKTX. They've been killing it the last 3 days. New high on the SPY, or about to. So 40.15 still. It's been only 32 minutes, though. Again, most of the gains here are pre-market. VKTX breaking out now, up 5%. Apple on the high. Is it? Yeah, Apple's starting to break out now, 160. Microsoft's even moving up now, 280. All of these are big levels for all of these names individually. Thanks for making my forward calls move up. I'm glad, man. I'm glad. Glad I could help. EBS still up, but near the lows. Where's Mr. Micron? Qualcomm. And get ready. Watch the regionals. We'll see how any of this stuff plays out. Bro, it's a party there. You guys hear it? Like, why are they partying in there? So I was saying, this seems way more active than yesterday. Yesterday's testimony seems so much more, like, you know what I'm saying? It seems so much more chiller. This is like this is a party. They got better microphones. Tesla's catching a couple of red candles. It sounds so sound and resilient there. I agree, it does. It really does. Microsoft 1.8, they're hitting a high. There it is now. That's finally a new high. See if it gets met with actually, no, it's not a new high. It looked like it. There it is. There it is. 406, 40.16.24. Again, we have yet to hit 40.17. Roblo coverage dropped by Williams and O'Neill. They've dropped coverage on Roblox. That's usually bad news, or they just don't want to cover it anymore. And Futu's on the high. Watch any of the other China names if they bounce. But then God bless you, Elizabeth, and good morning. So let's see. We're going to listen to this, but we'll find out. China deploys their corruption hunters abroad. What kind of headline is this? Wall Street Journal article. So 40.17.17, you hit the level. So just watch now. If we can't break above here, that won't be good. I mean, with today, though, I wouldn't be surprised if we break above it, maybe dance. But overall, if you can't hold this level, that might not – that we could give up everything, borderline. I don't know about going red, but you could do one of those dances there. And last time we didn't even get close to 40.17 and sold off. Otherwise, you get above there. 40.34 is next. Tesla's starting to dump a little harder. Everyone's getting quiet in the congressional meeting. Futu again. Wasn't Futu down 9% yesterday off of the Baba News? NVIDIA is selling here too. Yeah, pending home sales was good, but, I mean, it's even the year-over-year number, at least that declined. But when it's all said and done, if banking fears dissipate, that real estate data does not support the inflationary side of everything. Yeah, Tesla's starting to dump a little bit harder there. Again, so hit the level 40.17. Sadly, you've done this 3 times. So, like, usually if you hit the level and sell off violently, that's not a good sign. But
without objection, the chair is auzed to declare
you've done this a couple of times.
The hearing is entitled "The Federal Regulators' Response to Recent Bank Failures." And without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion for the record. I now recognize myself for 4 minutes to give an opening statement. Today, let's put aside the pre-baked narratives that have dominated the political discourse. We're here because the American people deserve answers. Before we draw conclusions on regulation or changes to law, we need to establish the related facts.
JD's moving now.
In the run-up to its failure, Silicon Valley Bank experienced rapid
BMEA,
growth.
that thing dropped and then popped again. They went up 50% yesterday. This is the diabetes
investments
drug.
Made risky by a high inflation environment. We know the bank was mismanaged. That much is clear. Now we need insight into the decisions and decision-making process of financial regulators related to the second
boxes
and
up
third
2.1.
largest U.S. bank failures.
Tesla bouncing off the low, still up 2%.
We need insight into those key days in March when an idiosyncratic bank became a systemic risk.
Google could flush here,
spawning a large-scale financial intervention
be first big tech.
that's still ongoing.
And Bob is breaking out more.
Vice Chair for Supervision Barr, you've been on the job for less than a year. You came to the job well qualified. However,
now you suck.
You made time to start a review of climate risks in banking and a review of capital standards for larger banks, with no mention of changes to bank supervision or liquidity provisions. 2 matters at issue.
Still up 1%, but it is at the lows.
In fact, I've never heard you say
off of the cliff
to Congress that you didn't have the tools to do your job. In fairness, though, neither Dodd-Frank nor that technical corrections law, S-2155, dealt with issues presented in March. A digital bank run, the speed and volume of which had never been seen before. This committee would like to understand your thinking in the key hours of that first week in March, where your decisions had a mighty impact. Was there adequate planning for a large-scale bank run? Did the chief supervisor follow the playbook to ensure the bank did not fail? How did the chief supervisor and examiners miss the hole in the bank's balance sheet? These are related questions. Additionally, the committee has no insight into the decision-making or the actions of the FDIC chair on Friday the 10th through Sunday of that week when that systemic risk exception was announced. Again, did the FDIC chair use all the tools at his disposal to resolve the banks that weekend? Was there a viable private sector solution? There are reports that multiple banks were interested and ran the traps internally to purchase Silicon Valley Bank that weekend. You confirmed as much yesterday, Chairman Gruenberg. But as we all know, Silicon Valley Bank was not purchased until late Sunday, March 26th, at an estimated $20 billion in losses to the Deposit Insurance Fund. Why wasn't a potential buyer accepted sooner? Was there an ideological lens that prevented the FDIC from pursuing a private sector solution that could have staved off the uncertainty of the last 2
watch,
weeks?
If you don't bounce up immediately,
we know on Sunday, March 12th, another bank is shuttered and placed into FDIC receivership. And together, this is deemed a systemic risk event. That evening, the Financial Stability Oversight Council meets in executive session. No meeting minutes, no transparency for the public, just an announcement after the fact. That lack of transparency has a negative effect on the public view of the safety of the financial arena. Congress needs visibility into how and why this determination was made by the FDIC, the Fed, the Treasury Secretary, the FSOC Chair, and the President. I'll finish with this. We need competent financial supervisors, but Congress can't legislate competence. Today, this committee wants to understand your thinking in those key moments and that decision-making in a moment of stress in our banking system. Thank you for being here and your willingness to give answers to our questions. At least that's the hope. With that, I now recognize the ranking member for 4 minutes.
Oh, my gosh. The ranking member could wait because ranking member Bradley Frizzle.
For
Maxine.
In a bipartisan way.
Shout out to
SBF.
Investigating the failures she got like a $40 million house, but Bradley Frizzle and the Peach, ladies and gentlemen. Are you kidding me, Peach Nation? Get your ass up. Or nah. Oh, ranking member Peach, let's go. That's a great way to start this off. It's a great way. Why does the FDIC guy, he looked like Fauci today?
Customers withdrew a staggering $42 billion in less than a day, making it the largest bank run ever, threatening to snowball into a full-blown banking crisis. But 2023 is not 2008 because of the Dodd-Frank reforms Democrats on this committee passed, as well as the bold and swift response by President Biden.
Yeah, he looked like
Secretary Yellen and our banking regulators.
FDIC guy.
A crisis was averted and our banking system remains strong.
Fauci up to answer
However,
the
these events are a wake-up call. We must uncover how management, regulatory, and supervisory failures contributed to these events and explore solutions to strengthen the safety and soundness of our banks. Small business owners should not be expected to serve as a financial regulator when paying their employees, and community banks and minority depository institutions should not have to pay for the failures of bank mismanagement at SVB or Signature Bank. Since day one, SVB's collapse, committee Democrats have been on the case. In fact, under my leadership as ranking member, we quickly organized several bipartisan briefings with our nation's regulators to better understand what happened, share what we were hearing from constituents, and urge regulators to act. Since then, we've sent letters demanding answers from our regulators. And in response to Biden's call to Congress, I and my colleagues are working on legislation to, for example, enhance clawbacks and
let's
other
see if we
penalties.
hit a new low on
we
the day.
also need answers
KRE
from the
has sold
CEOs
off half of the gains
who not
since
only
it
ran
started.
these banks into the ground, but enriched themselves. It is also important to know how we got here. Deregulation. Former and disgraced President Trump said he'd do and I'll quote, a big number on Dodd-Frank, and his appointed regulators did just that. At that time, I sounded the alarm on the dangers of weakening capital and liquidity rules for banks like SVB. The light touch
This is the velocity of the high ticker.
From
30
the Fed
second, 1
to
minute, 5
SVB
minute.
management are clearly not what Congress intended for bank supervision. I hope Republicans will join Democrats in strengthening compliance with bank rules and transparency over this process. Before I close, I want to address the extreme mega
I think healthcare
Republican
and staples are
narrative
giving
about
up,
the bank failures.
and then real
Let me
estate a little
be very,
bit.
very clear. Silicon Valley Bank collapsed because of management
little bit of
failures
activity,
and
new low
possible
on the day,
regulatory weaknesses,
but you're still up
not
over 1%.
because there was one black man on the board. We saw the same racist playbook during the 2008 financial crisis when some Republicans blamed the Community Reinvestment Act and loans made to people of color. Rest assured, Democrats will not stand for this blatant racism. With that, Mr. Chair, I yield back the balance of my time.
We'll now recognize the Vice Chair of the full committee, Mr. Hill, for 1 minute.
Thank you, Mr. Chairman. Today we're confronted with the results after 10 years of too loose monetary policy and recent wildly excessive spending. Some bank management teams have forgotten their prudential obligations
Microsoft,
to their depositors and their shareholders.
So Apple started to give
And
up
clearly,
some.
many customers forgot their own
There's a lot of
prudence and
push
their
and pull
own
today.
financial responsibility. But as our committee comes together, the chair, the ranking member, and members are concerned about the supervisory failures by the regulators who are supposed to keep a watchful eye. Some lawmakers have been quick to use this crisis to put politics to push their preferred policy outcomes. But that's premature. We need to first understand what happened, when, and why, both leading up to the bank failures as well as the decisions made by your agencies represented in our panel today in response. Only then can we decide the proper path forward. That's why Republicans are conducting a comprehensive review, starting with oversight letters to the Federal Reserve, the San Francisco Fed, the FDIC, the FSOC, the California and New York state regulators. We expect your full cooperation in this matter, and make no mistake, today's hearing is just a first step in that process. I thank the chair for the hearing, and I yield back.
The chair now recognizes the ranking member of the Subcommittee on Financial Institutions and Monetary Policy, Mr. Foster, for 1 minute.
Thank you, Chair McHenry and Ranking Member Waters, for convening at this crucial time, and thank to our esteemed witnesses for being here today. I remain proud of what we did almost 13 years ago with the Dodd-Frank Act. Although COVID presented novel and considerable challenges to our banking system, the system held. And these recent events represent the first real stress event since the 2008 crisis, when banks dealt with run risk and serious liquidity concerns.
This is day 2.
What we've learned is that we now have to reinforce our banking system against bank runs that can occur at the speed of the internet. This will require stronger emergency liquidity provision to banks under attack, and it has to be available 24 hours a day, 7 days a week. This will then require liquidity providers to have a clear and simple means of knowing that they are loaning to an entity which will ultimately remain solvent. I also believe that we have a lot to learn by the two side-by-side bank failures, Silicon Valley Bank with total assets less than 1% of GDP, and Credit Suisse with total assets greater than 100% of Swiss GDP. And the difference, I believe, is contingent capital. Had we followed Congress's direction to include contingent capital into the stacks of U.S. large banks, we would have been able to resolve the SVB without hitting
Microsoft's still running above 280. Snow's on the high by due. Watch if
China. Today we'll hear testimony from the Honorable Michael S. Barr, Vice Chair of Supervision of the Federal Reserve Board of Governors, the Honorable Martin J. Grunberg, Chairman of the Board of Directors of the Federal Deposit Insurance Corporation, and the Honorable Nellie Lang, of Undersecretary for Domestic Finance of the U.S. Department of Treasury.
Oil could lift up this.
We thank each of you for your time, and we're going to be recognized for 5 minutes for an oral presentation of your written testimony. We'll begin with you, Mr. Barr.
Chairman McHenry, Ranking Member Waters, and other members of the committee, thank you for the opportunity to testify today on the Federal Reserve's supervisory and regulatory oversight of Silicon Valley Bank. Our banking system is sound and resilient, with strong capital and liquidity. The Federal Reserve, working with the Treasury Department and FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that we are committed to ensuring that all deposits are safe. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools for any size institution as necessary.
If the gentleman will dispense for a second. Mr. Foster, you'll turn off your mic. Thank you. We'll let you continue.
That was like a Zoom issue in real life.
Shall I proceed?
Oh, all right. Go ahead. If everybody will check your mics and make sure you're off. Did you just do that to Mr. Torres? All right.
Baba again.
See, we can even have a sense of humor in the midst of serious stuff. We'll let you continue. Thank you, Vice Chair Barr.
Thank you, Mr. Chair. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools for any size institution as needed to keep the system safe and sound. At the same time, the events of the last few weeks raise questions about what more can be done and should be done so that isolated banking problems do not undermine confidence in healthy banks and threaten the stability of the banking system as a whole.
They keep going.
At the forefront of my mind is the importance of maintaining the strength and diversity of banks of all sizes that serve communities across the country. SVB failed because the bank's management did not effectively manage its interest rate and liquidity risk, and the bank then suffered a devastating and unexpected run by its uninsured depositors in a period of less than 24 hours. Immediately following SVB's failure, Chair Powell and I agreed that I should oversee a review of the circumstances leading up to SVB's failure. In this review, we are looking at SVB's growth and management, our own supervisory engagement with the bank, and the regulatory requirements that applied to the bank. The picture that has emerged thus far shows SVB had inadequate risk management and internal controls that struggled to keep pace with the growth of the bank. Supervisors began delivering supervisory warnings near the end of 2021. Our review will consider whether these supervisory warnings were sufficient and whether supervisors had sufficient tools to escalate them.
Tesla's flushing.
We are also focusing on whether the Federal Reserve's supervision was appropriate for the rapid growth and vulnerabilities of the bank. While the Federal Reserve framework focuses on size thresholds, size is not always a good proxy for risk, particularly when a bank has a non-traditional business model. Turning to regulation, we are evaluating whether application of more stringent standards would have prompted the bank to better manage the risk that led to its failure. We are also assessing whether SVB would have had higher levels of capital and liquidity under higher standards, and whether such higher levels of capital and liquidity could have forestalled the bank's failure or provided further resilience to the bank. We need to move forward with our work to improve the resilience of the banking system, including the Basel III endgame reforms, a long-term debt requirement for large banks, and enhancements to stress testing with multiple scenarios so that it captures a wider range of risk and uncovers channels for
these
contagion,
are the regulations,
like those we saw in the recent series of events.
So this could affect banks.
We must also explore changes to our liquidity rules and other reforms to improve the resiliency of the financial system.
This has way more info than last time.
In addition, recent events have shown that we must evolve our understanding of banking in light of changing technologies and emerging risks.
High.
Part of the Federal Reserve's core mission is to promote the safety and soundness of the banks we supervise, as well as the stability of the financial system, to help ensure that the system supports a healthy economy for U.S. households, businesses, and communities.
Yeah,
deeply interrogating SVB's failure and probing its broader implications is critical to our responsibility for upholding that mission. Thank you, and I look forward to your questions.
We'll now recognize Chairman Gruenberg.
Thank you, Mr. Chairman. Chairman McHenry, Ranking Member Waters, and members of the committee, thank you very much for the opportunity to appear before you today to address the federal regulators' response
to
the recent bank failures. On March 10th, just over 2 weeks ago, Silicon Valley Bank, or SVB as it's known, with $209 billion in assets at year-end 2022, was closed by the California Department of Financial Protection and Innovation, which then appointed the FDIC as receiver. The failure of SVB following the March 8th announcement by Silvergate Bank that it would voluntarily liquidate signaled the possibility of a contagion effect on other banks. On Sunday, March 12th, just 2 days after the failure of SVB, another institution, Signature Bank of New York, with $110 billion in assets at year-end 2022, was closed by the New York State Department of Financial Services, which also appointed the FDIC as receiver.
He kind of looked like if Ray
Dalio
didn't get into
experiencing stress, serious concerns arose about a broader economic spillover.
All right, making another move down. Chips are selling off a little bit.
After careful analysis and deliberation, the boards of the FDIC and the Federal Reserve voted unanimously to recommend, and the Treasury Secretary, in consultation with the President, determined that the FDIC could use emergency systemic risk authorities under the Federal Deposit Insurance Act
Okay, Tesla's
to
giving
fully
up like
protect all
2.5%
depositors
already
in
now.
winding
3%.
down SVB.
I'd watch Microsoft. If Microsoft goes down, then this will be threatened.
Institutions
I think if Microsoft and
allowed
Apple hold,
to fail.
As long as oil doesn't come down,
lost their investment.
you should be good.
Unsecured creditors took losses. The boards and the most senior executives were removed. The FDIC has authority to investigate and hold accountable the directors and officers of the banks for the losses they caused to the banks and for any misconduct in the management of the banks, and the FDIC has already commenced those investigations.
It's like 12 points to the next level.
Any losses to the FDIC's deposit insurance fund as a result of uninsured deposit insurance coverage will be repaid by a special assessment on banks as required by law. The FDIC has now completed the sale of both bridge banks to acquiring institutions. My written testimony today describes the events leading up to the failures of SVB and Signature Bank and the facts and circumstances that prompted the decision to utilize the authority in the Federal Deposit Insurance Act to protect all depositors in those banks following those failures. It further describes the management and disposition of the bridge institutions that were established.
Tesla again on
it also discusses the FDIC's assessment of the current state of the U.S. financial system, which remains sound despite these events.
Woo.
And in addition, it shares some preliminary lessons learned as we look back on the immediate aftermath of this episode.
Whoa, Spectrum.
In that regard,
yeah. What's going on
the
with
FDIC will undertake a comprehensive review of the deposit insurance system
SPB
and will release a report by May 1.
It looks like it has news.
That will include policy options for consideration
I do not see
related to
anything
deposit
on the wire.
insurance coverage levels, excess deposit insurance, and the implications for risk-based pricing and deposit insurance fund adequacy. In addition, the FDIC's Chief Risk Officer will undertake a review of the FDIC supervision of Signature Bank and will also release a report by May 1. Further, the FDIC will issue in May a proposed rulemaking for the special assessment for public comment. The bank failures demonstrate the implications that banks with assets over $100 billion can have for financial stability. The prudential regulation of these institutions merits serious attention, particularly for capital, liquidity, and interest rate risk, and also the consideration of a long-term debt requirement to facilitate orderly resolution. Recent efforts to stabilize the banking system and stem potential contagion from these failures have ensured that depositors will continue to have access to their savings, that small businesses and other employers can continue to make payrolls, and that other banks, small, medium, and large, can continue to extend credit to borrowers and serve as a source of support. The FDIC continues to monitor developments and is prepared to use all of its authorities as needed.
Yeah, Apple took a cheap
The FDIC is committed to working cooperatively with our counterparts at the other federal regulators, as well as with policymakers in the Congress,
Very exciting,
to better
charismatic
understand
guy.
what brought these institutions to failure and what measures can be taken to prevent similar failures in the future. Mr. Chairman, that concludes my statement. I'd be glad to respond to questions.
Thank you. Undersecretary Lang.
Oh, yeah, Walmart is flipping right there. Good call on that.
Ranking Member Waters, members of the
sold off like
committee,
2%.
thank you for inviting me
Still
to
up, though, a
testify
lot.
today and for the opportunity to speak several times in recent weeks to share updates from Treasury regarding current events. The American economy relies on a healthy...
If you'd pull your mic closer or direct it towards you, thank you.
Speak up.
The American economy relies on a healthy and diverse banking system, one that includes large, small, and mid-sized banks, and provides for the financial needs of families, businesses, and local communities.
Nah, man, this is like a
Nearly
weird...
3 weeks ago,
This is like an effed
problems
up version
emerged
of
at
PBS.
2 banks with the potential for
You're
immediate
legitimately
and
watching
significant
C-SPAN right
impacts
now.
on the broader
fucked up,
banking system
but it's
and the
important.
economy. The situation demanded a swift response. In the days that followed, the federal government took decisive actions to strengthen public confidence in the U.S. banking system and to protect the American economy. On March 9th, depositors of Silicon Valley Bank withdrew $42 billion in deposits in a period of just a few hours. After concluding that significant deposit withdrawals would continue the next day, the California state regulator closed SVB and appointed the FDIC as receiver.
4007, that's a decent
2 days
support
later,
level.
the New York
Crude
financial
inventories
regulator
fell
closed
7 million
Signature
barrels.
Bank,
Oil
which
should
also
rip off
had
of that.
experienced a depositor run.
Barrels
and
fell way
appointed
more than
the
a million more than
FDIC as
expected, I'm
receiver.
pretty sure.
Treasury worked to assess the effects of these failures on the broader banking system,
Yeah, oil's
consulting
catching a move on
regularly
that.
with the Federal Reserve and FDIC. On Sunday evening, recognizing the urgency of reducing uncertainty for Monday morning, Treasury, the Federal Reserve, and the FDIC announced a number of actions to stem uninsured depositor runs and to prevent significant disruptions to households and businesses. First, the boards of the FDIC and the Federal Reserve recommended unanimously, and Secretary Yellen approved after consulting with the President, 2 actions that would enable the FDIC to complete its resolution of the 2 banks in a manner that fully protects all of their depositors. These actions ensured that businesses could continue to make payroll and that families could access their funds.
Get a bounce here.
Depositors were protected by the Deposit Insurance Fund.
And Apple.
Equity holders and bond holders of the banks were not covered. Second, the Federal Reserve created the Bank Term Funding Program, a new facility to provide term funding to all insured depository institutions eligible for primary credit at the discount window, based on their holdings of Treasury and agency debt securities. This program, along with the pre-existing discount window, has helped banks to meet depositor demands and bolstered liquidity in the banking system. This 2-pronged, targeted approach was necessary to reassure depositors at all banks and to protect the U.S. banking system and economy. These actions have helped to stabilize deposits throughout the country and provided depositors with confidence that their funds were safe. In addition to these actions, on March 16th, 11 banks deposited $30 billion into First Republic Bank. The actions of these large and mid-sized banks represent a vote of confidence in the banking system and demonstrate the importance of banks of all sizes working to keep our economy strong. Moreover, on March 20th, the deposits and certain assets of Signature Bridge Bank were acquired from the FDIC, and on March 26th, the deposits and certain assets of Silicon Valley Bridge Bank were acquired from the FDIC. We continue to closely monitor developments across the banking and financial system and coordinate with federal and state regulators. As Secretary Yellen has said, we have used important tools to act quickly to prevent contagion, and they are tools we would use again to ensure that American deposits are safe. Looking forward, while we do not yet have all the details about the failures of the 2 banks, we do know that the recent developments are very different from those of the global financial crisis. Back then, many financial institutions came under stress because they held low credit quality assets. This was not at all the catalyst for the recent events. Our financial system is significantly stronger than it was 15 years ago. This is in large part due to the post-crisis reforms for stronger capital and liquidity.
And because we're sounding
As you know, the Federal Reserve announced a review of the failure of SVB and the FDIC a review of Signature Bank. I fully support these reviews and look forward to learning more in order to inform any regulatory and supervisory responses.
She already said it.
We must ensure that our bank regulatory policies and supervision are appropriate for the risks, old and new, that banks face today. Thank you to the committee for its leadership on these important issues and for inviting me here to testify today. I look forward to your questions.
I recognize myself for 5 minutes for questions. Undersecretary Lang, when did you become aware of the severe financial distress of Silicon Valley Bank?
Target and Walmart are slipping now.
Date and time would be helpful.
Coming down a little bit.
We became aware.
When did you become aware?
I became aware of issues at Silicon Valley Bank on Wednesday or Thursday.
Wednesday or Thursday.
Whoa.
I would like to have a written response to when you became aware.
If
you can search
Wednesday,
your email,
that'd
be helpful.
Vice
Chair Barr, when did you become aware?
We didn't know till Thursday.
Thank you, Mr. Chair.
When did you become aware of SVB's financial distress?
Yeah.
I was going to answer that. Thursday morning, I received an email from staff indicating that Wednesday evening the bank had difficulty.
Thursday morning. When did you become aware, Vice Chairman?
He's like, what the
I believe it was Thursday evening. Staff came into a meeting I was at.
Thursday evening for Silicon Valley Bank. Okay. Along those lines, and you had a staff presentation in February that included Silicon Valley Bank, and the distress because of rising interest rates on their portfolio. What did you do between that February staff presentation to you and the week of March 6th about Silicon Valley Bank?
Staff presented on the interest rate risk.
Yes, that's what I said. That was a February presentation. What did you do as Vice Chair of Supervision between that time and the bank, the week of the bank failure?
Staff indicated that they were completing their review of the bank and of this broader horizontal review at that time, and I was waiting for the results of that review.
Were you aware of Silicon Valley Bank raising capital the week of March 6th?
I believe I became aware of that in this email that I described to you
on Thursday morning, that they had successfully raised the capital, but they're facing financial distress.
I was not aware Thursday morning that there were deposit outflows. I was trying to finish the answer to that question. I was aware of the difficulty Wednesday night in raising capital, but the bank was reporting to supervisors Thursday morning that deposits were stable.
When did you become aware of the deposit flows on Thursday?
Thursday afternoon, late afternoon, I became aware of deposit flows, and Thursday evening that there was essentially a bank run.
So Thursday afternoon, which could be mid-morning in California? Is that what you're suggesting?
I believe it was around noon in California, and for me, around 3 o'clock.
Okay. And did you make provision for the discount window or pledgeable assets at that time you heard of their distress?
My understanding from the staff is they were in discussions with the bank itself beginning Thursday afternoon to try and move pledgeable collateral over to the discount window. That work continued Thursday afternoon, Thursday evening, and actually overnight.
Did you make provision to keep the discount window open so they could provision collateral to avoid a bank collapse?
The discount window opening decision is sort of like a standard thing. It normally closes.
A standard thing, except in a moment of crisis.
Still up 1%.
It can be kept open. I think the Vice Chair for Supervision should be able to make that phone call. Did you provision for that? Or did you think you needed a provision for that?
Mr. Chairman, at the time, my understanding was that the difficulty wasn't sending funds. The difficulty was actually getting the collateral, evaluating the collateral, and getting it pledged to the discount window. And staff were working with Silicon Valley Bank basically all afternoon and evening and through the morning the next day to pledge as much collateral as humanly possible to the discount.
So on Friday morning, Vice Chair, Chair Grunberg, you were appointed receiver. When did you become aware that FDIC was going to have to take this measure or was going to receive this bank?
I think when we were informed Thursday evening.
I mean you. Were you informed Thursday?
I was informed Thursday evening by staff.
Which meant you had Friday morning conference calls to make a decision. Was that part of it?
I think we were.
You don't remember shit.
I think we knew Thursday evening that the bank was going to fail and that we needed to make provision to take over the institution.
Did you pick up the phone and call the Vice Chair of Supervision at the Fed and say, how can we provision to keep this institution open for a Friday?
I can't recall that.
Yeah, of course
my recollection is, Mr. Chairman, that the institution was experiencing a liquidity failure.
The guy who showed up to the group project late.
It was going to fail.
Making shit up.
It was going to fail on Friday open or Friday evening? Were you provisioning for this for the weekend decision?
No, I think the expectation and their experience was that the institution was going to be closed in the morning.
At what point did you open an auction for Silicon Valley Bank? On Friday?
I believe it was Sunday afternoon.
Sunday afternoon you opened for auction. So that weekend, what happened we only heard the announcement of Congress receiving this information at 11:20 on Friday morning. There was an idiosyncratic bank. And Sunday afternoon was the next pronouncement from any of you three on the panel, and it was a systemic risk designation. That's what shook the market for the last 2 weeks. That's the reason why we've had these extraordinary interventions in the financial system. And I want to know the key details of that weekend. I hope we can drill into those questions.
Sure.
With that, I'll recognize the ranking member for 5 minutes.
Thank you very much, Mr. Chairman. Chair Grunberg, we know that SVB banked nearly half of all U.S. venture-backed startups, potentially tens of thousands of companies, which clearly pose a concentration risk to the bank. While most of the bank's depositors were small and mid-sized businesses, they also had large customers too.
Apparently, this is
with
VWAP.
the top 10 accounts holding more than $13 billion in combined deposits.
Even XLF,
Chair Gruenberg.
Goldman's on the low.
And Vice Chair Barr. I'm concerned that depositors' decision to run or stay were not necessarily made on their own, but by the strong encouragement of their venture capital backers who sit on the boards and hold equity in their companies. Were a handful of large venture capital depositors able to influence the withdrawal of $42 billion all at once through their control over their portfolio companies?
Congresswoman, I think that is something we'll need to look at in terms of the post-failure review of these institutions. I couldn't tell you today, with certainty what occurred there. I know both the Fed in regard to SVB and we in regard to Signature are going to do a careful review of the events.
Thank you very much, and I agree with you. I think we really need to know the role that venture capitalists played in this bank. Going further, Vice Chair Barr, you said yesterday that SVB received a 3 for its management rating, which is considered deficient, but was considered sufficiently capitalized, given the bank's unique customer base, extremely large share of uninsured deposits, and underwater asset portfolio. Liquidity management was also a key issue. The liquidity rating for a bank should account for interest rate risk and the bank's asset liability management. What was the bank's rating on liquidity?
Thank you, Representative Waters. My understanding is in the summer of 2022, although the composite rating was a 3, that is not well managed, the liquidity rating was a 2, which would have been satisfactory. And one of the things we're looking at in the review is how that synced up with the supervisory matters requiring attention and matters requiring immediate attention with respect to liquidity that had previously been issued. So we're looking at whether those standards were sufficiently stringent, whether the firm should have been downgraded further, and whether further supervisory steps should have been taken.
Whose responsibility was it, understanding the deficient rating, to do something?
The Federal Reserve is responsible for supervising this institution.
Did the Federal Reserve fail on that?
I think that anytime you have a bank failure like this, bank management clearly failed, supervisors failed, and our regulatory system failed. So we're looking at all of that.
Thank you. Vice Chair Barr, you said yesterday that SVB received a 3 for its management rating, and you just responded in a way that says, yes, that is true, and perhaps something should have been done, and you're going to look further at that. Are you suggesting perhaps legislation to deal with that?
We're focusing in our review on our own supervision, ways that we could have done better as supervisors at the Federal Reserve, and ways that our own regulatory structure might have played a role with respect to the failure of this firm. So we're inward looking. It's a self-assessment, a prudent thing, I think, for us to do. It's what we tell banks to do. It's sort of the first thing you have to do to understand risk within your own institution, and that's why we're doing it.
Chair Barr, I wonder what it would take to receive a 3, 4, or 5 from a federal examiner. Well, I know the idea is to keep exam ratings confidential in order to prevent bank runs, but doing so also prevents this committee from understanding how well the Fed and other regulators are doing in rating banks. In the same way that stress testing results are public, are there ways we can make the supervisory process more transparent to promote discipline and accountability?
Thank you, Representative Waters. I think one of the things we're trying to do here today is to provide that accountability, and we'll do that in our report, which we'll do on May 1st. It will include confidential supervisory information. We normally do not provide that information, but given the fact that this bank failed and triggered a systemic risk exception, we are including that information, including exam reports.
Thank you very much. Very important issue. Chair Gruenberg, Silicon Valley Bank was purchased over the weekend by First Citizens Bank and Trust Company. As you know, I wrote to you on March 18 about former SVB's Community Benefits Plan, which was intended to provide $11 billion in small businesses housing, and community development support to communities in my home state of California and in Massachusetts. I understand that $2 billion in affordable housing and other projects may be lost or delayed in California because of the failure. Will Citizens Bank and Trust continue implementation of the former bank's community benefits plan?
And regionals are about to go negative.
The agreement between the community organizations in Silicon Valley in regard to the community benefits agreement was an agreement between those two parties. First Citizens will now be taking over Silicon Valley. There'll be an opportunity for the community organizations to engage with First Citizens. I know First Citizens has a community benefits agreement with community organizations where it's currently doing business. So there'll be an opportunity for the groups in California to engage with Citizens. And I would note Citizens is also subject to supervision under the Community Reinvestment Act. And so we'll be able to evaluate the degree to which Citizens is serving its communities pursuant to CRA.
Gentlelady's time has expired.
Yeah, healthcare is still getting mollywopped.
We'll now recognize the Vice Chair of the Full
Real
Committee,
estate's still
Mr.
best on the
Hill
day. Tech
of
is
Arkansas,
2.
for 5 minutes.
Thank the chairman. Thank the
J.J.
ranking member
Kimberly
for
Clark
this
on the
prompt
high.
hearing after these weeks of tumult, and thank the panelists for being here as well. Mr. Barr, when were you nominated for your job?
I apologize, I don't have the date in my head. It was the spring of last year.
And do you know when you were confirmed for your job?
Yes, I took my post up in July of last year,
big.
July 2022.
July of 2022. So between January 20th, 2021 and July of 2022, who was in charge as Vice Chairman of Supervision at the Federal Reserve?
There was no vice chairman for supervision during that time period.
And so when that happens, what's the Fed's process for delegating that authority to another member of the Board of Governors or a staffer, or how's that work?
I apologize. I don't know the technical answer to that question. We'll have to get back to you with a written.
Yeah, if you get back to me, because what we're saying to my colleagues here is that from the turn of administration, we did not have a vice chairman of supervision from January 20, 2021 until July of 2022, and that is precisely the time frames, colleagues, when this bank's business strategy went awry and was under this supervisory concern by the San Francisco Fed. So I just want to have that in the record. And when I look at the results of this bank and the UBPR, the call report data, and looking at your good testimony about the timeline that you've disclosed, it appears to me that we have a lack of supervisory urgency here. You outline that the trends in 2021 are what triggered concern by the Federal Reserve examiners, and I assume the state of California. We haven't heard from the state of California. We'd like to. But there was an exam in the summer of 2021, and then it took till the fourth quarter of 2021 to tell the bank we had some specific serious concerns, so that you met with the board then, not you, but the supervisors. And then the downgrades didn't come, and those tough visits didn't come till the summer of 2022. So really 12 months of discussion between the board and the state of California and the San Francisco Fed. That doesn't sound like a very urgent supervisory process. What is it? Do you consider that urgent to take a full 12 months in that process?
Mr. Hill, I think you raise an absolutely essential question. It's one of the things we're going to be asking in our review. Obviously, these events occurred before I arrived at the board. I'm going back and looking at what steps were taken and not taken. And I think it's a completely fair question. Should the supervisors really, been much more aggressive in the way that they responded to the risks that they saw and they were noting? And we're going to look carefully at that. Yeah.
I just was shocked with the business plan, way out of line with peer. You have matters requiring attention, which is a very low level, the lowest level editorial comment by a bank regulator. There was no proposal for a board resolution that I saw in your notes. So I look forward to the results of your comments.
This guy knows
this issue of Dodd-Frank versus S2155. My reading of bank law, just those things are just almost not important compared to 12 U.S.C. 1818 on cease and desist, where the FDIC, The primary bank regulator, the state, can do whatever they want to a bank that's not operating in a safe and sound manner. Isn't that right, Mr. Barr?
The bank regulators have substantial discretion to use those authorities when banks are operating in an unsafe and unsound manner. I agree with that.
And I thought Senator Crapo's comment yesterday was very, very important, that in the rule of construction, that final bit of information in S-2155, the bipartisan bill, bicameral bill signed by President Trump, it says nothing in this bill shall be construed to limit the supervisory authorities for safety and soundness in any way. Isn't that what that rule of construction says?
Yes, I agree with that. I think we have substantial authority under existing law to regulate firms and supervise firms in a way that is appropriate for their risk and size and complexity.
Thank you very much.
Mr.
Chairman, talking about the resolution process, are you open to a full investigation, not only of the deposit insurance and not only of the supervisory process, but also look carefully at the resolution process itself?
Yes, Congressman.
And are you going to conduct that yourself, or would you work with us on that?
Well, we would certainly be prepared to undertake that review and be transparent with you in regard to it.
Something I want to see considered, and I argued this back in 2008 as a private citizen and banker, which is in the resolution process to consider non-bank buyers for these assets. Do you agree that's important? We should consider that?
Yes, it is, Congressman.
Thank you. I yield back.
We'll now recognize Ms. Velasquez of New York for 5 minutes.
Thank you, Mr. Chairman.
Greens aren't holding.
Mr. Barr, the rescue of depositors in Silicon Valley Bank demonstrates that regulators think
we haven't done anything
banks
for
like
5
Silicon
minutes.
Valley pose a systemic risk to the system, just like Gypsy do. Mr. Barr, don't you think Category 3 and 4 banks should face the same rules as the mega banks?
Thank you very much for that question. We are looking at capital and liquidity standards for all large banks, including firms $100 billion and above. I still think a tiering approach makes some sense. It doesn't have to be the same rules for all banks, but we do need stronger rules for firms of this size. Stronger rules on capital and liquidity, I think, are going to be really important.
Mr. Barr, in my view, the decision to insure all depositors was a necessary and correct step. However, I am frustrated that time and time again we fail to regulate them like one, and as a result we find ourselves in situations like the one that we are currently in. Without proper regulations that account for the systemic risk profile of a bank, we are incentivizing bankers to search for yield and inviting moral hazard. Mr. Barr, the sudden and immediate collapse of Silicon Valley Bank demonstrates the vulnerability of banks and the broader system to interest rate rises. Yet, under our current capital rules, most banks are not required to recognize this risk, only GSIBs. Will the Fed rewrite its rule to require all banks to account for interest rate risk?
Well, you raise an absolutely essential point, and one that we're very carefully looking at.
A shareholder meeting.
We anticipate engaging in a notice and comment rulemaking process on capital rules with appropriate transitions, and that is one of the areas that I think would be important for us to consider in that rulemaking process.
So do you think that the rules passed under S-2155 and written by the Trump administration need to be rewritten?
We're going to look as part of our review at not only our supervisory issues, but also at the regulatory structure that the Federal Reserve put in place in 2019 and see whether the size thresholds we used, the standards we decided to put in place, all of that is on the table. We're reviewing that.
Apple
We're going to come back and provide an assessment of that on May 1st.
NASDAQ's below 1%
and
now.
Mr. Barr, the Fed has been raising interest rates more rapidly than it has in decades in an effort to lower inflation. It appears that many banks were unprepared for this. Can you explain how the Fed's bank supervision staff coordinate with its monetary policy-focused staff to ensure that banks are properly prepared for well-telegraphed shifts in monetary policy? Does the Fed see regulation and supervision as separate from monetary policy?
the whole of the Federal Reserve staff communicate very well together. As you noted, the monetary policy decisions were very well telegraphed. The decisions were essential to meet our congressional mandate of price stability and maximum employment. And we need to make sure that we continue to pursue that. We have separate tools that we use, of course. And as I've said in other contexts, interest rate risk management is a core bread and butter issue in banking. It's not an esoteric issue, an exotic issue, a complicated issue. It's a straightforward issue, and the bank management failed to do that here.
Thank you. And during his news conference last week, Chairman Powell said that the FOMC considered a pause in the interest rate increases in light of the recent banking failures, but ultimately unanimously approved the decision to raise rates due to intermediate data on inflation and the strength of the labor market. How will the Fed balance its supervisory role with its monetary policy role as it considers future interest rate increase?
We have really all the tools that we need on the macroprudential and microprudential side to assess financial stability and bank safety issues. And as I said, the banking system overall is sound and resilient. Deposits are safe. On the monetary policy side, we're going to be looking at incoming data. We're going to be looking at changing financial conditions, and we'll really make a judgment on a meeting-by-meeting basis about that decision.
Thank you. Mr. Chairman, I yield back.
We'll now recognize Mr. Sessions for 5 minutes.
Mr. Chairman, thank you very much, and thank you to the witnesses for being here today. I think you see that this committee will work together, has questions, and would wish to hold you accountable, but I must confess to you, after hearing the questions that have taken place, I've heard none of you three accept real responsibility for your role in this endeavor. I've heard that you were aware of it the week of. I've heard that notice was given of oversight back in 21, that a frailty was noticed.
Yellen
I've heard us say that
by some activity
we used all of our tools. I've heard you say
Yellen
things like
on China right now.
The FDIC will use all of its authorities. But I've not heard any of you three talk about a systematic failure to let the bosses know what's happening. I've heard you use, well, this got staffed and that got staffed and staff did this.
Spy, flushing.
I think this is a wake-up call to all three of you.
We still haven't tested 4,000 yet.
I hope it's a wake-up call to your organization that evidently they can see these bread and butter failures back in 2021, but evidently nothing realistic ever occurred to avoid what seemingly anybody that's a professional banker could see. I've seen excessive regulatory oversight by this administration across the board. I've seen a lot of what I would call inattention by decision makers. So I would specifically tell you that we will drill down on and need to know more about the recommendation for systematic exception that was invoked. In other words, that was invoked by presumptively the people at this table, and yet it took all this
time about to go green on the day, the 10-year,
before you were even aware. Failure occurred, was occurring, and then you were given notice.
Get on with the yell.
So I would hope myself that there would be some inward thinking about your actual roles. Instead of staffing everything and waiting for it to bubble up to you, that there should be hooks in place. I spent 16 years in the private sector, ran a large organization, over 700 employees. I had more than a fiduciary responsibility, I had a managerial responsibility to report up the things that we saw to a very large organization. And I believe, by and large, those people
not going as low as
welcomed
stocks
my
right
feedback
now, the S&P.
and set ourselves up for that. So take the remaining minute and 50 seconds and give me some inward thinking, because I heard no one say we were part of the problem. We need to look at us being part of the problem, and we need to be a part of the solution because, as was noted, this will be paid by all banks across the country of the FDIC. Please. Mr. Barr?
Thank you very much, Mr. Sessions. I agree with you. I think we need to take a good, hard look inside at the Federal Reserve, at our supervision, at our regulation. I think we need to be humble about that. And I think we are going to be unflinching in our review about that.
Does that include your role?
Absolutely. Absolutely. And I'm here today to be accountable to you for that purpose.
Well, accountable is one thing, but coming back and actually admitting that you were part of the systematic failure is an entirely different process. People say, well, we'll hold accountability, but actually it's banks that are across the country that play by these rules and offer this money are the backstop. And while I don't want to argue against that, I do want to say I believe there's lots of room to say someone should have caught this as early as and done something back in early 22. Chairman?
Congressman, I really don't mean to shirk responsibility here. I think we share responsibility.
This guy will
I think bank management had responsibility. I think we as the regulators of the institution had responsibility. I think we're going to conduct reviews to get the facts as to what occurred and a measure of internal as well as external accountability. My own sense here in terms of the supervision of these institutions from my perspective is that both agencies, and I would include ourselves,
he's good.
Were aware that there were issues at these institutions and trying to address them through the supervisory process. It's also my judgment, I think, and we're going to conduct a review to get all the facts here, if I may say.
The gentleman can answer the rest for the record. With that, we'll now recognize Mr. Sherman of California for 5 minutes.
Due to Dodd-Frank, our banking system is strong.
So
our regulators avoided a crisis by quick action this month. But the solution was not free. Some $22 billion of special assessments will be imposed on banks. That will lead to lower rates on certificates of deposit, perhaps 0.25%, perhaps 0.1%. And our entire economy has been hurt. It's been rattled by what happened this month. Our bank regulatory system has some real flaws.
Bonds, 10
It's an undemocratic system in which FASB writes the accounting rules and doesn't even claim to be part of a democratic government. The Federal Reserve Board's regional banks, it's not one person, one vote, it's one bank, one vote. The bankers vote on who's on the regional board, and the bankers of my state elected the CEO of Silicon Valley Bank. Banks get to pick their regulators, state or federal, holding company or no holding company, Fed or OTC. They can use regulatory arbitrage, and every regulatory agency knows that if it gets a reputation of being too tough, the banks can flee and go to one of their regulatory competitors. Our accounting system for banks is absolutely perverse. If you make a Main Street loan, you're penalized under the CECL system. And you will always list that loan on your balance sheet as being worth less than you paid for the note. If you instead go to Wall Street and buy long-term bonds, you are rewarded. If the bond goes up in value, you can sell it or classify it as available for sale and recognize a profit and justify a bonus. If the bond goes down in value, you can hide it by listing it as held for maturity and list it at the original purchase price on your balance sheet, even though you know it's worth 20 or 30% less. The crypto billionaires fanned the flames because they understood that if they can besmirch our banking and dollar system, crypto goes up, and they've made tens of billions of dollars. Silicon Valley Bank
kid behind him
could have saved itself in 2022 by hedging its risk or selling its long-term bonds, but they knew that would cut profits and bonuses. They decided to take the risk, and here we are. And of course, our clawback provisions are inadequate. There are 600 billion of unrecognized losses on the balance sheets of American banks. That needs to be juxtaposed with the $2.2 trillion of capital American banks have. So we're overstating the capital of our banking system by perhaps a quarter. Mr. Barr, particularly watched your Senate testimony in which you basically said it was bank mismanagement for them to ignore the good advice your people gave them. It is also misregulation to let banks ignore that advice. You are not running a consulting operation. You are running a regulatory operation who can force banks to follow that advice. And interest rates go up, interest rates go down. Certainly the Fed in auditing banks ought to know that, especially when this is not a 100-year event. Interest rates go up, interest rates go down. I mean, 2023 has its peculiarities, but it's particularly ironic. It's the Fed that's raising the interest rates, and then the Fed that's not examining banks to see if they can survive if interest rates go up.
That's pretty funny.
The concern we all have is, are there other banks that could go under because they invested in long-term bonds that aren't worth as much as they paid for them? So I'll ask Mr. Gunberg and perhaps Mr. Barr, are there any banks out there, and roughly how many, that have capital of under 5% if you subtract from their stated capital their unhedged, unrealized losses on long-term debt?
Congressman, that's a fair question and a factual question. If I may, let us get back to you on that. We'll get the numbers and share them with you very quickly.
And please don't give me the names. Mr. Barr, do you have any other answer?
No, sir.
Mr. Gunberg, I know that you're going to be giving us a report about possibly expanding FDIC insurance this spring. I look forward to it, and I hope that you would consider $3 million of coverage, but only of non-interest-bearing accounts. Because when a bank is used as a utility for a checking account, we need that coverage. If people are making investments, we ought to be a little bit more careful, and I'll yield back.
We'll now go to the Subcommittee Chair on National Security, Mr. Lukemeyer, for 5 minutes.
Thank you, Mr. Chairman. Vice Chair Barr, for more than a year now, financial news has focused on Fed raising rates. There isn't a person in the financial services sector of the country that hasn't heard about it on a seemingly everyday basis since the beginning of 2022. Well, it has been the fastest rate increase in our country's history, which I believe is probably too fast. Chairman Powell has made his intentions very clear. No banks should have been caught off guard by rate increases. In fact, the Federal Reserve is in the same position themselves. Mr. Powell was here a couple weeks ago and acknowledged that his bond holdings have got them, and the interest rate situation that they have is actually losing money as a result of this himself. So it's even more surprising that a $100 billion bank's not considering the effect of rate increases is, in fact, according to your testimony, the Fed staff hasn't presented to the Board of Governors with its impacts on rising rates until mid-2023, February 2023, just last month. So are you telling me that every time the Fed raises rates or drops rates, there is no economic analysis done on the impact on our economy?
Mr. Lukemeyer, I was referencing that particular meeting because the staff...
No, that's not my question. My question is, does the Fed, before it raises rates or lowers rates, does it have an economic study done by its economists? They've got a team of economists there. Do you have an economic analysis done of the impact of that? Mr. Gabarino, would you please move to your right, please? Thank you.
Yes, we evaluate all the economic conditions.
You get a report from your economists
that the Fed, making any interest rate decision.
Does the Fed board get a report from their economists saying what the impact of their rates will be on the economy? Yes or no?
Yes, we get staff forecasts that forecast the expected impact on the economy.
I haven't seen that in 20 minutes, 30 minutes.
Okay, how come you made a specific mention that
above 4,007
in the February report then?
If it gets above 4,010, that's good.
Why did you specify that you got the rate?
That's what I was trying to explain earlier. I mentioned that because the report specifically called out Silicon Valley Bank. We regularly discuss interest rate problems. Interest rate risk is an important part of supervision and a bread and butter issue.
Okay. A bank this size, normally you'll have an examiner or two or a team that is in there on a daily basis. Was there an examiner or team of examiners in Silicon Valley Bank on a daily basis?
The team consisted of about 20 full-time equivalent staff at the San Francisco Federal Reserve Bank.
They were not in Silicon Valley then?
I don't know precisely the extent of their in-person meetings versus their remote analytic work.
Okay, that's another problem that we have to talk about, having all this work off-site whenever they need to be on-site, being able to have access to the daily data. But as a result of this, and I'll follow up on some of the questions that have been asked before, but ask them in a little bit different way. You knew that we had an interest rate risk problem and a liquidity problem. You acknowledged it all the way through from 2021. It's been established this morning. You have examiners in the bank are watching it on a daily basis. And you know that you've had some reports that say we need to take some action. Why was no action requested or not forced on the bank?
There was action requested of the bank in the matters requiring attention and matters requiring immediate attention.
Why were they not enforced?
I think that's a question for our review. We don't know. I don't yet know the answer. Could the staff have escalated more? Should they more? What were the interactions with the bank? That's all part of the supervisory record that will be in the May 1st report.
Well, that begs the question then, Mr. Barr. If you think you need more rules and you're not even enforcing the existing ones, why do you need more rules? I don't think we need to look at more rules until we figure out which rules were not being enforced, what messages were not being delivered to the bank to be able to do your job. At that point, then we can take a look and see what we need to do something else. But for you to make the statement, we need more rules and regulations, how about enforcing the existing ones first?
We're going to be looking, as I said, at our own supervision under the existing framework, ways in which existing rules
very quickly, I've got one more quick question for you here. This situation points out a very unique situation because of the new social media, the world of instantaneously being able to do some things. I have grave concerns because within a less than a 2-day period, $42 billion rolled off the books here, basically as a result of a Twitter little informational thing. It begs the question down the road here, Mr. Barr, it opens up the possibility whenever you have a bunch of significantly distressed banks that there could be a short sell on some of these things that could be out there. We need to be talking about that. Are you thinking about that at all yet?
Yes, I think you're raising absolutely important and critical questions about the role of social media, the role of networks, depositors with each other, and the potential.
You're working on a real-time payment system that's going to be ripe for a problem like this with Twitter. If we don't
Gentleman's time's expired. You can answer for the record.
He calling out the digital payments.
Now go to Mr. Scott of Georgia
bank
for
runs
5
will work
minutes.
if it was
Thank you very much.
Whoa.
Vice Chair, we know that this was basically the fault of the management. But what we want to know is, where did the Fed go wrong? Where did the Fed go wrong? And specifically, did the Fed miss red flags or ignore warning signs that were brought to you by your staff months or even years before the collapse?
Thank you very much for the question. We do have in the supervisory record staff reaching out to the bank, highlighting these problems. As you noted, in the first instance, it's bank management's responsibility to fix those problems. They didn't do so.
Well, Vice Chair, is it true that the San Francisco Fed, which supervised Silicon Valley Bank, sent multiple warnings to the bank's management about the risk it was taking, including its substantial holdings of treasuries and other bonds that were steadily losing money as interest rates rose?
Yes, the supervisors pointed out to the banks that they were exposed to interest rate risk and liquidity risk, and that they didn't have the risk management in place to address those.
And
the bank failed to fix those problems.
And how often did Fed staff share with the Board of Governors that rising interest rates were threatening the finances of some banks, and in particularly the risk-taking at Silicon Valley banks?
My understanding is that the particular issue with Silicon Valley Bank did not rise to the level of the board until mid-February of this year.
And the other question is
the Board of Governors, I should say.
Why do you think that the full extent of the bank's vulnerability did not become apparent until it was too late, especially when the FDIC data was showing that SVB was doubling in size in 20 and 21, doubling in size within 12 months? Was that not a red flag?
No, I think you raised, I apologize, I didn't mean to cut you off there at the end. I think that one of the things we're looking at is that the way the Federal Reserve's regulations set up the structure for approach to supervision treated firms in the 50 to 100 billion range with lower levels of requirements and had a phase-in period for firms that got above the 100 billion line that meant that their transition into those higher standards took a long time. So by the time the group was actually looked at in an intense way by the group in the large and foreign banking organizations team, a lot of that growth and a lot of that activity had happened. And so, in a sense, it was very late in the process. And that's one of the things we're looking at in our review.
Good. And I want you to know that I appreciate your recent announcement that a formal review into whether the Fed failed. It's good to admit failure. That is the first step for correcting the problem. And whether the Fed failed to properly oversee Silicon Valley Bank will take place, and more importantly, that it will be shared with us in the public. Is that true?
Yes, that's absolutely right. We thought that it's really important as a first principle of risk management for us to do our own self-assessment. We have a team of people working on that self-assessment who are not involved in the supervision of Silicon Valley Bank. We're going to make all of those findings and recommendations public on May 1st. And let me also say we welcome other outside reviews, as this body is doing today, and others will as well.
Thank you very much, Vice Chair.
The gentleman from Michigan, Mr. Huizinga, the chair of the Oversight Subcommittee, is recognized.
Thank you, Mr. Chairman. I'm going to quickly move ahead here. A loss in confidence in the banking system is a loss of confidence in regulators in many of our minds. And regulators seem to have had the tools at their disposal to prevent these failures from happening, but they seem to have missed that. We're going to be exploring that. As chairman of the Oversight and Investigation Subcommittee, I find it necessary to reiterate how important the congressional oversight is, and that it's a constitutional authority that we have, and frankly, an obligation that we have to maintain the well-being of our system of government. Mr. Barr, you just had said it was appropriate for outsiders to do their independent reviews. That's what we are trying to do here today. You were authorized, though, on March 13 to do your report, correct? Who authorized that?
Chair Powell and I made...
Okay, that's all I need to know. Chair Powell authorized you?
Chair Powell and I jointly made the decision for me to proceed with this.
Is it your understanding as well that under Dodd-Frank, anytime 13.3 is invoked and utilized, that the GAO is also supposed to do a report?
I'm not familiar with that precise provision, but it makes sense to me that GAO should do a review.
Okay. And do you know when GAO is going to be starting their report?
I respect the independence of the GAO.
Microsoft going into a low.
On page 2 of your testimony, you said that the May report will include confidential supervisory information. Will you be providing that CSI to the GAO?
Yes, consistent with normal practice.
Great. Well, we might have to unpack that a little bit. Will you also commit to me and this committee and to the chairman that you will provide this committee with all those same related confidential supervisory information needed to appropriately assess on our end what happened.
Yeah, the same information in the May 1st report will be available.
No, not in the report. If you're giving that supervisory information for the GAO to do their review, not before you review it yourself and decide what is appropriate and not appropriate. I thought you just said that you would be providing GAO with all of that data and information that you will be using to make your report. Is that correct?
We will make the information that we are using for the report available to you and to the GAO.
Okay, so we have your commitment that you are going to be providing us with all of that raw, confidential, supervisory information so that we can do our job.
The same information that we'd use for the GAO and for the public report.
I'm not looking for the report, though. I want to make sure we've got the information. I'm trying to make sure that our semantics aren't getting played.
We follow our.
I will accept the answer that you are going to give us the exact same information in a timely fashion that you are using for your report. Fair?
Yes.
Okay. All right. Mr. Grunberg, I want to touch on the Treasury's commitment. The FDIC to look at what was going on there. The same question really is to you. Will you commit to providing the committee with all related confidential supervisory information that is needed for us to assess?
Yes, Congressman. I think you have the authority to compel that information. We'll be responsive to you.
Okay. Timely manner is the key watchword here. Between myself and the chairman, Chairman McHenry, we have a number of requests to all of you. Ms. Lang, I want to touch on this. To obtain the information, FSOC was convened on both March 10, March 12, and March 24. Has FSOC met since March 24?
They have not met since March.
You have not. Okay. So it was reported that Secretary Yellen convened these officials via video conference. Is that correct?
Yes, I believe there
were part
two
of that?
FSOC meetings.
Okay, and you were part of that?
I was part of the second one. I was not part of the first one.
You were not part of the 10th? Okay.
I was not. That was the evening, I believe, we announced. I was not part of the March 12th meeting.
Were minutes taken at those meetings?
By normal process, minutes would have been taken.
And will we have access to those minutes?
Yes, they are released according to...
Before they're released, because we only have minutes from December 22. There is nothing that has been released publicly since December 22.
That is correct. I believe the process is minutes are released following the next formally scheduled FSOC meeting.
Only if formally scheduled.
We can come back to you on that, when they will be released.
So we have to wait till the next formally scheduled time to get those minutes.
I understand that's the process, but
we'll be following up in writing. Thank you.
Yes.
We expect a written response for that, Undersecretary. I will now recognize Mr. Lynch of Massachusetts for 5 minutes.
Thank you, Mr. Chairman, and thank you, Ranking Member, for holding this hearing. I want to follow up on Ms. Waters' line of questioning. Prior to its collapse, Silicon Valley Bank was a major lender and investor in low and moderate income housing in Massachusetts, in my district, in large part because it acquired the Boston Private Bank and Trust Company back in 2021. So that includes not only deposits, but construction financing, permanent financing, mortgage lending for low and moderate income home buyers, equity investments, and direct purchase of tax-exempt bonds for affordable housing development. So right now I've got 18 affordable housing developments in my district and on the outskirts of my district, currently in construction in Massachusetts, and they depend on the fulfillment of outstanding debt and equity commitments that were made by Silicon Valley Bank. So these developments, and this is a back of the envelope, I'm sure there are more, but I have 754 homes, including 702 affordable homes for residents with low incomes and 118 homes for residents with extremely low incomes, as well as workforce housing. So while the vast majority, here's the thing, while the vast majority of high net worth investors and depositors at Silicon Valley Bank have been held harmless, they've been rescued. The First Citizen Assumption Agreement is completely silent on the status of these low-income victims. And that is a problem. That flies in the face of your mission and mine. And so, Mr. Gruenberg, now, and I appreciate all three of you and the work. You worked quickly once you saw the problem. And I find great fault with the reckless management on the part of Silicon Valley Bank in that they concentrated so much risk and there was an absence of meaningful risk management. But we have a problem. And while the bank crisis might be over, it's not over in my district with all these families, all these low-income families that are struggling. You know, I got cities like Brockton, Massachusetts. We got a great mayor there doing a wonderful job, and they're all going in the right direction, and as well as Boston and Quincy and others. But we need help. We need to resolve this. So, Mr. Gruenberg, I need a commitment from you, sir, that you need to come to Brockton. You need to come to Brockton in my district, and we need to work this through so that we provide the kind of protection for low-income families, a lot of them families of color, many first, they're first-generation immigrants, and, they need help. And I think you and I need to be there, and I'll get my mayors together and these 18 affordable housing development managers, and we'll try to find someone to hang out with. But can I get your commitment? Any thoughts on that?
Yeah, Congressman, I'd be glad to do that. And follow up with you as
he's gonna hold
First Citizens takes over, is in a position to continue to serve the customers of the former institution and work with you in regard to the community issues you just described.
That's great. I'm very happy to hear that. There's something new and different, though, in this collapse. There was a concentration of risk on the part of Silicon Valley Bank. They catered to early-stage startups which have a high rate of failure in the first place. They're very skittish, so those aren't core deposits that are going to stay through any period of unsettled economy. And then on top of that, you have panic that is driven by social media. In many cases, you had venture capitalist firms telling their clients at that bank to get the heck out. So the speed at which this happened was a matter of hours. And again, I commend you on the speed at which you acted. But is there something more that we need to be doing now because of the velocity of money? People can move their money out like that. And are we equipped? The FDIC has a long and strong history, but is something new and different needed to protect us from that phenomenon?
Congressman, I think that's an important question to ask. I think we are dealing with a different environment, and the point you raise in terms of how quickly money can move, what the technology enables now that exceeds what's occurred in the past is a new risk factor that we have to think about.
I would ask the panel to all respond to the gentleman in written form about that very important subject. And I will now recognize Ms. Wagner of Missouri for 5 minutes.
Hi, thank you, Mr. Chairman. And Vice Chair Brower, we're going to go very quickly here, so I would like some succinct, brief answers if we could. Vice Chair Brower, referring specifically to Federal Reserve supervisors, do you know how many citations, specifically the matters requiring attention, MRAs, and matters requiring immediate attention, MRIAs, that were issued to Silicon Valley Bank regarding its management of liquidity risk? Microphone and a number. Do you know how many?
In November 2021, there were 6 MRAs and MRIs on liquidity. in the fall of 2022, there was an additional MRA on interest rate risk modeling. I think I misidentified inadvertently yesterday as an MRIA, but as an MRA.
That's fine. I don't need you to go through all of them. We've got 6, maybe 7 of these citations that were given. Yesterday, you were asked about an MRIA that was issued in the fall of 2022. You stated that the MRIA was issued, quote, based on the inaccuracies of their interest rate risk modeling. Essentially, the risk model was not aligned with reality. This is your quote.
Yes.
Did the supervisors provide the bank a timeline to remediate this misalignment, since changing an interest rate risk assessment model seems to be something that could be done very quickly?
Yes, my understanding that there were time limits associated with each of these MRAs and MRAs, but I don't have the information.
Really? Okay. Well, clearly those alerts were ignored at the bank. Why didn't the Fed consider escalating any of these issues into a cease and desist order or other formal enforcement action against the bank to require senior management and the board of directors to remediate these serious deficiencies?
I think you raise a fair point, and we will be looking into that.
I certainly hope so. Vice Chair Barr, in your testimony you stated, quote, the failure of SVB illustrates the need to move forward with our work to improve the resilience of the banking system. For example, it is critical that we propose and implement the Basel III endgame reforms, which will better reflect trading and operational risks in our measure of banks' capital requirement needs. Sir, I strongly disagree. These reforms will result in additional costs on consumers, on businesses, and investors. I'm going to go real quickly here. Was trading risk
1 year or 2 year bonds
the reason SVB had almost 94% of its deposits uninsured?
No.
4 months
was
bills,
trading risk
4.78.
the reason SVB did not have a risk officer for nearly 9 months last year?
I do not believe that was the focus of why there was not a credit risk.
Starbucks on the high, too.
Trading risk was not the reason. Was trading risk the reason SVB had 51% of its deposits in the tech industry? Yes or no?
Not to my knowledge.
You know, I fail to see how SVB illustrates a need to implement Basel endgame reforms, particularly as it relates to trading risks. Can you show how trading risk directly resulted in SVB failure? Or, sir, are you just looking for any reason, correlated or not, to justify increasing capital requirements for our banks?
I think it's really quite important that we strengthen capital and liquidity requirements in the system. It's something I've been working on since arriving at the board in July. And I think that the work that we're going to do, that we will propose through notice and comment rulemaking, will make the financial system safer and sounder. That reduced risks that firms such as SVB in the future.
You stated that yesterday that our banks are well capitalized, did you not?
Yes, I have been consistent in saying that both that the system is strong, but that also we need to think about stronger capital rules, and I think that's appropriate given the.
Well, we're going to have a hearty give and take on this. You know, I want to say this in closing. Despite U.S. regulators having clear knowledge of insufficient risk management, it seems that the examiners and your supervisors were asleep at the wheel, while signs that Silicon Valley Bank was heading towards a collapse were staring them right in the face for many, many months. Vice Chair Barr, I look forward to the release of your review of the supervision and regulations of Silicon Valley Bank so we can dig in some more on May 1st, and I hope that it provides more clarity to the events leading up to these bank failures. I thank you, and I yield back the balance of my time, Mr. Chairman.
We'll now recognize Mr. Green of Texas for 5 minutes.
Thank you, Mr. Chairman. I thank the ranking member, the witnesses for appearing. Witnesses, you have all made the case for mismanagement at Silicon Valley. If you disagree with this statement, please extend a hand into the air. Let the record reflect that all witnesses agree that mismanagement was occurring. I have before me a news article from
Meta's at highs
what
right
is
now.
perceived to be by many a reliable source, CNBC.
And Tesla's coming up. Like I was telling you, tech stocks have been moving the last 5 minutes.
That would be the title. The style is Silicon Valley Bank employees receive bonuses hours before government takeover. Hours before government takeover,
he said, "You motherfuckers."
Bonuses. It's also alleged by other sources that these bonuses could exceed $100,000. Mr. Gruenberg, is it true that hours before the takeover of the bank, before it was seized, that bonuses were accorded employees?
Congressman, since we weren't the supervisor, I wouldn't have that direct information. I'm sure we could get it for you, or the Federal Reserve could provide it.
I welcome the intelligence from the Federal Reserve.
But if I could just make an additional point, which is the FDIC is under a legal obligation after the failure of Silicon Valley to conduct an investigation of the conduct of the board and the management of the institution. And if misconduct occurred, we do have authority to impose civil penalties, including civil monetary penalties, restitution, and to bar individuals from the business of banking.
Thank you.
We do have some significant authorities and responsibilities.
Thank you. I yield to the FDIC. Excuse me, to the Fed.
Thank you very much, Representative Green. The board also has the authority.
Without the authority right now, just tell me, were there bonuses given out hours before the bank was seized?
I have seen reporting of that, but I'm still trying to chase down the facts. Our enforcement team has the ability to go after actions against individuals.
So you're saying you do not know, but you have heard that this is the case?
And then even regionals.
Yes, I do not have the supervisory record of that to know, but I've seen reporting of that, and we're looking into it.
For the moment, let's just assume that Bank X hands out bonuses.
And healthcare is going lower still.
Management has failed to do its job.
Delta on the high.
Do you have
a couple of big banks, and then Chips,
WBC, or accorded or statutory power
then Walmart's
to claw
on the low
back
still.
Those bonuses?
We have the ability to pursue actions for individuals who violated the law.
May I kindly ask about clawback of bonuses? Can you claw back those bonuses?
Under our authority, if there are violations of the law or unsafe or unsound practices or any breach of fiduciary duty, we can get restitution, we can get civil money penalties, and we can have a prohibition. Should
I assume that your answer is no, you do not have the authority to claw back those bonuses?
We don't have generalized clawback authority.
You do not. All right, I see a hand raised. Mr. Gruenberg, please.
Just to try to respond directly to the question, we do not have explicit the FDIC does not have explicit clawback authority under the Federal Deposit Insurance Act. We have that authority under the Dodd-Frank Act
lays off Marvel Entertainment chair.
Failures under Title II, but we do not have that under the Federal Deposit Insurance Act. So in considering additional authorities that Congress might provide, that might be something worth considering.
Thank you, Mr. Gruenberg, because that's exactly where I'm going. We live in a world where it's not enough for things to be right. They must also look right.
They could shut down the
it just doesn't
Russian
look right
central bank,
for hours
but they can't
before
claw back a bonus.
The bank is seized, bonuses to be accorded employees, and some of these bonuses
Warner Music to lay off 4% of
Gentleman's
workforce.
time's expired. We'll now recognize the Chair of the Financial Institutions Subcommittee, Mr. Barr.
Thank you, Mr. Chairman and Ranking Member, for holding this important hearing. And Vice Chairman Barr, true or false, Silicon Valley Bank experienced rapid asset growth in a short period of time?
Yes, that's correct.
Silicon Valley's rapid growth was fueled by an extremely high concentration of deposits from a single sector.
Yes, that's correct.
Silicon Valley Bank became overdependent on an extremely high percentage of uninsured deposits.
Yes, that's correct.
Silicon Valley Bank failed to hedge the risk of holding long-duration securities in a rising interest rate environment.
My understanding is at one point they had hedges, and those were not in place at the time they failed.
And that was apparent to the Fed.
They had 0-day options.
Yes, it was apparent to the Federal Reserve.
Silicon Valley Bank had no chief risk officer for 8 months before its collapse.
Yes, that is correct.
Was the San Francisco Fed unaware of any of these basic facts in the months leading up to its failure on March 9th?
Not to my knowledge.
So nothing in the existing regulatory framework concealed these basic facts from the San Francisco Fed, which had responsibility of supervising this bank.
The regulatory structure doesn't conceal facts. It may have an effect on how supervisors act with respect to those facts.
True or false, Silicon Valley Bank was subject to enhanced prudential standards under Dodd-Frank as amended by the 2018 bipartisan regulatory relief law.
The Federal Reserve supervisory structure did not apply most enhanced prudential standards to the firm. It did have some enhanced prudential standards once it became subject to those standards after it passed the average at the 100 billion level.
Before it passed that $200 billion threshold, when it passed the $100 billion threshold, it was under 2155, the bipartisan regulatory relief law, under Section 401A1C of that law. The Fed could have applied enhanced prudential standards to Silicon Valley Bank. Is that correct?
Under the 2019 rules that the Federal Reserve put in place, most enhanced prudential standards did not apply to the firm.
Well, wait a minute. I don't know about that, because under 401A1C of that law, the Fed, by order or rule, could apply enhanced prudential standards to banks not above $200 billion, but above $100 billion. In assets on a one-off basis.
Yes, the legislation provided the Federal Reserve with ample discretion. The way that discretion was implemented in 2019 was with a rule, and that rule provided.
But by order, and reclaiming my time, Vice Chair, by order, the Fed could have applied enhanced prudential standards before the bank reached the size it did by February of 2023. My point is, it doesn't seem appropriate to change the tailoring rules for all banks to account for a lapse in supervision by the Fed and the inability of the Fed to deploy enhanced prudential standards to firms when it's currently able to do so under existing law. And Mr. Barr, as you and I have discussed, and as we agree, we need to preserve the diversity of the financial ecosystem here. The Fed had all the existing tools it needed to supervise this bank and
more laws
apply those enhanced prudential
if you guys
standards.
Can't even
I
supervise
think pushing
then you already have the authority.
A one-size-fits-all or reimposing a one-size-fits-all regulatory regime on community and regional banks, especially regional banks under distress right now, would result in fewer of those institutions, more consolidation, and less competition for too-big-to-fail banks. Mr. Director Gruenberg, the vast majority of community banks in my district are well managed, and they actually understand how to manage interest rate risk in a rising interest rate environment. And since the failure of Silicon Valley Bank, those Kentucky banks and their customers have been asking me why they should have to pay an assessment for your rescue of Silicon Valley Bank with a 100% guarantee of deposits of largely wealthy, sophisticated depositors at Silicon Valley Bank, some of whom apparently cared more about the bank's commitment to environmental sustainability than their capability to be good stewards of their deposits. I think this is a legitimate question. And I also think it's a good question whether invoking the systemic risk exception to the least cost resolution mandate under the Act was in fact the least cost solution. After all, your decision to cover all of the uninsured deposits cost the Deposit Insurance Fund an estimated $20 billion. Will you commit to using your authority under 12 U.S.C. 1817 to establish separate risk-based assessment systems for large and small members of the Deposit Insurance Fund so that these well-managed banks don't have to bail out Silicon Valley Bank?
Certainly willing to consider that, Congressman. And as I indicated, we are going to be preparing a comprehensive review of the deposit insurance system. So we'll come back to you and glad to engage with you.
Gentleman's time has
Thank you,
expired. We'll now go to Mr. Himes of Connecticut for 5 minutes.
Thank you, Mr. Chairman. It's interesting to me to listen to my friends on the other side of the aisle who ordinarily spend all of their time trying to defund, destroy, and denigrate your organizations, now hold you entirely responsible for where we find ourselves today, despite activities within the bank that I think we all agree, and Mr. Barr, you have said were
seems like
on the verge of outrageous. So I'd like to begin by thanking all of you and your organizations for the intense and sleepless actions you took beginning on March 9th. I don't know if you acted perfectly, and you don't know if you acted perfectly, but we all know that today the financial system appears to be stabilized, and we certainly know that Congress is not lighting itself on fire, crafting a massive publicly funded bailout as it was in the fall of 2008. I hope that we've dispensed with the absurdity that it was Silicon Valley's woke activities that drove this failure. And while I don't necessarily agree, Mr. Barr, with your predecessor's statement that blaming the bipartisan 2018 reform law is so nonsensical it isn't even wrong, the truth is that Silicon Valley Bank was crawling with supervisors and regulators who had been raising the alarm for a long time. And that's what's interesting to me about this whole episode. It was not a surprise. It wasn't a surprise to the regulators and supervisors who had been raising those alarms for years. It shouldn't have been a surprise to the management team who had been the target of those alarms. By the way, just as a side note, it was a surprise to the Wall Street research analysts who were paid very good money to evaluate Silicon Valley Bank. 24 Wall Street analysts covered Silicon Valley Bank. 11 had buy ratings on it. 11 had hold ratings on it. Only one analyst rated it a sell. More seriously, the credit rating agency, S&P Global, rated Silicon Valley investment grade right up until March 10th when it announced that it expected a bankruptcy. There's an uncomfortable echo of 2008. By the way, Mr. Chairman, I'd like to insert for the record unanimous consent, a remarkable article by Professor Raj Gopal of the Columbia Business School, which elaborates many of these points that I'm making.
Without objection.
The facts have been put out there pretty comprehensively. In 2021, 2 years ago, the Fed review results in the finding of serious weaknesses, the issuance of 6 matters requiring attention and 1 matter requiring immediate attention. July of 2022, the full supervision review rates the bank deficient. That's 7 to 8 months before March's meltdown. Early 2023, there's a horizontal review. Again, the word deficient. So, and by the way, that's complicated for most people to understand. Here's something that's not complicated for people to understand. As far as I can tell, Silicon Valley Bank had precisely one individual who was a banker on their board, Mr. Thomas King. The risk committee of this bank, which tripled in size in 2 years, had no one. The risk committee had no one on the committee with any significant banking experience. So, Mr. Barr, I'm going to put you in an uncomfortable position and say, clearly what we have here is a gap of time and a failure of action between the deficiency rating in July of 2022 and the meltdown in March. That's a long period of time. So I'm going to ask you for ideas, not necessarily good ideas. I understand that you're going to be uncomfortable to make recommendations, but clearly we need to tighten up the process by which good things happen after a finding of deficiency. So should that be left in your regulator's discretion, or should we act in such a way as to make actions mandatory subsequent to a deficiency rating?
It's a great question you raise, and one that I think is appropriate for reviewing both by you and by us. I think that we need to put in place risk mitigants and incentives that are much stronger, faster in the supervisory process. That's one of the things that we'll be looking at in the review. But I do think that in instances like this, where it is such a fundamental issue, we need to have risk mitigants in place that are ordered by the supervisors quickly.
So I'm just going to make this observation as I run out of time. As we all saw, one of the problems here, and one of the new things here, were the chat rooms and the speed by which deposits could be withdrawn. And billions of dollars went out the door because of these devices. So I'm not convinced that giving humans who operate in human time additional authority is going to do the trick here. I think we need to think about automatic mechanisms, and that may require statutory change, automatic mechanisms that when a finding of deficiency or other adverse observations have been made, kick in automatically, perhaps after some cure period, but this was a meltdown that happened at the speed of light, and humans with discretion is not going to solve it in the future.
Gentleman's time has expired. The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I'm going to repeat myself a little bit, what you've heard today, but when I talk to community banks in my district, and in full disclosure, I'm a car dealer, and I talk to them a lot and owe them a lot of money. One of their top worries right now is being left to foot the bill for the failures of Silicon Valley Bank and Signature Bank. Community banks, which most of us live by, should not be liable to pay for the rescue of larger banks that gambled and made a risky bet. So community banks are relied upon Main Street, America, to be a lifeline and provide crucial banking services to small businesses. So these smaller banks, which we all need to have, are some of the most trusted institutions in the financial industry. So, Mr. Grunberg, you talked about it before, but could you elaborate if smaller community banks in Texas, where I'm from, will be left responsible for bailing out the failed banks in California and New York, which we don't even know where they are?
Thank you, Congressman. I'm keenly sensitive to the concern. Let me just say, under the law, the FDIC is required to impose a special assessment on the banking industry to recover any cost to the Deposit Insurance Fund from covering these uninsured deposits. And we have to do that by a notice and comment public rulemaking, which we're going to do in May. And just to be clear, the law gives the FDIC authority to consider the types of entities that benefit from any action taken or assistance provided, so that the FDIC does have discretion. And let me just say, without forecasting what our board is going to vote, we're going to be keenly sensitive to the impact on community banks.
Take a look at it, because we all know that what they'll do is pass the cost on to someone like me. The Federal Reserve was supposed to be the primary supervisor over Silicon Valley Bank, but from all we've seen and heard today, they failed to do their job, and it's been reported that Silicon Valley's bank risk practices were on the Federal Reserve's radar. We've talked about that for over a year. In 2022 alone, Fed supervisors issued 3 findings on SFB's ineffective board oversight, weakness in their risk management, and flaws with the bank's internal audit function. So it should raise major concerns that the Federal Reserve, who is tasked with regulating and overseeing banks, knew about Silicon Valley's risky practices far more than a year and failed to take any corrective action. Now, Mr. Barr, what actions, if any, did the Federal Reserve take, and you talked a little bit about this, after issuing those risk findings, and how did the Fed Reserve become so complacent on its supervisory role and miss these warning signs? And I think that's what people across America really want to know.
Thank you very much for the question. My understanding is that the supervisors identified the issues, they brought them to management's attention. The response clearly was not an effective response. Bank managers failed to manage the firm in an appropriate way. They didn't manage their interest rate risk and their liquidity risk well, even though it was pointed out by the regulators. And I do think it calls for a heightened need for more aggressive supervisory action to take care of these problems.
But you all missed it too.
I'm sorry?
You missed it too.
The supervisor staff were aware of the underlying issues. I think all of us were caught incredibly off guard by the massive bank run that occurred when it did on March 9th and 10th.
Yeah, like right in the middle of the opening candle.
$42 billion going out the door Thursday afternoon.
Or 40-12 now.
It was expected by the bank that $100 billion more would go out the next day. That's just an extraordinary scale and speed of a run that not anything I had ever seen before.
Okay. Out of all the banking supervisors, I would expect the Federal Reserve
no news on Enphase. I think just solar is up right now.
Increased with
like
rate hikes would have on the value of securities for banks. However, the Fed has stress tests, which we've talked about, which are conducted to determine how large domestic banks would perform under hypothetical and stable economic scenarios, currently does not test for the problems that caused Silicon Valley Bank to fail. SFB failed because of inflation, rapid increases in interest rates, and loss in value of government bonds. So even if SFB had been subject to testing, it would not have led to the changes that could have prevented their failure, because the Federal Reserve is asking the wrong questions and not running scenarios that ultimately led to SFB's downfall. So real quick, Mr. Barr, how can the American people trust the Federal Reserve if you are not testing for all scenarios? How was the Federal Reserve so far off? That is a question that everyone asks again.
President Biden.
I think that the Federal Reserve should
seek $9 billion
use multiple
from Congress
scenarios.
to promote
That's
democracy.
one of the reasons why I proposed that for this year's test. It includes a rising interest rate environment for the trading book. Yeah. I think multiple scenarios makes a ton of sense and should be done.
You know, that saying, they can get it right 100 times. You got to get it right once. So you got one crack at it. So thank you very much.
Gentleman's time has expired. We now recognize the ranking member of the Digital Assets
Biden is speaking. That was the headline.
For 5 minutes.
Thank you. As you know, 12 years ago during Dodd-Frank, a number of us put a lot of effort into specifically authorizing U.S. bank regulators to put contingent capital requirements into the capital stack of large banks. These can sort of be thought of as a sort of privately funded insurance policies that large banks are forced to carry that pays out if a bank gets into trouble and automatically injects capital into a struggling but not yet failed bank. Now, for the last 12 years, U.S. bank regulators have completely ignored this authorization from Congress.
But SPY's working its way up here. You're actually very close to setting a new high now.
But in the last 12 years, European bank regulators
so we've recovered it. I mean, that's 14 points.
Contingent
it took you almost like 2 hours, though.
And so now I believe that we have a lot to learn about two side-by-side bank failures.
We're up pretty much
since Silicon Valley Bank, a large bank by some measure, but with total assets less than 1% of U.S. GDP, and Credit Suisse with total assets greater than 100% of Swiss GDP, too big to fail by any metric. Now, when a couple of weekends back, the U.S. banking regulators tried to find someone to buy SVB, they failed. The result was potential systemic risk and emergency intervention that has, by regulators, that's risked abandonment of a lot of market discipline and market chaos. And the Deposit Insurance Fund and eventually banks and their customers must take the hit. But when Swiss regulators tried to find a partner to buy out Credit Suisse, they succeeded. And at this point, it looks likely that the Swiss taxpayer and their DIF will be off the hook for this giant bank's failure. And the difference was contingent capital. Because when Credit Suisse got into serious trouble, their contingent capital triggered and injected $17 billion of equity into Credit Suisse. This was absolutely essential to finding a buyer for Credit Suisse, since, as you know, Credit Suisse was bought for about $3 billion, but only after the $17 billion of capital injection by their contingent capital instruments. So the Swiss contingent capital succeeded at its two design objectives. First, to prevent contagion, and secondly, to keep the Swiss taxpayer off the hook for the failure of a truly giant bank. Now, if Silicon Valley Bank had been forced to carry an appropriate amount of contingent capital, then capital would have been automatically injected sometime probably Friday at the latest. And it was very likely that a buyer could have been found over the weekend as well. And we would not be having this hearing today. In fact, it's possible that they would not have gotten in trouble in the first place, since Silicon Valley Bank would have had to answer not only to the regulators, but to the bond markets for their risky practices. When they went through their gigantic growth spurt, they would have had to issue a lot of contingent capital instruments, and I'm pretty confident that one of the wizards in the bond market would have said, this is interesting. This bank is, has very flighty deposits and essentially no risk management in place. Maybe we should charge a pretty big risk premium, and the markets might have detected that. So my question is this, Vice Chair Barr, as part of your holistic review of bank capital requirements, will you commit to finally seriously considering contingent capital requirements in the capital stacks of large banks?
Thank you very much for your question, and I very much appreciated our conversations over the years on this very question of contingent capital instruments. Both the FDIC and we have issued an advance notice of proposed rulemaking of a different type of contingent instrument, a gone concern capital instrument that would be required for large banks. But I think it does make sense to consider alternative options, and I'd be happy to continue the conversations with you about that.
Okay, and I would specifically appreciate it if your analysis included a counterfactual analysis of how much better off we would have been if regulators had listened to Congress and included contingent capital requirements into the capital stacks of these banks. Because I think there's a lot to be learned from just the counterfactual analysis. I'd like to just close out by finishing up a little bit with questions about the non-responsiveness of SVB management to the early warnings they got. Is there leverage that we can provide you? You know, an obvious one is to say all of these matters requiring immediate attention and so on are private. And what, for example, if they had to become public after 60 days if they were not resolved? Would that have lit a fire under the chair of the management? Are there other things? For example, you could say any management that had an ongoing a pending MR, matters requiring immediate attention, we'd simply put all the bonuses in escrow. That would almost certainly get their attention. So are there, if you could include these sort of ideas, I'd appreciate it.
If you'd submit for the record, Mr. Grunberg, Mr. Barr. Now recognize Mr. Emmer of Minnesota for 5 minutes.
Thank you, Chairman McHenry. Thanks for holding this important hearing today. The collapse of 3 regional banks over the course of 2 weeks is directly related to failed Democrat policies. Record inflation as a result of reckless government spending led to historic interest rates that banks were not ready to manage. It appears financial regulators were not appropriately communicating financial risks of the high-rate economy with banks in their supervisory capacity, and this administration's political attack, quite frankly, from the highest levels of our government on the digital asset industry, which, by the way, had nothing to do with causing the runs, sparked fear, leading to bank runs at Silvergate, Silicon Valley Bank,
Meta's at the high.
and apparently Signature, bringing these core issues plaguing our economy and the broader banking sector to the surface. Let's not be fooled. Providing financial services to legal businesses in the U.S. should not be risky. But this past month has proven that the mismanagement of our monetary policy has apparently made it risky to put dollars in a bank. Mr. Grunberg, will the FDIC sell off Signature's deposits from digital asset businesses? Yes or no?
We're returning those deposits to the depositors, Congressman.
So, okay. Does the FDIC plan to sell the intellectual property for Signet?
I believe that's already been sold out of the Bridge Institution, Congressman.
All right. We would like to see that information. Will you commit that a bank that buys Signet will be able to use it to facilitate 24/7 access to the banking system for digital asset companies?
I'm happy to look into that. I don't know who the buyer was, but be glad to look into it and follow up with you in regard.
You're not going to block the buyer from doing 24/7
likely to
banking
exhaust
for digital asset
extraordinary
companies.
measures
Is that
by
correct?
mid-August.
If that's the nature of the acquisition.
So we've burned a month. That's for the debt
And will you
ceiling?
commit that a bank that buys Signet, or the bank that did, will be able to onboard new digital asset customers?
Again, I'd like to look into the transaction, but I'd be glad to follow up with you in regard to it.
When the FDIC sold off Silicon Valley Bank's deposits to First Citizens, did that include deposits from any digital asset firms or VCs in the digital asset space?
I believe all of the deposits from the failed Silicon Valley Bank were transferred to First Citizens.
Including the digital?
All of them, yes.
Were all of SVB's deposits from digital asset businesses, again, transferred to Citizens? That's what you're saying?
My understanding, First Citizens assumed all the deposits of the failed.
Has the FDIC ever communicated implicitly or explicitly, sir, to any banks that their supervision will be more onerous in any way if they take on new or maintain existing digital asset clients?
No.
Thank you. The FDIC estimates that resolving Signature Bank is going to lead to a $2.5 billion loss to the Deposit Insurance Fund, and resolving Silicon Valley will lead to a $20 billion loss to the Deposit Insurance Fund. When the FDIC sold Signature, it had the effect of closing Signet, which is an innovative payment system that facilitated 24/7 access to banking services. Frankly, a private sector innovation that apparently will be rivaled by FedNow. Signet is intellectual property that has significant value, so I do want to see that sale. Chairman Grunberg, when managing the resolution of any failed bank, the FDIC is statutorily required to do so using the least costly resolution option, thereby minimizing losses to the Deposit Insurance Fund, which is replenished by the banks through fees that are indirectly passed on to everyday Americans with bank accounts. I'm concerned that the FDIC has deviated from its statutory requirement to minimize costs here and instead has opted to pursue a lazy and destructive regulatory campaign to, in fact, oust digital asset opportunities from the United States. No bank is designed to survive manufactured bank runs, and in analyzing what caused this fiasco in the first place, many signs point right back to you and the FDIC, this administration, and certain reckless Democrat senators. I want to thank you again for coming today, and I appreciate a response to my March 15th letter, because to me it's still clear that we have a lot of questions that need answers. And with that, Mr. Chair, I yield back.
Gentleman yields back. The ranking member of the National Security Subcommittee, Mrs. Beatty, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Ranking Chair. Mr. Grunberg, we know that both SVB and Signature had very high proportions of uninsured deposits, somewhere between 90 and 95%. Can you share with us or explain to us what the typical ratio is for your average bank and how this factor played into the bank run that we witnessed on March 9th?
Thank you, Congresswoman. It's an important question. I think fair to say these two institutions were outliers in terms of their exceptional concentration of uninsured deposits, both around 90%. In the regional bank space, between 100 and 5 or 600 billion, I think it's generally in the 40% category. So these two institutions were outliers, and it was a significant part of the liquidity risk on their balance sheets.
And would you say that this high proportion of uninsured deposits left the bank more susceptible to this run?
Yes, it was, I think.
Let me also have a follow-up question to you. We've heard many ideas proposed about modifying the $250,000, and we know in, I think it was 2008 with the Emergency Economic Stabilization Act, we went from 100,000 to 250,000. So, for example, what about temporarily insuring all deposits, increasing a limit to 500,000 or $1 million, ensuring all deposits for small and mid-sized firms, or limiting it for the largest financial institutions? What are your thoughts on some of these proposals?
Well, as you understand, Congresswoman, the coverage for deposit insurance is statutorily set at $250,000 per account. So to adjust it would require legislative change. And as I indicated earlier, the FDIC is undertaking a comprehensive review of our deposit insurance system, and we'll come back with a report that we'll release publicly outlining policy considerations for...
So is this one of them? And you can weigh in also, Mr. Barr or Ms. Lang, on, I mean, you're experts, you're testifying here on your opinion. I understand that it's statutory and requires it to come back here, and certainly, as you know, we've changed many things over the years in rooms like this. So to the public, I don't want you to think that this may be as far-fetched. We had large banks when we had too big to fail, and we're certainly more than $50 billion now as we had legislative ways to change it. So what are your thoughts on increasing? That's one of the number one things I'm getting from constituents. You know, it was just in 2008, it was 100,000.
No, I'm still
here. We
here.
made the change then through an emergency
watching
act.
Quietly as the market does nothing. I felt kind of bad just clowning on him every 5 minutes.
The FDIC,
like, bro, you ever heard this chick talking like 17 hours?
Is doing
this is her third answer.
Of the deposit.
Would you support an increase?
I would support a study and proposals for reform if needed. The rise in uninsured deposits.
How long did you know about the bank
over the years?
Okay, only because my time is running out. Mr. Barr, and the next question is going to be for you.
We'd be happy to work with you on thinking through that. I think taking a step back, the important thing is that our banking system is sound and resilient. The actions the regulators took demonstrate that deposits are safe.
Good time to unmute. Sound and resilient, baby. Ooh.
Okay, I'm glad you said sound and resilient. In your opening testimony, you said the same thing, that you thought banking was sound. You also used words like strengthening the public confidence, or paraphrasing it. I'm from Ohio, and the public pension fund nationwide, as you know, lost millions of dollars that were invested in SVB and Signature. In my home state of Ohio, the state teachers' retirement system took the biggest hit, with some $27 million that was invested in SVB, representing, I know, maybe only 3 or 4% of the fund's total portfolio.
Austin says
but I'm
China
concerned about reports that the CEO of SVB unloaded millions of stock in the days and weeks leading to the collapse. I know that we're expecting to a report on the Fed's investigation of SVB in May, but is there anything you can share today regarding the bank's executive management? And okay, thank you, and thank you, Mr. Chairman.
If the panel would respond in writing to Mrs. Beatty. We'll now recognize the gentleman from Oklahoma, Mr. Lucas, for 5 minutes.
Thank you, Mr. Chairman, for holding this important hearing. And Chairman,
Treasury dude,
Bloomberg,
he's kind of
I'd
built.
like to discuss, and I know my colleague,
FDIC dude, he's kind of big.
Chairman of the Small Business
I bet he used to work out back in the day.
Focused on this before, but I'd like to discuss the special assessment fee that will be used to cover the losses from the uninsured deposits. You've explained the proposed rulemaking for the special assessment will occur in May of this year. And while you're thinking about that, be thinking about a discussion of the flexibility the FDIC has during the rulemaking to ensure that our small community banks don't disproportionately carry the burden.
Welcome, my friend.
Being one of the older members of this committee, I've been around long enough to have observed firsthand several banking crises. 1982, I was getting ready for my final semester at Oklahoma State when a little institution in Oklahoma City called Penn Square went down and took First Continental Illinois of Chicago down with it, a bank from the, 1840s or 50s. Took First Seattle down with it.
These are the OG bank collapses.
Now, FDIC and the regulators responded in the appropriate fashion and addressed that. But it was a combination of collapse in the oil and gas industry and in production agriculture. And the chain reaction in my great state was the slaughter
of community banks. Not 1840.
The slaughter. There was no quarter given to those folks. They were locked up, chopped up, sold out. The legislature met in the middle of the night to authorize not just one town, one physical location, one charter banking, but we went to branch banking because it was all falling down on us. The people who I represent were brand new, young banking men and women 40 years ago when they saw how community banks were handled in my state. They weren't Penn Square. They weren't First Continental. They weren't Seafirst. They're now my most senior bankers 40 years later. And they're looking at this situation and they're saying to me, we've been the least problematic of any sector in the financial services industry for decades to the regulators and the FDIC. But yet, in every crisis since then, we've been kind of the orphans. And this time they're saying, we were wiped out as an industry 40 years ago, but now we're going to get a special assessment to pay to fund for the mistakes of the most sophisticated institutions, the biggest institutions. Can you tell me how it's possible when this special assessment fee process is completed that my community bankers aren't going to wind up disproportionately paying for the mistakes and the falderall of the biggest institutions in the country? Or are they just be prepared to be the goat one more time?
Critically important question, Congressman, keenly sensitive to it.
I don't know anything about
We have discretion under the law. We have to act pursuant to a notice and comment rulemaking. Anything we put out will be subject to public comment, but we have discretion, as I indicated earlier, and will repeat, we'll be keenly sensitive to the impact on community. I don't want to front run my board. We're going to have to do a notice and comment rulemaking, but I hear you and keenly sensitive to the point you raised.
I would just offer once again the observation. The perspective of my community bankers is, if you're big enough, we've now given you an emphatic protection.
This is enough. You'll hit a high.
It appears with what we've done in the last few months, if you're in that intermediate range,
all getting
we're going to
candles,
protect
Apple
you.
and Microsoft.
But if you're the little bankers, the little guys and ladies out there meeting the day-to-day capital needs, you're going to be the one to pick up the bill. And I kind of appreciate their point, having lived through 40 years of these experiences in my great state. Shifting to another question. As has been discussed today, Treasury approved the systematic risk designation on March 12th upon the recommendation of the Federal Reserve and FDIC. I want to discuss for a little bit the process leading up to this. I think it's important that we have a clear picture of how the regulators made this designation, and not just in theory, but in practice. So,
now, EPR,
Vice
I
Chair
think
Barr,
one more day for dividend
would you
today?
provide insight into which regulator acted first in proposing that uninsured deposits be protected? These are the kind of questions I'm getting back home.
Yeah, today's the last day.
And while you're thinking about that, were there discussions between the FDIC and Fed prior to the respective board meetings?
I see my time has expired, but I'm happy to follow up with you.
You can go ahead and answer it.
I bet somebody will
really
give
heightened
time.
right now and interested. Plus, we're close to getting a little break here, so
I'm happy to. So,
please, thank you.
We were in conversations, all three agencies,
later.
over the course of that weekend, trying to think through what the potential ramifications might be in the financial system. It was a very difficult judgment to make. It involves, of course, information we're getting from around the system, from hearing from community bankers.
If the gentleman will give a timeline of those conversations between the two agencies and the two principals of the FDIC and the Fed for a written statement. Gentleman's time has expired. We'll now go to Mr. Vargas of California for 5 minutes.
Thank you very much, Mr. Chairman, the ranking member. I guess I'm
Abbott
looking at this a little bit
buy
differently.
UBS price target 117.
We could have been here today looking at the collapse of hundreds of banks. We could have been here today trying to figure out how to stop the contagion. But instead, we're here looking at significant banks with significant problems. And I think that that's important. But I think what's more important is that everyone worked together. We certainly have our ideological differences, and they're significant. I mean, I heard right away it was Biden's fault. You know, from some
he's like, good job, everybody. You know, this could have been worse.
It was Trump's fault.
It could have been worse.
But the truth of the matter is that, you know, we're
Ted
out of
Lasso
our
ass.
ideological silos and
guy.
trying to figure out practical solutions. I want to thank the chair. I think the chair worked very, very hard on this, and I think that he probably was a little uncomfortable with his ideologues on his side, maybe, but I think he did a fabulous job, and I want to thank him publicly. I think the ranking member did the same. I think they worked very, very closely together to try to figure out, you know, what can we do as a legislature to make sure that there's not contagion. I want to thank all of you. I think all of you acted very honorably.
Carlisle joined Apollo
nobly
for
as you should have, to
Arconic
try
sale.
to figure out what's the solution
ARNC.
here. And again, I appreciate that deeply. Again, we could be here talking about a disaster, an unmitigated disaster. I was worried about that. I mean, I worry about these things, and we're not. Instead, we're looking at these important issues. So now that we are, and I got that off my chest, I do want to ask.
Now he's going to rip them.
You, Mr. Barr, you were quoted quite extensively for saying, let me get it correctly here. I don't want to put words in your mouth. To begin, SVB's failure is a textbook case of mismanagement. Was that a correct quote?
Yes.
Well, then why, the natural question is, to begin, why wasn't there a textbook case of enforcement?
I think that's a good question, one we're exploring very much. The supervisors looking at the bank identified the problems with the bank. And the question is, did they identify them with enough level of urgency? Did they escalate appropriately? And I think that's what is an incredibly fair question we're looking at carefully. I expect that we're going to find that we need to have more of an emphasis on supervisors using the tools they have more promptly and putting in mitigants in place more promptly when they see problems at banks that they're supervising.
Yeah, in fact, they had a number of MRAs, MRIAs, I guess, and it didn't seem like you did anything other than write a letter. I mean, it didn't seem like there was any enforcement. I mean, where was the stick?
Yes, I think that's exactly the right question. Normally, in the supervisory process, when a supervisor issues an MRA or an MRIA, the bank promptly takes care of those matters. In this case, obviously, it didn't take care of them in such a way that it prevented
It seems like they blew you off. I mean, it seems like they blew you guys off and you didn't do anything. I mean, that's what it seems like for reading all this information. I can tell you, maybe I'm wrong, but that's what it sounds like.
Yeah, I think that, again, we're looking at the whole supervisory record. I share your concern very much. I think it's something we're going to have to explore both
Netflix
in terms of the way the bank responded and
Netflix
the bank's
actually moving decent
for its failure, but also
Netflix
should regulators have used tools to escalate more promptly and quickly? I think that's a completely fair question.
Okay. Chairman Bloomberg, in your hearing before the Senate Banking Committee, you testified that the collapse of SVB and Signature
Netflix
Bank demonstrate the implications that banks with assets over $100 billion can have financial stability issues. I think that's what you were quoted. Additionally, you stated that the prudential regulation of these institutions merits serious attention, particularly for capital liquidity and interest rates hike. Can you please elaborate more about what prudential regulations need to be reviewed? What steps can we take to mitigate the potential for similar bank failures?
Thank you, Congressman. Look, I think we should start with supervision and how we supervise liquidity risk. And two big things in this episode was liquidity risk from concentration of uninsured deposits and the accumulation of unrealized losses on the balance sheets of our institutions.
Dude, you're like 2
both of which
points
go to
high.
fundamental management of interest rate risk, which is
right. But the size, I'm talking about the size of the bank. I think that's significant.
And I think it applies to all institutions.
Million by
I
hour
think in
3.
the past,
it started off hot,
looked
but
at
that's
these
it.
Regional banks and smaller regional banks, and in terms of their prudential regulation, have treated them somewhat more lightly than the larger institutions.
My time is
in light of this episode, we need to take a close look at that.
Thank you.
That was the point I was trying to make.
Well, with the wind-up that Mr. Vargas gave, I just want to give him like 10 more minutes, so thank you. With that, we'll now recognize Mr. Loudermilk of Georgia for 5 minutes.
Well, thank you, Mr. Chairman. Thank you all for being here. I know you've been spending a good bit of time on
Iova
Capitol
just
Hill,
had an update,
we
but
appreciate
their
you being
PDUFA
here.
isn't till November 24th.
One of the concerns that I've received from a lot of my smaller institutions, smaller banks, is with the extension of insuring deposits across the board, they felt vulnerable in that larger institutions may decide to pull deposits that they have in the smaller institutions because then they would be covered. Under Secretary Lang, I wanted to get a little clarity on what seems like is conflicting accounts from Secretary Yellen regarding deposit insurance. Now, on Tuesday, March 21st, the Secretary suggested deposits would be insured.
High.
She said, quote, if smaller institutions suffer deposit runs
Schwab is moving
that
up
pose
too.
the risk of contagion.
Yeah, Schwab's really running. They were down a lot
that was
earlier.
End quote. Then during her testimony to the Senate Finance Committee the very next day, the Secretary said she was not considering, quote, blanket insurance or guarantees of deposits. But then a day later, she said that Treasury, quote, would be prepared to take additional actions to protect depositors if warranted. Could you clarify the Department of Treasury's position regarding deposit insurance?
Yes, thank you, Congressman.
This could
As
move
Secretary
banks.
Yellen has said, we have used tools to prevent contagion in the banking system and have reflected a commitment to ensure that all deposits are safe. And that means we would use the tools again, if needed, to ensure that Americans' deposits are safe.
So your answer
So what she said was that she said
yes,
what she said
you would
and
include smaller institutions, smaller banks, community banks, or, I mean, I'm a little confused.
If conditions warranted, deposits that smaller institutions could pose a risk of contagion to the broader system, we would absolutely use the tools.
So I guess the question would be then, what is that condition? If it starts with one community bank, then that would be a trigger, or do you have more definition of what would be the condition?
I think it's very difficult to just make decisions on the hypothetical, but in this environment that we made the systemic risk determinations based on unanimous approvals from the FDIC and the Fed, we determined that the risk of contagion in the banking system was very high.
So with that and the action of extending it to larger institutions,
chips are starting to move.
Regional
Intel's on the
banks
high,
and
Texas
then
Instruments.
smaller institutions, do you have concerns that regulators may be creating moral hazard across the entire banking system?
I think
HKD
we are concerned
vertical.
with addressing the current situation that we are facing. We think the system has stabilized. We have information and evidence that deposits have stabilized.
Intel's running big.
We will need to address reforms going forward to address concerns about moral hazard.
Okay. And I agree with you. I think that we're stable at this point. But as we've seen already, things can turn around in a 24-hour period, right? And I am one of those that, from raising
Schwab
3
keeps
young
running.
children and now with 5 grandchildren, consequences matter in future behavior, and we can't ignore that going forward. Last question.
Yeah, I don't know what's going on with HKD.
Why
They're
did
up
the
30%.
Secretary's position appear to change regarding the extending insurance to various or to smaller institutions? Why did she change her position between the 21st and 23rd? Were there internal discussions going on between the Secretary and the President or other prudential regulators that caused the shift?
I'm not aware of any
HKD's a China stock.
Well, I appreciate that,
Or Hong
Mr.
Kong,
Chair.
technically.
No further questions at this time, and I yield back.
Mr. Caston of Illinois is recognized for 5 minutes, and after this end of the series, let me restate this. After these 5 minutes, we'll give the panel a little 5-minute break, stretch your legs, then we'll come back in and we'll finish with questioning.
I'm down. I was just doing some leg workouts, so
then
I should have reminded y'all.
Be able to get through this final segment, but I do think it's humane to actually give a panel this bit of break, and frankly, I need one as well. So, Mr. Caston, 5 minutes.
I'd like to thank the chairman for putting me on the inhumane end of that transaction. Vice Chair Barr, I'm trying to understand the calendar, and I've got just 4 or 5 questions for you, and I want to walk through the calendar as I understand it. If you disagree with anything I've got in the calendar, let me know. But otherwise, I'll just try to run through quickly to get to the questions. January 2019, SVB is notified by the Fed of deficient risk management. A year later, they're notified that their risk management is not up to large bank standards. About 2 years after that, April 22 to 23, SVB no longer has a risk officer, but in their 2023 proxy statements, they say that they have doubled the number of risk meetings from 9 to 18. Given the prior concerns from the Fed, did the Fed participate in or otherwise have visibility into any of those risk meetings at SVB in that window?
The calendar you described, the dates didn't. They are some of them in the future. I think that we might need to look at the calendar reconciliation together, or maybe I misheard.
No, I'm just going up to January of this year was the last date. From April of 22 to January of 23, there was no risk officer, but a doubled frequency. Did the Fed participate in any of those risk meetings within SVB during that 9-month period?
I don't have yet the full supervisory record, so I'm not able to answer the question, but we will have that information in the May 1st.
Okay. Do you know if they were at any time cited for violating Section 165 of Dodd-Frank that requires banks over $50 billion to have a risk officer for the 9-month period when they did not?
The deficiency downgrade that occurred in the summer of 2022 focused on a wide range of risk management practices at the firm and found them to be deficient.
Okay. Moving back to the calendar, Q3 of 2022, their 10Q showed that their held-to-security bonds were $15.9 billion undervalued relative to mark-to-market, and they had $15.8 billion in equity at the time. 3 months later, their 10K for the year showed a slight improvement. They only had a $15.1 billion overvaluation of their bonds and $16.3 billion in equity. Was it perceived by the Fed or by management that they were in an improved risk situation at the end of 2023 than they were 3 months earlier?
I don't know the answer to the question with respect to how the management of the firm were viewing the situation. The supervisors were telling the firm at that time that basically their risk models were divorced from reality, that the models suggested they'd earn more money when they were losing more money.
Okay, I'm glad to hear that, because now I want to move to 2023 and sort of what happened up to March 8th. January 26, 2023, about 3 weeks after they finally got a risk officer back, CEO Becker announced that he was going to execute $3.6 million in stock sales. February 22nd, he executed those sales. March 8th of 2023, he announced a sale of all of their available-to-sell equity portfolio to Goldman. The same day was disclosed the $1.8 billion loss of a security sale, apparently also to Goldman. Heads Goldman wins, tails Goldman wins. And, of course, the next day, a $42 billion withdrawal. Do you have any visibility? When was the security sale and or the equity sale to Goldman process initiated? In other words, when was it announced? When internally was the company initiating the process to secure additional cash from those two Goldman processes?
I do not know the answer to that question.
I imagine you probably also don't know whether the January 26th sale was cleared with their risk officer, who had been on board for 3 weeks when the January 26th announcement was.
I don't yet have full visibility into that transaction. I hope that we'll be able to get as much detail as we can as part of our review.
Okay. Do you know, if I'm Becker, I'm obviously in a lot of trouble. You've got a deposit base that is extremely well-heeled and very sophisticated. Was there any outreach to the depositors during this period to ask them either to provide equity infusions to the bank or other forms of capital prior to the run of the bank?
I do not know.
Last question. In the exchange with Mr. Scott, you had indicated that and I think I got this right, that the Board of Governors' concerns about SVB were really heightened in mid-February?
What I said is that the staff presented to the Federal Reserve Board of Governors in mid-February on interest rate risk generally, and one of the firms they highlighted as having interest rate risk was Silicon Valley Bank. And the staff indicated that they were doing a further horizontal review and would come back with further results of that review.
Okay, so is it your position that the trigger for the heightened security was simply interest rate movement, or was it anything else about this calendar that triggered that heightened concern?
I didn't describe it as heightened concern. Basically, the staff were presenting on interest rate broadly, and the firm they singled out as having interest rate risk was Silicon Valley Bank, and they discussed the horizontal review they were doing and the fact they'd come back with further information after that horizontal review.
Okay. Thank you. I yield back.
Is he supervision? Okay. Okay. We'll now stand in recess. Committee stands in recess for 5 minutes.
Okay, so everybody take a break for 5 minutes. Look away from your screen. Okay, stretch your legs a little bit. Then we'll return. Look at fake Fauci. Dude, he's huge. He's built like a fullback. Low key. I'm sorry. I love watching these congressional things, though. You have no idea. For somebody with a receding hairline, all of these weak hairlines helps my confidence a lot. So, it's good. It's good. So tell me when they come back. I will keep it muted. there was a lot of talk about regulation. So they were talking about what sort of laws. I mean, the opening statement by Michael Barr, he was saying we need capital restrictions. We got to go back on these banks. We need to implement this. We got to implement that. And 2 or 3 people brought it up. They're just saying, why would you implement more laws if clearly the laws weren't the problem and it was literally just you guys not following up with it? So very interesting. Even that last question there on Yellen and why she removed this statement and then changed it, but the lady just repeated what Yellen said. But it's not really not anything too crazy. I think we're still reacting to what we were reacting to today. Again, stocks are up because of China last night, and then you got tech kind of catching a bid here along with everything. Right now, during all of that, like at one point, regional banks, they did go red. They were up over 1%. XLF and the big banks, they are doing good. And then we briefly went negative, and then the bonds, they briefly went positive. But other than that, we haven't really done much. We have not done much, and hopefully, I don't know, do you guys feel it? How does this market feel for you guys? Because it's like, I don't know. We had a very big gap up. I'm sure it was kind of surprising, but it's just like, look at the movements today. The range is all within 17 points from gapping up. I don't know. How do you feel? Because it feels like I kind of want to take a nap. I'm pretty sore listening just an hour of the bank. I'm like, but it's kind of what we said to expect. It's feels suspicious, feels coiled. Ooh, some people say suspicious, some people say coiling. I don't trust it. We need to pry these puts from my cold broke hands. Okay, loaded on UNG today. Lots of naps. My brain hurts. Your brain shouldn't hurt. I mean, maybe be sleepy. How come no one's asking, are there other banks that are – somebody did ask them. I think right when you put that in the chat, they got the question, but they're pretty much saying that it's not the problem. It's like, it's funny because anytime that question has came up, it's like it's came up a couple of times, but then it balances between either bringing up the bond losses or talking about the bank run that was started by social media. Okay, it looks like we need an automatic mechanism because of social media bank run. Okay. So they have talked about it a little bit, but not anything in depth. And quite frankly, I mean, nobody has really addressed it. And like, remember, there's apparently a couple of people who have MRIs, or what is it? Matters requiring MRIA, immediate attention, but they kind of don't want to talk about it. It's not like the conversation of that just gets divulged into 5 other different topics and then turns into the weird blame game. So, yeah. Check for nat gas moves. Nothing here. I mean, right now, just oil, and even oil inventories today have been going lower. I think even with gas, the last 6 weeks, we've watched supplies of oil or inventories drop a big amount. Raul, he might show up. I mean, it's going to be a weird day. I mean, just every day so far. And like I said on the watch list, I hope you guys watched it, but I really think the next update here will be with the PC on Friday, and that should determine really what the market is feeling. I think that's when we're going to know, real risks or not, and then that'll have people either freak out due to inflation or not. Moving up. Less inventory is good to know. Yeah, and Daniel, you were asking about this level because I brought it up the other day. It's not this level where the market goes crazy. I even brought this up in the morning because this was such a big gap up. This is the level I was talking about, like 402.21, and pretty much the high of Jerome Powell. So if the market can work its way up past the Jerome Powell highs, the market's going to borderline, they're going to feel good because day after we were interpreting it and they're like, yeah, Powell's dovish. It's not that bad. And then right now, I mean, the low of the day is the high of Thursday. And then right now you are like trading within the first 5 minutes of the Fed release on that day last Wednesday. Sorry. Manu, what's that? Intel again, man. So Micron and a couple of the other chip bankers chilled out. I know NVIDIA is working its way up. I might want to short it if it goes above 270, but I'm trying my best to fight it. Maybe I should go take a nap so I don't go and short it. SE, that's another one. Again, a lot of chip tech space is doing very good, but especially the chips after stupid Micron. I still can't even believe Micron's up 6.5 right now. ASML was running, and then even the biotechs too, or not biotechs, solar, ENVX, Enphase, they did very good. And then MPW in real estate is actually the best on the day, up almost 2%. I thought SE was chips. Oh, it's South Korean Amazon. But then MPW, why they're up today, they sold off one of their properties to some Australian company. MU first. Even now, I still can't believe it. Like, the way that everybody really chose to focus on the positive with Micron. So there's two headlines. One set of analysts and one set of market watchers, they were calling Micron. They said it was good. They said it looks like the chip inventory problems are over. They said it shows signs of hope that the worst of the chips we've dealt with. And then the other half is just like, it could have been worse. It could have been a lot worse. And they're saying, it wasn't as bad as feared, but I thought it was pretty abysmal. Again, I know their operating margin ended up being higher than gross margin, but all in all, just a shit show, in my opinion. It shows resilience. It really does. It really does. Honestly, we can't even fight sounding resilient because there's so many things that are sounding resilient. You know what I'm saying? My fingernails are thicker than last week is what's happening. Oh, dude, that reminded me. I got a public service announcement. So you remember how I told y'all to take like vitamins to help your congressional hairlines and how like it'll help you out? You guys remember that? And I was like, I told you about them vitamins, and I was like, wow, like I saw like a 10% increase. Yeah. Well, it's been about a month, and I've now discovered side effects. Okay? I have random hair growing randomly. I got like hairs growing out of my cheek now. Like straight up, like the top of my cheek. I got like 10 hairs that didn't exist there prior. Right? I'm getting like it's in between my chest and my neck. I'm just getting like random like hairs just popping out, bro. Nah, it's hella weird now. And I'm like, why now like it helped my beard out. I was like, that's pretty cool. I'm not being funny. I'm not trying to be funny right now. What the fuck? I'm trying to warn the people. This is not a joke, dog. This is a public service announcement. I didn't go through any FDA study for any of this. I didn't even get an emergency approval or not, bro. But like, I got straight up, it's like the highest part of my cheek. I got just random hairs popping out, and it's like the weirdest, like, it's just weird, man. So just be careful, okay? Just be careful. Just be careful out there if you don't want, like, if it'll help your hair. Your hair will be sound and resilient, but that's it. It's like a weird beard shape. I got hair growing on the side of my eyeballs. Like, it's so, I don't want to talk about it. I was just trying to help y'all out, man. Have I tried Propecia? Nah, I don't. Nah, I sound like Propel. I remember Propel was cool. You killing me today? That's good, man. I haven't said much today, actually, but that was just, I'm just genuinely concerned. I'm glad that y'all took it as seriously as I did. He was like, stop it, Josh. You're so funny. You're so funny. I'm like, bro, I look like Wolverine with a receding hairline. Like, I don't even know how I feel about that. Like, imagine Wolverine but I never seen Wolverine with a little Arab mullet with no hair on top. It's just weird. But honestly, it's kind of intimidating. I guess I'm more intimidated by people with receding hairlines than not, because then they got nothing to lose at that point. My gym recovery is good though, I guess, for now. You're not insinuating I'm taking steroids, are you? Why do these meanings feel like semantics? It kind of is, and it's like also in a weird way. That's a very good comment. just because, like, you got to realize these meetings are part of investor confidence. Like, these meetings actually help calm the situation down, as weird as it sounds. Because if you think about it, anytime we've heard any statements or anybody talk about it, it came alongside, discussions of stimulus. Now we're getting to hear about it. They're going back and forth, and it makes it look like something is being done. At the very least, that they're meeting up with each other, and they're like, maybe they're handling the problem. Just like a good example is GameStop. If you remember, it took them 2 weeks to go and get a congressional meeting set up, and then they start discussing it, and then things kind of die down afterwards. But there was some good points brought up here, so we'll see. Do my sideburns and hair connect? What do you mean? I think they do. I'm not too sure. Short the bounce. Coin is dropping there. I'd check Mara, Riot. I'd watch the chip makers, though. Again, chip makers are hooking up today. Intel is up 5%. That doesn't happen. And no, I did not, Colin. Quick PHILO before Congress comes back. Did you check the member post? I got a good PHILO for today. I hope we don't have anything that delays our schedule, but I got a good one for you. I'm still holding EBS. I mean, we almost went break even in the morning, and then it just sold off, but it's holding up decent. Like I told you guys, it wasn't going to be a Rita. PHILO yesterday. I hope so, man. I hope that PHILO yesterday helped you today. I hope it got the ball rolling. You know what I'm saying? I hope it chilled you out. I hope it made you more productive. I hope you do not begin to try to add to and unravel that ball of yarn in your mind. It was a good PHILO. I'm excited some people got it, man, because it was all over the place. Don't worry, I got you another one. It's a good one, man. But I think that PHILO, I hope it's good enough to start the quarter. You know what I'm saying? Let's get this. Even then, the quarter hasn't even ended. I get ahead of myself. You know how I am. I'm really excited for another 3 months of fuckery in the market. Just get ready. It sucks because I don't think this next 3 months, I think it's going to be exciting because we're always exciting, but it's going to be annoying. So I hope you're ready. Again, I mean, these are probably our 3 slowest days of the year in a row. I'm telling you, like, even though today's like 1%, it's all because of the gap up in China. But like intraday, we have just like straight, just all the air left. Where's AMC? Well, again, the AMC rumor, it got disproved. They're down 5%, but in a weird way, it's like the lower AMC stock goes, the more likely they will get hooked up, it seems like. I think you could close the gap today, but I mean, if we kind of hold up this lack of range, that would be it'd be pretty big. But at one point, like, at the low of the day, to fill the gap, you were far. So you still would have needed another 30 points. Like, today's huge. Like, again, just another day of no bad bank news, and then the China stuff, and then global equities started going up. Like, everybody woke up like this was big. Again, 3 days now. Even if we bring up KRE or XLF, like, you haven't seen that since the start of all of this. So just take a look. I mean, 3 days of not dying. Again, every other day would be pop up, sell off hard, pop up, gap down, pop up, sell it off, pop up, go hit a new low. And now we're kind of like halted. So take it as you please. But this notion of the bank healing this week, I mean, it has been getting legs, but like I'm saying, it just doesn't feel. It doesn't feel like anything has changed. Like, the price action is not convincing that banks have calmed down, but it seems like the attitude and the extra fear is not holding up the same. That's what I was trying to explain yesterday, where it's like if you really like, I genuinely believe that if people felt a lot better, regional banks would be up another 10% if there really was calm. But the prices are low, but we're not freaking out. You're not moving 5%. Every one of these days on the regionals leading up until today, it was 5% up, 5% down, 5% down, 3% up, and then back down, and then 5% up, -2%. So like the last couple of days have been, very calm. Yeah, the bond market is still not pretty at all. I still stand by that, even looking at the, what's it called? The 2-year, 10-year spread. Let's take a look at that too right now. Good old 2-year, 10-year. And this is with that theory I gave you the other day. So uninversion, maybe a little bit, or pretty much steepening, inversion, and then we'll go back and forth. But the bonds are still in a precarious zone. Healthcare is getting whacked across the board. I think it's a lot of factors contributing to it, not to mention, like, leading into this, healthcare was already on a historical drop. So right before the bank crisis even started, healthcare stocks sold off 8 weeks in a row. That hasn't happened since like 2010 or something. That doesn't, 8 weeks in a row, I think is actually the record for healthcare being down consecutively. I think it's back on. Do you guys want to listen to it, or do you want to listen to me? I might take a nap if I put it back on. I don't know how much time they have. The hearing is muted. I don't know. Do you want to hear it? Will you like the video? Because I haven't had time to tell you to like the video today. You down to listen to it? I can freestyle over it if you want. Maybe we could make it fun. I feel bad clowning them all the time. I really do. Like, I felt like I went in on FDIC, bro. Like, I feel bad because, like, I kind of like him, but not really. No, mute it. Nah, don't play it. Turn it on. A lot of people want to hear it, it seems like. Yeah, what do you want to hear? Biden freestyle? Yo, listen, where my ice cream at? Yo, shout out to the environment. I'll keep it safe. And then I'll build back better every day. And then I'm going to say, okay, I give up.
As I think about what I've heard today, earlier, Al Green, I know it's not a quote of my mother, but it's a quote I heard often, is that it doesn't just have to be right, it has to look right. And so as I leave you, gentlemen and ladies,
my mom never told me that.
Afternoon, I would just say the American people are watching, and I think right now we have grave concerns about whether the regulatory process looks right.
Oh, 20
and so
Andrew.
I hope you take
Shelby
that to
too.
heart as you conduct the review.
I missed
of
a
what
couple
you're
of
doing.
those. God bless you.
My personal
God bless
conviction
you,
is
Shelby.
that you don't need new
What's
tools.
going on,
that
Andrew?
You need,
Andrew,
better
$20
craftsmen
to not
using
turn
those
it on?
tools
Oh,
to accomplish the purposes that.
Well, okay. He gave me $20 to mute it. Do I have a higher offer? Come on, bro. Like, I'm a businessman. Why you gonna do me like that? I'm going to listen to you now, but you just open up the door to some bidding right now. I got $20 and I play. Looking for a 25. Do I get a 25 to play? We're looking for a 25 to unmute. Can I get a 25? Looking for a 25 out there in the chat. We ain't got a 25. We got Andrew with a 20. Looking for the 20. We got a 20. Looking for a 25. Can we get a 25? 25. Looking for a 30. 25, 30, 30, 30. Oh, we don't got anybody coming in, but we got 12-month subscription by Jake Rico. Welcome. Looking for a 25. Do we got a 25? Anybody out there in the crowd? If you got a 25, going once, going twice for 25, 25, 25, 25, 25, 25. So, to Andrew in the back, we'll buy you 20 seconds. 20 seconds of mute. Nah, y'all didn't bid. Y'all posted in the chat. I'm just saying, Andrew, he straight up, he bid $19.99, not 20. Yeah, well, unfortunately, that's under our FDIC threshold. Oh, we got to turn it back on. Looking for a 25. I'm looking for a 30 to turn it off. Turn it off. We're going to be playing it up here. We got 25 by 10 Whitman. We're going to look for a $30. $30 to make a meal out here if you don't want to hear Congress. Oh, what do we got here? Oh, don't rap over a fun for $2. $2, but we're looking for a 30 out here. Now we got a 25. Anything out here? You got the lady who's never talked before talking. Oh, Mr. Gottenheimer out there speaking. Can we get a 35? Looking for a 30, 35, 35, 35. No, we ain't got a 35. We still got a 25 on there.
Payment system.
Sold.
How to think about fintech and digital assets. and this has now also become apparent.
Thanks. I'd like to work with you on that, if that's okay. I'll follow up. Thank you. Some members of Congress are using the failures of Silicon Valley's bank management and bank supervisors to criticize the bipartisan 2018 amendment to Dodd-Frank that ended the one-size-fits-all approach to bank regulation. Before Dodd-Frank, we had a system.
Okay, we got the 35. Looking for Shelby in the back with the 35. Can we get a 40 to play back on here? Looking for a 40 to play back on here. The S&P has not moved. This is the most action that we've had all day. Got a 35 from Shelby. Lady in the back over there. Lady in the back with 35. We're looking for a 40 out there. Anybody out in the chat right now? If you got a 40, you could put up the 40. You could put up the 40. We could play the unmute right now. Stock market is not moved. S&P is still at 1%, but right there, we're looking for the 30. Do we got the 30? If you got a 30, you better put it out right now. We're looking for a 35 to 40. We already got a 35 from Shelby in the back from the 10 women in 25, and then you got the Andrew out there in the 20, but we still need that $40 if you want to hear it back on it again. Woo! This is hard. Okay, Chad. Okay, we're having way too much fun.
Supervisory tools are equally, if not more, important. During a Senate Finance Committee hearing earlier this month, Treasury Secretary Yellen was asked about supervisory stress tests, and her response was, quote, supervisory stress tests focus on capital and not on liquidity. In these bank failures, liquidity played an important role. When Secretary Yellen was asked whether stress tests would expose management failures of banks, she replied that, quote, that's the purpose of supervision, concluding that supervision is critical. Vice Chair Barr, do you agree with comments made by Secretary Yellen that supervision is critical to identifying the failures of bank management? And there was clearly there was a huge hole in Fed supervision of SVB. Can you talk about that a little bit, please?
Oh, Andrew Freeman, we got the $99 out there. He is making the bid up there. It looks like we got a buyer who really does not want to hear this right now. We got a $100 bid out there from the 40 to the 35 right now. Looking for a $200 bid right now. I say we're going to have to increase the increments right now here. $200 is the only thing we can do from here on out now. We got $100. Andrew Freeman is committed to winning this auction right here now. Looking for 100, 105, 110, 120. Anything in between will not be qualified. Looking for 150 to 200. Do we got that out there? Anybody in the crowd right now? If you got it, money talks, big money talks. Everybody go and walk. Looking for 105, 105. No, we need that 200, 200, 200, 200, 200. Sold to Andrew Freeman in the back here. Okay, I guess y'all don't want. I'm down to not play it, honestly. I'll look out for any headlines. I guess so. I just got paid $200 to not. I don't know what to do, honestly. And I feel like some people are still gonna walk away unhappy. So this is a dilemma now. Yeah. Give Andrew his 20-pack. I mean, Andrew is really committed to this auction. That's it. Oh, man. Well, anyways, I don't know. The auctioneer told you nothing has moved, though. So we're going to have time. I mean, this would be a good time to answer any questions, though. Again, a lot of people have been bringing stuff out here. I'm very tempted to start speaking like an auctioneer now every time I keep going on here. But let me know. Let me know. Take your girl to dinner? Nah, I'm good. Thanks. Can I at least put on subtitles? Do they have subtitles? I don't think they have subtitles, bro. We could just I could make it up for you if you want. So what happens when you buy 0-day option? So when I buy an option, what I do is I buy the one out the money, and then I buy another one when it goes down instantly, because then I know if it hits the strike price, then I'll make all the money back right away. So if you do it a couple of times, what you're gonna learn is that over time, you'll lose all your money. Okay, we're going to the next question here. We got the congressman. We're waiting for the next question here. Please hold. Yeah, that's it. I don't know. Hey. Okay, so you said that if you eat celery, it won't make your pee smell like asparagus. Now, do the people of SVB know that? Or did you guys fail to oversee any of that in context of what we've been discussing? I got a report here. It says that if you bought VC for your My Player character, that would be FDIC insured. Is that accurate? Would you say? Is that something that? I don't know if I'm as good as at the bad lip readings. Come on, market, you got to do something. We're driving ourselves insane. Now does TikTok connect to the Wi-Fi? Apple says WWDC 23 is coming June 5th. 4010. Someone paid $40 to play it. Listen, man, I love this game. I get paid off of this game. I don't think we should play this game, though. I'm giving you, like, genuine advice. You know what I'm saying? It's like, you know, when I tell y'all on certain plays, like, you know, be careful with it. But, like, y'all really want to play this auctioneer game for the mute thing? Like, I'm telling you, this is not a fun game to play. This is not in a car. It's very expensive now. This has already gone up to $100 bid. And that's just, it's very aggressive, man. It's very aggressive. Unreal. Best channel in the world. God bless you. Yeah, let's just play a 0 day. Yeah, for real. You can stream this. I think it's on YouTube. I think CNBC has it. I mean, we could put it on here. Just give me a second. Let's see, though. I mean, we were just listening to it for a while there. You haven't even gotten a headline from it in a minute. We said, look at the title of your stream. Play it. Okay, well, look at the FDIC. They're called Federal Deposit Insurance Corporation, and then they're only insuring rich people. So I don't know. Okay. I think he's still talking about asparagus.
More promptly with respect to mitigation. But as I said, we've just started this review. I'm going to get a staff review back, and I want to really hear their expert judgment without any preconception about what they're going to come up with.
Did they jump to conclusions on having this as a systemic risk?
Pardon me?
Was it the right decision for the president to issue this, or I guess the board that voted on it, to issue this as or to deem this a systemic risk?
I think it was the correct judgment, sir. It was a very difficult judgment, I know, for everyone, but a unanimous Federal Reserve Board, unanimous board of the FDIC, and the Treasury Secretary agreed after consulting with the president. I think it was the right thing to do for the country. I think it saved a lot of small businesses and households, community banks, regional banks, from a kind of contagion that really could have been quite destabilizing. And we're now in a situation where I can say the banking system is sound and resilient. I think that was really the right thing to do.
Well, I sure hope so. What this has done is rattle the markets. was in the commercial real estate business, and banks that are loaning to commercial ventures are shook right now, particularly on the concentrations of credit on where they put their money, and particularly for that family that's put their life savings in an account that they thought was insured. What about what's your opinion on raising I get asked questions, the $250,000 insured limit?
Yeah, let me respond, if I may, Congressman. It seems to me that the decision to guarantee the deposits of these two institutions really raises that question up. As I indicated in my testimony, the FDIC is going to undertake a comprehensive review of our deposit insurance system. Certainly one of the things we'll look at and identify different options for consideration is the scope of coverage and whether we should increase coverage overall.
7-year bond auction.
I would like to see, I'm running out of time, I'd like to see those reports, if you could furnish that, when issued, as well as
so slightly higher.
If a rerun of what happened to these two banks happens again, what decisive role y'all would take
in travel
that you
centers
may
of
have
America.
not taken earlier. I yield back.
And the reportably up I made.
ARCO details financing for acquisition.
The gentleman yields.
The
gentleman from
proposal.
Massachusetts, Ms. Presley.
They're already bought out, so be careful.
Thank you, Chair McHenry, Ranking Member Waters, and all of our witnesses for joining us for this critical hearing. I know it's been a long morning, but that being said, I truly hope that this is the first and not the last hearing that we're going to have on these recent bank failures. Now, when SVB collapsed, in my office received urgent phone calls, texts, and letters from throughout our district from our constituents who were genuinely shocked and afraid for their future. Affordable housing residents unsure about the status of mortgages, tech companies not able to pay their employees, small businesses worried that they had lost most of their money. Now, while I'm glad we did avoid the worst possible scenario, Congress should consider SVB collapse a wake-up call and take action. After the 2008 financial crisis, Congress stepped up to enact Dodd-Frank, a comprehensive package of regulations in order to prevent bank failures and systemic risks that hurt the economy. However, in 2018, the Republican majority in Congress passed a deregulation bill that stripped away crucial requirements and got rid of enhanced credential standards. Donald Trump and Republicans, including some of my colleagues sitting in this very room, celebrated signing this dangerous piece of legislation. The 2018 deregulation law specifically made it easy for SVB and Signature Bank to engage in risky management practices with little to no oversight, and we must rightfully assign some of the responsibility for this bank turmoil to deregulation efforts. Vice Chair Barr, when Congress passed the deregulation bill in 2018, which was lobbied for by banks like SVB, is it fair to say that it reduced supervision requirements by the Fed for small and medium-sized banks?
The overall effect of the law was for the smallest banks to reduce regulatory burden, for banks within 50 to 100 billion in range to limit the Federal Reserve's discretion with respect to those institutions. But for institutions over 100 billion, the Federal Reserve retained discretion to do something different. It chose in 2019 to put in place a set of rules that I think had the effect overall of reducing supervision and regulation of such firms.
You guys forgot about that.
So it definitely did. Deregulation bill relaxed requirements for stress tests and resolution plans. The dangerous and irresponsible nature of this deregulation bill was completely predictable.
Too foul.
In no way was this turmoil inevitable. The then Federal Reserve Governor Brainard opposed it, as well as both of you, Vice Chair Barr and Chair Gruenberg. And yet here we are. In the aftermath of the collapse of SVB and Signature Bank, it's clear that the Republican deregulation bill shares the blame alongside Treasury, the Federal Reserve, and the FDIC due to the lapses in supervision and oversight. Chairman Gruenberg, for folks who are concerned about the future of small and medium-sized banks in this country, what assurances can you give them?
Well, Congresswoman, as a general matter, our small and medium-sized banks remain in good condition, including their liquidity. And I think the actions we took did help to stabilize the system. And I think, as I indicated, any expense by the Deposit Insurance Fund to cover uninsured depositors will be imposed through a special assessment on the industry, and we have discretion to tailor that assessment to the institutions that most directly benefit. So we're going to try to be thoughtful in this process.
Thank you, and I'm requesting that each of your agencies provide my office and this committee by May 1st a list of recommended regulations that need to be enacted to strengthen the banking industry and to prevent future failures. The story of SVB's collapse is the story of a Republican administration in cahoots with the banking industry to weaken our financial regulations, but it is also a story of regulators' failure to do their number one job, regulate banks. And since I'm accused of this often, I think I will close with a wokeism. The American public are tired of the super wealthy pocketing bonuses and leaving working class folks hiding the bag for their fiscal mismanagement. They're even more tired of Congress allowing them to do it. It is time to regulate. Thank you.
Amen.
And I yield.
You can't be clowning on her hair if your profile picture has the same hair.
Thank the chairman. Okay. Thank our witnesses. Appreciate your endurance here today and yesterday. And as I listened to my colleague ask questions, I know my constituents are tired of seeing Washington, D.C., Congress in particular, socialize risk and watch profits be privatized. But they're also tired of people that don't listen. So I think one of the things that, Mr. Barr, when I was listening to what you said yesterday and today, S2155 isn't the reason
you're
that
ripping
these banks failed. These banks were over $100 billion in assets, and therefore it's just a red herring. Isn't that accurate?
Apple's really, really moving here.
What I would say is that
Microsoft,
the Federal
all tech
Reserve's
just
rules
woke up all of a sudden.
issued in the wake of
Again, I think Apple and Microsoft are the biggest leaders right there.
In the wake of the legislation that were issued in 2019, they did have the effect of lowering supervisory and regulatory standards for firms, but the Federal Reserve retains the discretion to have different rules. And one of the things that I think would be my job going forward is to put in place rules that are appropriate for that size institution. We have the discretion to do that.
Yeah, thank you. And so obviously it wasn't the regulation per se that failed, it was the regulator that failed. And I want to understand the context in which that occurred. So over the past year and a half, we've seen a substantial increase in the federal funds rate. And during that span, are you aware if the Fed or other prudential regulators had conversations, not specific to Silicon Valley Bank, about the inevitable interest rate risk that presents?
Yes, that is a core topic in supervision. Supervisors were very focused on interest rate risk. It was an important part of what we highlighted in our fall supervision report.
Yeah, Meta's near the high.
Examiners
All
were
tech
given
is running right now.
this year extra training. Beginning last year, extra training on interest rate risk. So it is just a bread and butter supervisory issue. It's not some esoteric problem.
So in that sense, did Silicon Valley Bank's failure surprise you?
Its failure did surprise me. Its risk taking was excessive, but even then,
so back to 4017, if we get above here, that's like a 15 to 30 point or 20 point window.
Bank run that basically wiped out, $42 billion on Thursday afternoon, another $100 billion expected the next day. That would be 85% of its deposit base in a 24-hour period. That was shocking.
Yeah, so we're anxious to understand all the factors that drove that run on that particular bank. But we're also curious when you stated yesterday to Senator Kennedy that stress testing does not examine institutional risks precipitating from interest rate risk. And when we were on the conference call with Treasury, with Fed, with FDIC, with House and Senate Republicans and Democrats, I asked the question, and there's some complex model that the stress test involves. And said, well, if macroeconomic conditions and whatever kick in, well, I submit that the hold to maturity spread has to be considered, not just the available for sale risk because of the need for liquidity. Is that something that you're focused on as you conduct your review?
Yes, I think you're absolutely right that we need to look at both sides of the balance sheet. We need to look at the liability structure and the asset structure. And the whole point is to assess whether under certain conditions you can have more stress on the liability side that forces you to sell on the asset side. Those are interrelated.
Mr. Grunberg, do you share that concern about how we're looking at systemic risk?
Yes, I do, Congressman.
I would love to go into everything that I could on this, but Mr. Barr, on March 9th, you gave a speech that touched on stablecoins and brought up specific risks associated with stablecoins. In that speech, you stated, quote, this mismatch in value and liquidity is the recipe for a classic bank run. Stablecoin issuers are not supervised by the Fed and lack capital and liquidity as a backstop. The banks we regulate, in contrast, are well protected from bank runs through a robust array of supervisory requirements. Would you revise those comments if you could?
Yes, I think that, it demonstrates the need for humility in thinking about how financial risk happens in the system. That's been a theme of basically all of my academic work on systemic risk is we need humility, and that's why you need really strict capital and liquidity rules because of exactly the kind of circumstance we just saw.
Yeah, thank you for that. And I'll note, obviously, stablecoins are backed by assets and are properly regulated in many states, including the state of New York. Last thing I'd say is we have this pressure to socialize more of the market. There are credit unions that are completely privately insured, many in my district and in others, and I think we should look to that market for private credit risk insurance. I yield.
The gentleman yields. The gentlewoman from Michigan, Ms. Tlaib, is now recognized.
Thank you so much, and
That's a
thank
new
you
high.
all for being here.
4017-42. FHN,
Silicon Valley
First
Bank,
Horizon.
which I feel like no one's focusing more
FHN,
on them
big
as
drop.
the bad actor here, in the mismanagement and the inappropriate actions. You kept saying over and over again that they weren't responding. if you had, we should have done something when we knew they weren't responding. I mean, what could have been done?
It looks like they were even bought out, too.
I mean, I agree with you. You start with the basic problem that the bank managers mismanaged
I'm not seeing any news.
Did they hide something from us? What did they hid?
Yeah,
they
you
hid
got
all
a regional
this
bank
Do you believe
dying
they hid
out of
this
nowhere
intentionally from the feds?
I don't have access yet to the full supervisory record.
Will you let us know? Because I really do think they misled and probably lied and made some inappropriate and fraudulent probably actions that I hope that we'll hold them accountable to.
We will definitely be looking into that, and we retain enforcement authority to go after people who at the bank who violated the law or who breached their fiduciary duty or who engaged in unsafe and unsound practices, and we will hold them accountable.
Yeah, and Chairman,
to the fullest extent.
let's not negotiate with bad actors like that. We think this is the time to really hold them accountable, honestly. This is how we set a precedent. But going back to you, Vice Chair Barr, bonuses were paid out when? When was the last bonus paid out before they
As I said, I'm still getting access to the supervisory
We know it was
record.
a couple hours before, correct?
I've heard news reports about that, but I want to make
So
sure
you don't
that
even
I
know
get
when the
full-
bonuses were paid out? You don't have that information for this committee right now?
Yeah, I'm sorry.
I do not have that information
Was
right
it the
now.
day of?
I would like to respond to you fully and accurately, and I want to be careful to do that properly. I've heard news reports about the timing, but I don't
How
have
come the news knows, but we don't?
Pardon me?
How come the media and the news know, but we don't? How do you not know this before our financial service? Because this is important.
I agree with, I share your outrage about it. I just want to make sure we get to the facts.
Do you even know how much the bonuses were?
As I said, I think you're hitting at exactly the right issues. We're going to use our enforcement authority to the fullest extent possible.
After the 6,000.
Well, now,
Damn.
everyone's saying, oh, we're going to go ahead and introduce some
unless
clawback
you want the
legislation.
$39, but you've
you
already
know,
taken most
Chairman
of the
Gruber,
loss.
I asked the Fed Chair Powell about this. You know Section 956. It's been, 12, 13 years? When are we going to have a rulemaking on that? This is about excessive pay. This is about, this is something that Congress already considered. So how come it's over a decade that we don't have anything rulemaking? In 2016, there was a proposal. It wasn't great, but it was a really great start. It would have been instrumental here.
Yeah, no, I'm familiar with the rulemaking, Congresswoman. I was strongly supportive of it. We didn't complete it in time.
Why?
Well, I think there was a change of administrations, and that may have had something to do with it. Every reason to come back to it now and complete that rulemaking. And
if you had it today, what could you have done in this instance?
Because
I'm tired of being asked to pass things when I feel like we already did, but it's over 12 years that we don't actually have something again that we could have used as a tool.
It would have given us explicit clawback authority on compensation. As I pointed out earlier, we do have, in fact, a legal obligation, the FDIC, to investigate the board and management of failed institutions and hold them accountable for any misconduct that might have occurred.
Yeah, public advocates really believe this could have maybe prevented this.
And so we'll
primarily because, as you guys know, that
ripping
there's
a little bit past
inappropriate
4017
decisions made up so they can do the bonuses
and the
payouts.
I'm trying to look at
it's clear as day, and I don't know why my colleagues are not even talking about that.
FHN, but
they're talking about you all not getting things. Well, they didn't respond. How come nobody's mad at the bank for not responding?
All I can tell you, we've initiated the investigations
He's
to get the
smiling.
facts, to take action.
Honestly, a good question.
Assuming the facts support
Chairman
the
Greenberg,
allegation.
please, for the American people, we need a
Airplane
rulemaking
Wi-Fi.
decision on Section
bless you.
956. You know how critically important this is.
Understood.
This is what I read somewhere, this is the 563rd bank to fail since 2001. There are going to be more. And I know you guys don't want to talk about it, but there will be, because they'll mislead us, they'll lie, they'll do anything for the buyouts. Even the risk, what's that risk manager person? What did she give herself? What was it? This is a crazy amount of money she walked out with. It's crazy. And then Gary Becker, the CEO, sold February 27th, $3 million worth of stock, netting $2.2 million. And he knew this was going to be where we land. And we're not angry about that. We're angry because you guys didn't notice. Well, what about the fact they don't respond? They don't respond to inquiries and things.
The gentlewoman's time has expired. The gentleman from Pennsylvania, Mr. Muser, is now recognized.
That was good.
Thank you,
I wanted
Mr.
to
Chairman.
turn it off, and then that was the best one.
We know that
the receivership for SVB occurred on Friday, March 9th. Sunday morning, Secretary Yellen stated that the American banking system on national television was really safe and well capitalized. On Sunday night, Secretary Yellen approved the FDIC to protect all depositors at SVB, and certainly implied all bank deposits beyond the $250K would also be secured. So my first question to Vice Chair Barr,
forces
what
some
data
client redemptions and $3 billion downsizing.
The SVB and
Element
Signature,
Capital,
which was made aware, I guess, on Sunday. And did you think that if you were to protect an idiosyncratic bank such as SVB, you would need to protect all? What data drove you to imply that all bank deposits would be secured?
The decisions that we made that weekend were obviously in a very compressed period of time. They involved not only gathering information about what's going on in the economy, but also the exercise of judgment. It was our judgment collectively on the Federal Reserve Board, unanimous decision of the FDIC and the Treasury Secretary, that we needed to do that to protect contagion from infecting healthy banks in the system. Community banks, regional banks around the country. It is a judgment call. It was based on the information we had at the time. I think it was the correct decision.
I don't want to prolong it, but so there was actual data from other banks that they could be in jeopardy from
we were learning
problem.
I'm sorry, I didn't mean
it being a systematic problem as opposed to a unique problem.
As I said, it's a human judgment, but the information we were getting from other regional banks suggested pressure that was building.
It may have been the right call. I'm just wondering what data drove Secretary Yellen to go from, hey, everything's okay, to 8 hours later, no, we're going to protect all deposits. I'm going to move on. Chair Grunberg, it was stated that as well as all bank deposits being secured, no cost to taxpayers. I understand the FDIC fund is understood to pay for it, as you stated, per law. But will FDIC rates go up on community and regional banks? And aren't banks taxpayers too?
Oh, they certainly are, Congressman. As I've explained previously, just to be clear, the action covered uninsured depositors at those two institutions. And the FDIC is required by law that any loss to the deposit insurance fund as a result of those uninsured deposits has to be paid for by a special assessment on the banking industry. And we have authority under the law to consider the types of entities that benefit from any action taken or assistance. So we have discretion in designing the implementation of the assessment. Okay. And as I indicated previously, we're keenly sensitive to the potential impact on community banks.
Well, good, because they are very concerned, as you know, community and regional banks, that they will pay for the bad actions of a few. And I'm glad you're very much aware of that. So, Vice Chair Barr, excessive spending by Congress, QE, the Fed doubling its balance sheet from $4 trillion to $9 trillion, no surprise to you, followed by the quantitative tightening, many banks holding excessive treasuries were highly devalued and devastated in the case of SVB. So the November 21st, there are reports that the Fed, on November 21st of 2022, there's a report that the Fed was aware of the balance sheet issues of SVB. Were you, I mean, this is the 16th largest bank in the country, 57% of its portfolio was in treasuries being devalued. Why wasn't there more enforcement taking place?
I think it's an excellent question. We were aware and focused at the supervisory level of interest rate risk in the firm and liquidity risk of the firm. I don't think the supervisors expected, I don't think anybody expected a devastating bank run of the kind I described before, with 85% of deposits fleeing or expected to flee in a 24-hour period.
16th largest bank. You can see why people find that unacceptable from an enforcement standpoint. Lastly, I only have 10 seconds. There's a high concentration of commercial real estate loans out there owned by small banks. Potentially, as loans will be I'll follow up with you on that one in writing. I yield back, Mr. Chair.
The gentleman yields. The gentleman from New York, Mr. Torres, is recognized.
Thank you. When interest rates rise, long-term securities become less valuable, but deposits become more valuable. If you have a stable deposit base, the gains from the deposits can offset the losses from long-term securities. But if you have an unstable deposit base, like Silicon Valley Bank, there's no built-in offset. Silicon Valley Bank had a uniquely uninsured, unstable deposit base that made it singularly susceptible to a bank run in the age of social media. So, Vice Chair Barr, should a bank with an unstable, uninsured deposit base like SVB be subject to a higher standard of regulation than a bank with a stable, insured deposit base?
Representative Torres, I couldn't have said it better myself. I think you described the situation exactly correctly. And the unique
Flattery will win you.
All right, Chad, we're done with it for the day. It's already 10:30. We have 2.5 hours left. But I thought I would read you this AI story. I think it's really good. I told the Chat GPT to write a story about the banking collapse. And they said, once upon a time in a bustling city, the banking system collapsed. People were lining up outside of the banks to withdraw their money, and rumors were flying that the banks had run out of cash. Panic spread throughout the city, and many feared that their life savings were gone forever. The government officials tried to reassure the public that the banking system was sound and resilient, but their words fell on deaf ears. The news channels and newspaper were full of stories of the banking crisis, and people were losing faith in the government's ability to handle the situation. The officials knew they had to act fast to restore confidence in the banking system and prevent a catastrophic economic collapse. The government officials had a press conference to address the situation. They explained that the banking system was caused by a series of unfortunate events, including fraud, mismanagement, and risky investments. However, they reassured everyone that they were taking immediate action to restore stability. They had launched an investigation to the cause of the collapse, and those responsible would be held accountable. The officials also explained that the banking system was designed to be resilient and measures in place to mitigate risk. They pointed out that banks were insured by the government and people's deposits were guaranteed up to a certain amount. The officials also announced that they were injecting money into the banking system to provide liquidity, and the central bank was lowering interest rates to encourage borrowing and lending. Slowly but surely, the panic subsided, and the people started to trust the government's assurances. The lines outside the bank started to dissipate, and people went back to their daily lives. In the end, the banking system was restored to its former stability, and the government officials had successfully reassured everybody that the system was sound and resilient. While the scars of the banking collapse remained, people had learned the importance of trust and transparency, and the government officials had learned the importance of swift actions in times of crisis. So there you go. I did tell him to use sound and resilient. Of course I did. Why wouldn't I tell him to use sound and resilient? But it seems pretty spot on. Pretty spot on. Thank you, ChatGPT. We appreciate it. But got the congressional meeting still going on. And that is it. Oh, metamorphium. That's how we're coming back, baby. Or not. We need a bigger horn. Let's go. God bless you. Happy Wednesday. Middle of the week. Bank stocks have not gone down for 3 days. That's the best way to explain it. They not necessarily did they go up, but they have just not gone down for the last 3 days. Oh, much love. Metamorphium on the daily, baby. God bless you. I hope you're feeling good. Hope you're doing good, too. Memberships are sound and resilient. 100%. But, yeah, tech stocks just made a rally there in the last 15 minutes. We're still holding the gap up highs. I mean, we were lower. Then we went up. Yeah, Intel's up 7. I mean, all of the chips are crazy. I think Intel's probably the wildest, low-key. I mean, Micron's up 7, too. But Intel does not move 7%. Which is, this is a big candle. I guess the day before, or I guess last week, it had another big day like that. I forgot what the news was. But all the chip makers are crazy. Where is it? SOXX? Semiconductor? Yeah, man, you're holding up very, very good. I mean, it's still a long way from the highs, but from the October bottom, I mean, chips are insane. Apple's breaking out. SPY's getting 2 big candles. Investors or Intel Investor Day. Intel's still on the high. 40.18. So next level here would be 40.34, I believe. Yeah, or 40.37. Wow. So we're still not above the Powell level, but you're making some moves. You're making some moves here, ladies and gentlemen. 40.37 to 40.39. Those are your next levels. I mean, if it holds up, Ryan Omychinsky? Ryan, what a name. Ryan. I hope I didn't butcher your last name, man. Welcome. MMC? I've not looked into it. MMC, what do we got? Marsh and McLennan. They're decent. I know the name. I mean, you got brand name behind it. So that's the beauty of it. But you have premium over the last 20 years. But I think they're decent. I wouldn't want to buy at the highs there, but it's a good company. Palantir. They're not considered a bank, are they? Or I guess they're insurance. But then they also do like consulting. Well, yeah, it's just a high premium. It's probably safer. I mean, just with the brand name, but then if the downside is just bigger. I want to hear people get grilled more. It was good. I mean, we listened to it yesterday. I think it's only going to go on till like 1 o'clock, 1:30 or 2 o'clock. I think that's when it'll get capped, but it was better than yesterday, I would say, in a weird way, but it just sucks because there's like, it's talks of hinting at more regulation, and they've outlined plans, but then nothing else is arising from it. And with 3 days of the banks not going down, the interesting part is that we haven't heard more stimulus. I mean, you heard the lady today said that they have the tools, and if the right criteria arises, they will use them. But other than that, it's been no real update if you really think about it. 0-day calls up 300. I think if you got them yesterday, but that gap up this morning, it was up. Can we even go up with no volume? I mean, volume chilled out. I mean, volume was really exciting or really active in the morning, but then it's calmed down. I mean, we have 2.5 hours left. You'll probably do the same volume, maybe more than yesterday. I think you might do a little bit more than yesterday. But the last, I mean, to give you an idea, that's like what, 130? You're like 160. So like all the last 3 days of the week are borderline the same amount of volume you had last time you were kind of at these prices combined. So 3 days of this week could add up to 1 day 2 weeks ago. But it's a lot better than yesterday for now. We'll find out, though. Do you expect the drop to kill premium? I don't even know if it's about premium anymore. I think it's the market. Like, it's not like everybody is still kind of like in shock. You know what I'm saying? Like, I think like, you ever been driving before? You ever drive and then like you almost get into a car accident and then you avoid a car accident? What's the drive? And then you know what happens on the drive home? You stop listening to music. And then you like turn off all the music and like you're still like shaking afterwards. That's the market right now. That's the best way I would explain it. The market just avoided a car accident, and now it's like it may have even got hit a little bit. But it's like that weird kind of hesitancy. You know what I'm saying? Like, you go in the speed limit now. Everybody, yeah, both hands on the wheel. Exactly. You know what I'm talking about. So that's kind of how I would explain it here versus any other, you know, is it like, oh, are they doing this, doing that? It's like just the market uncertainty is looming heavy. But then at the same time, with things not getting worse after such a quick pace of things getting bad, it's putting us in this awkward middle. And then we're also like, you know, we're coming off of not only Powell, but then we're also heading into a time of a little bit more updates and data with coming into next week. And then even Friday, PCE, then we're going to really know. And that's what I was bringing up on the watch list last night. You have to realize if PCE on Friday comes in extremely hot, we're about to get hit with a double dose of fear, because now we're like just barely trying to justify the banking situation is getting better, and people are really, really like hanging on to that. But now if you go and by Friday, PCE, the other solution or whatever other worry the market's going to focus on. If inflation starts rocketing, then everyone's going to start getting paranoid again, and then you're going to get a double dose of uncertainty in the market. So I would give it till Friday, but hot would be high, a higher number. If PCE goes up, that won't be good. That will upset a lot of people. And we even brought it up yesterday, the volatility. If you look at what's being priced in, you have more priced in for the PCE this week than next week. You sound bearish, my dude. Well, I've been invested for 15 years, and I have portfolios I've never even sold from in that time frame. I still own long-term stocks. We have $100,000 in a YouTube account for long-term stocks. So despite whatever I comment on the market, you should know I'm fully well invested. And I could only be so bearish when it's all said and done. And I have no plans or intentions to sell any of my long-term portfolios. So, you know what I'm saying? Amen? Amen. Okta with a pop. Apple with a couple down candles. What stock have you held the longest? I think Google. I think Google is one of the stocks I've owned for a very, very long time, and I've never sold it. But yeah, it's just like at the end of the day, I mean, I think there's risks. I think the rest of this year, I mean, we're gonna do a little dance back and forth. But you know, regardless of what I don't like with the yield curve, whatever things make me, you know, aware of the current risks in the market. Sadly, I'm kind of a permeable. Okta is really running. Don't tell me Okta gets a buyout before ACAM. I don't see any news on Okta, but that's running up there good. My end goal is to have a positive impact on the world and the people close to me, and be able to live my life freely, and hopefully live a life that ensures my afterlife. Amen. Amen. Perfect. I like MO. We should have got it at 43, but we're waiting for Bill. Bro, Bill was crazy. I mean, if you think about it, how crazy is that like even on our Bill position, we're already up $42. You're going to get more in the dividend, but that's in a month. That's actually awesome. So at this pace, this like 10 grand is going to be paying us $150 every 3 months on Bill. Maybe a little bit more. I'm pretty sure a little bit more. So it's a pretty good yield. So if you think about it, that means any cash sitting there, we're going to make $150 a quarter. That's like what, $600 a year, just doing nothing until we find a play we want. Not bad. Not bad. I'll take it. It's small, but I'll take it. I'll take it. The vertical spikes on MO. These, I have no idea. Bill is the cash management that we've borderline talked about every day. We brought it up yesterday. Bill is awesome. I'm glad you put us on game. I know. I like it. It's great. It's just a great alternative. It's like a dividend stock that we're not really too committed to, and it pays you. You don't have to sell. Well, if we want to realize the gain, we sell. And you can. You have two options. You could either sell out at the end of the month and then rebuy back in and then rinse and repeat. So right now it has like a $43 gain, or you get the dividend. So now we have like 120 shares. I think the dividend is going to be $30 or 30 cents a share. So we have 120 times 0.3. So we get like $36 on the dividend. So it's actually a little bit lower. So then that means, no, the dividend should be higher. So then you'll get the dividend and then the thing resets, but then you could also sell it out and just take the equity too. Again, it's all supposed to match up. But that's a great yield. I mean, just that's in a month. It's only been 30 days. So it may not sound like a lot to some people, but if you get to let the money in there and work, I mean, to add an extra $600 a year into our account off of not doing anything, it's beautiful. I'm not dripping it. I'm just taking the money. It's up to you on, again, the whole idea is that Bill, it's up to whenever you buy and sell. So it's like, because if you buy in and sell out, we had this whole discussion yesterday. So you could buy, I'm holding it through and then that's it. But if you buy in today, you'll lose at the next month for temporarily, but then 30 days later, it will come back up to your price and you get the dividend. You wish you grabbed more? Well, that's the beauty. I mean, with Bill, it's not really about grabbing more. It's like, I wish we started earlier, because at the end of the day, it's just going to reset. So it's all going to reset, and then you go from there, and then that's it. Breaking. Is it worth buying Bill if I already get 4.4 from Robinhood Gold? No, it's not. So if you're already getting 4%, SPB, again, Spectrum was running all day. We don't have any news on that. But it's like if you are already getting 4% from your just sitting there without having to put it into any vehicle, there's no point for you to buy Bill. You're better off keeping the cash wherever it is, collecting that yield from whether it's the money market or whatever interest gets offered by your brokerage. Bro, you're dumping there, man. No way. We literally hit 40.18, set a new high, and now you're back to the level. I think this is Euro close, right? We're like right back up to Euro close level. Costs $5 a month, so is this really better? You should be making more than $5 a month. I mean, again, on $10,000 of cash, it makes us like $50 a month, give or take. Hearn said Powell anticipates one more Fed rate hike this year. Who's Hearn? Hearn. Wait, who is Hearn? Yeah, I see that on the wire right now. Hearn said Powell anticipates one more Fed rate hike. Yeah, Hearn. All I know is Hearn, dude. I'm like, oh, dude, little rate hike, Hearn, dude. One more rate hike, dude. Just like one more rate hike for the road, dude. You know, little hiking derp, dude. You know, little Hearn, you know, like get a little rate hike and then just like be out the door, dude, and then just like last rate hike, dude. Oh, dude. Mike O'Hearn, dude? No, that's not, no, it's like Hearn. Representing Oklahoma's 1st Congressional District, chairman of the Republican Study Committee. There it is. I don't think he caused that move. But interesting. He's talking about the terminal. Either way, though, I don't think the market's going to respond to a random congressman talking about Powell. Maybe we're sensitive and we could, but I think just today is just this is all fuckery today, man. This sucks. Is it like we should be like honestly like some people should go take a nap because this is gonna be just get ready for a couple more days of this. I think by Friday it'll change once we get the PCE and then we'll actually have some juice to respond to. But as of now, man, this is gonna be we saw remember the morning just all those early candles pop drop sell off run back up sell off random pop again. This is all driven by nothing and it is on low volume. 3M. Every time I load up my Airbnb, that just gives me a crazy candle. Frey, they're in talks with names like Cap. I did not see that. They're up a lot. Freyr Battery. Wasn't there just another recent battery buyout? Wasn't it Tesla? I'm bullish, Josh. How bullish are you? Do you have a long term? That's a real question. You know what I'm saying? You could always tell how bullish somebody is by the long term when it's all said and done. Because anything else is just short term. It's like, are you really that bullish? So I don't know. I mean, that's like, are you ready? Are you stacking? You stacking for the next like generation? Like, how bullish are we talking, bro? I did not sell out of EBS yet, no. That's like you said on Powell Day. You said it would be annoying to trade. Well, yeah, and that's, I mean, not only, like I'm saying, not only the market, not only the climate, but even what Powell said. Just don't forget, Powell, they lowered economic output, and Powell pretty much said, hey, we think the banking system is going to, be a pseudo rate cut, and even if it's not, we're going to raise rates. So good luck, and then we'll go from there. I mean, here's the best part with all of this, You got to realize something. I've told you this a while ago, more recently, but just take a look. We are just flirting with 50-50 practically. So yesterday's probability of rate hike or rate pause for May was 50-50. So even today now we're at pause. The odds of pause have taken over. So we're going to play this back and forth. And like I've told you in the past, when the Fed futures are uncertain, that's where we get more volatility. The only caveat would be that the meeting is 5 weeks from now. So there's still a lot of time and a lot of data for things to change. So we'll see. But unfortunately, it kind of makes sense why we're getting this highly uncertain market, more or less. XRP, I like XRP, but I really haven't followed it as of late. Like, I still own XRP, but I'm just not like too involved with it. You know what I'm saying? Like, I don't really care, sadly. At least markets show pausing for now, but that's just on today. Yesterday it was 50-50. Day before that, it was pricing in a rate hike. Now it was pricing in a rate cut. So we're going to go back and forth with all of it. I still have the NFT, yeah. The Saki NFT. I think it's still worth a bag, too. I do wish I sold it at $150,000, though. That one would have been nice. But then I wouldn't have got to own Saki, but hey. They paid me dividends, so I've even received over, I think, $20,000 in payments from, just shitty NFTs that got returned back. And then ApeCoin. I think it's still worth, $23,000 or something. I don't know. I have not checked. I only check when you guys ask me. So I don't know if that's good or bad. What do we got? OpenSea, price low to high. How do you do buy it now? Why did they change that? I'm checking. Where's buy it now, Habibi? They used to have buy it now, Oh, buy now. So cheapest one is 24,000. So yeah, still up. I did not play and then I have all the other stuff too. All the other shit it came with. Well, not bad. I mean, kind of weird that everyone's still buying these. There's other deed, then there's the little game ticket, and then something else, and then the other thing. And 150. Yeah, I bought it for 16,000. Then it went up to 150 at the peak, and then now it's back to 24,000. The 160 or the 150 was before they raised rates. But then after buying it for 16,000, I legitimately got $16,000 back from ApeCoin, and I sold it and I realized the money. And then they gave me 3 other airdrops that were pretty much all worth $2,000 to $5,000. So it's free at this point, but that's why I said it's a Ponzi scheme. I got banned. I got my video taken down off of TikTok because I made a TikTok video, and I was like, dude, I get why everybody likes NFTs. It's a fucking pyramid scheme. That's it. I bought it, and then they just kept paying me over and over and over again. And then if you buy it early enough, and then you get all these little perks, it's why would you ever sell it? It's they just keep giving you, and then I got banned. I was like, what? But yeah. We've said too much. It's only for some, yeah. How did you start what you were doing? What steps? Get a long-term. That's actually how I started. I was 14 years old, and I read a Jim Cramer book, believe it or not, after seeing stocks on TV, and that's it. And I learned the long-term way, and then eventually you spend 2 weeks in the stock market with the long-term. You're going to be tempted to trade, and then little by little I got into trading, and that's it. But I've always stuck with the long-term and just did it early. And, give it a couple of years, I'm sure you will be exposed to every corner of the market, and I think you'll be good. New here, found you last week. Happy to be here. Let's go, man. I'm glad you're here. Let's have a good quarter. We're about to start a new one, so it's going to be wild, and it's already, 2023 is shaping up for a weird mix of crisis and even what we saw last year with volatility and central banks, so it's going to be fun. Get rich carefully. Just get rich slowly. That's pretty much it. I think the younger you are, even when I was young, that's it. Once you kind of discover one thing, you discover the long term, it's a very logical connection to get into trading. And then you're like, oh, I could do it faster. Oh, and then, that's it. You just go from there. But I think time, that's something, I was thinking about it yesterday because I said something and I was like, I said, I've been doing this for over 15 years. But it's just 15 years is a shit ton of time. And, if I could tell you any skill for all of you guys, it's just longevity. That's one thing I'll tell you for certain. Sadly, I love all of you. You know that, but not all of you are going to be here in 10 years. And I'm not meaning that you're going to die, but you may not be trading stocks. It's one thing to get into stocks, but it's also very, very difficult to remain in the game. Yeah, because you could just buy AMD. That's part of it. Again, spend enough years. The question is, what did you do with it? You know what I'm saying? And that's where you learn these lessons quick and look back at it, because otherwise you're going to be oh, I could have just done this and I did this, but instead I did this. And, and that's why, if I didn't have a long term, and if I just didn't, I've been exposed to so many areas of finance over the last 15 years. If I did not set aside money and just own shit, oh man, my life would be so different, whether it was crypto or stocks. So, and that's why I recommend the same thing, even though it's not a recommendation. None of this is financial advice. Option trading, stock trading, extremely risky, and lose on financial investment. Please consult for financial advice, educational purposes only. Think of a wonderful day. But, yeah. Always buying the wrong thing. Even if you buy some blue chips, you'd be down. Well, that's where you gotta, get into the process of learning what it is. And the one thing that has never failed me was buying the popular stuff that I used on the daily. Again, somebody asked me, they're like, what's the longest stock you held? I bought Google back in the day. Again, Amazon in 2015, I was already a Prime member for 7 years or something. So, don't underestimate, what is a good company. But when, like I said, if you try to be like Warren Buffett and trying to find the next big thing, and that's something sadly that everybody, a lot of people fell victim to that in the last 2 years, especially with EVs, with SPACs and this and that, when it's it's the stuff that you already really knew about that was going to really take you home there. Don't look for the needle. Just buy the haystack. I kind of like that. Amen. Top tick move on the Saki. No, I just kept it, but I was talking about selling it then, and I didn't. I said I was like, maybe I was going to sell it right when Jen Psaki retired, because I was like, it's time, and it happened to be at the high. I should have. I think DoorDash, I mean, it'll be, I think it's either DoorDash will probably be really successful or they're going to get bought out by somebody, but that one's something you already know about. Uber bought Postmates, yeah. Is there any role of looking at daily open interest for puts and calls? I mean, people do look at it, but it's not like, all it just tells you is how much is being held. But unfortunately, it doesn't really give you the idea of direction, and I don't know how long you've traded options, but the complexity, I mean, even when we see a lot of option trades, like you look at scanners and all of that, there's different strategies on there. So I usually never care about open interest, but some people do. It's really up to you. I think volume was probably a little better for intraday, but open interest is just telling you how many contracts are being held open. Iova, we could either sell it for a quick flip. I mean, we already got like what, I think 20% or something, or wait for the PDUFA in November. But I'm kind of hoping it gets back up to like $7 or $8. So we'll see. But I kept it very small, so we should be afforded that flexibility. Powell cites forecast show one more hike, Hearn says. Oh, this guy's talking about the dot plot. Uber bought Postmates right as Lyft said they're looking. That was years ago. Uber bought Postmates a couple years back. That's their delivery segment that they bought it before the pandemic, and it ended up helping them out a lot. Actually, I think Postmates saved them. Yeah, you're going down. I don't know if that comment, it could be it, but that comment seems like a non-event. I actually use DoorDash more than, it's weird. I Uber a lot when I like need any Uber type services, but otherwise I use DoorDash because the damn Chase Sapphire, they gave me free DoorDash. So all my DoorDashes are free because of the Chase Sapphire. But then it's still mad expensive though, man. DoorDash, like, it's any of the delivery services, I don't know, but we still do it. We still do it. Damn, Josh, you AF? What do you mean? I don't know what that means. SIVBQ. I don't think there's anything to look at. I mean, it's a bankrupt company now. It's moving up. It's just a game of musical. Like, have you ever played like on one of those like online gambling platforms? Are you familiar with a game called Crash? That's what this reminds me of. It just goes, like, it doesn't matter what it does, and then eventually it's going to crash, then you reset the round, then it's either going to go down or up, and then you're just playing that game. But otherwise, I would just, if you own the old shares, you wait and hope for a resolution because you're already down. But yeah, that's it. Yeah, but be careful on that. ALGM on the high. Came down. Daily nostalgia. $35 to have Chick-fil-A combo delivered. Holy shit. Yeah. It's real out here, bro. Yeah, MU would just... I feel like people want to be optimistic on chips. And that's what people were, again, it kind of goes back to that whole little tech safe haven thing we saw from the bank crisis. That's what some people were saying, because there's funds out there that have a mandate to be fully invested. So there's like big money out there that manage a lot of big amounts, right? But their funds are mandated to not be holding that much cash. They have to be fully invested. So when everybody was getting out of the banking and financial stocks, chips and technology is where a lot of that money ended up going, which was quite interesting. And then end of the quarter is going to be weird though, because some people will have to buy, but then I also believe I really feel like some people are going to want to take some profits there and then clean up the books there and make it look like they had some more defensive names, more or less. Spent $30 a week on groceries while my roommate DoorDashes for $40. It's weird, bro. It used to be a lot cheaper, but it's very expensive. Taiwan president visiting the U.S. is not news, says Kirby. Where's WWE? I was up earlier. Max N on the high. What time is it? 11. Wow. 2 hours left, Chattadonia. 2 hours left. The Japanese yen is up there. Apparently, the Japanese yen is the favorite trade on Wall Street right now. And then those comments by one of the Bank of Japan members today, he pretty much said, he was like, he said he doesn't want to signal to the market because then everyone's going to front run it, which is pretty wild. Zero movement. I mean, you moved. Again, the pre-market was very exciting. It wasn't even exciting, actually. It was like hour before the bell, we ran up. Again, mortgage applications kind of helped there, and even real estate stocks, but it was all just the gap up from China. That's it. You could thank Jack Ma for all of this, I would argue. And then banks just didn't go down. Doesn't matter if they didn't move up, but at least they didn't go down. And that's day number 3 now. So you haven't seen that in a while. It was Squeeze City for the futures. It just gapped up. So I think futures will show you it a little bit better. So, like, this is where we were, like, from, what was this? This is probably like 3 p.m. 3 p.m. by, 5 hours later, by 8 o'clock, you were already up from 4,000 to 4018. Like, look at this is all the way until 1 in the morning. So you went from 4,000 to 430 by 1 a.m. Eastern time. Or I think this might be Pacific. Well, not necessarily about all the moves happening pre and post. Remember, that was the strategy debate that we were seeing at the beginning of the year. Remember, at one point at the beginning of this year when we were getting that big rally, remember what it was. It was people, nothing was happening pre-market, and most of the gains were happening at cash open, where that reverses one of the older trends. It used to be where you would buy you would buy pre-market, sell at open, did way better. That was my first ad. You've been blessed. You've been blessed. Intel's showing. Intel's insane. All the chips are insane. Solar ad. That means your electricity bill is high. So watch out. Intel. Even Nvidia's chilling. I kind of want to shorten Nvidia again, but I want it at a higher price. And then what did I do today? All I did was HD. On EPR, today's ex-dividend. We go to war with China. We might, but it's so weird because I don't think that's the issue right now. I am primarily focused on banks and rates. I think Powell is a bigger risk to the world than anything. That's it. I think there's a lot of people have been asking me about the Chinese yuan and Russia and all of that stuff. And although it is important and they are new developers, or new developments, I just don't think. I think all of that stuff it pales in comparison to the financial pressures we're seeing and, what, the Fed of the United States is going to do. And, don't underestimate Powell, interest rates, and the value of a dollar, and how much that could really affect things. So, quite frankly, war is just not on my list of worries. If it happens, it happens. But whether it's China or something else happens with Russia and Ukraine, but this is just my opinion. I'm not a fan nor really concerned about any other shakeup beyond that. JPM about to go red. About GME weeklies on puts. AMC. And then SPY's back to VWAP. We're a little bit lower than Euro close right now. I know VWAP has been weird. It was jacked up in the morning. Kirby says no reason for China to react harshly over Psy in U.S. China said retaliation if Thai pres visits. Yeah, but that's well, you saw what happened last time. I mean, here's the part. This is where I like to keep it neutral and call out all the fuckery. Like, how come people aren't getting mad at Kevin McCarthy going to visit Taiwan? It's the same exact thing as Nancy Pelosi. He's literally the new House Speaker, right? So he's going to go visit. Like, they don't want her to visit here. But then again, there was also another headline. Kevin McCarthy wants to go and visit Taiwan. That is equivalent to Nancy Pelosi visiting Taiwan. But then again, what happened when Nancy Pelosi visited Taiwan? What happened, all they did was they shot like missiles, or they didn't they fly planes around Taiwan, like the most jet passes in history or something, and then that's it. Yeah, they just flew jets around, launched a couple of missiles and tests, and that was it. It was just like, we're mad, and we're going to show you how strong we are because we're mad. So I don't think it's going to be too big of an issue. And then here's the funny part. Bro, even the people in China right now don't give a shit. And I'm not talking about the government officials. I'm saying look at Chinese stock market. And again, all the Asian assets right now, that's why we are up right now, because that Baba news is having people feel good about the prospects for tech. And any of these tech companies that were clobbered over the last 3 years due to government policy, people are getting excited. So now, you might get another one of those runs. It's not even as if the economics and the finances and the stock markets in Asia, they're not even really responding to these pressures or worries. Yeah, we haven't heard about a balloon in a while. You right? Yes, Network launches streaming service for Yankees. I think it's going to be through Amazon. Damn, until China finds out our sat. Damn, y'all really? I don't know. I'm more worried about the TikTok bill. Did y'all see that? Did y'all go? There was a video going around. Did you see what is in the TikTok bill? It's pretty wild. So in the TikTok bill, if they end up banning TikTok per the bill, if you end up utilizing TikTok and you use a VPN to skirt the ban, and you or any other social media platform or whatever that they deem as a banned app due to other things, yeah, do you know what the punishment is? 20 years in prison and a $250,000 to a $1 million fine. It's insane. And then they have the ability to monitor any other network to see whether or not you access it. Go look it up. I'm serious. It's a fat bill. Like, so the TikTok ban bill, if you actually go and read it, you'll find this in there. It's 196 pages or something like that. And it's straight up, if you go and if they ban TikTok and you use a VPN to get around it, it's a 20-year penalty, 20-year prison, and $250,000 to $1 million fine. Very strong and resilient. Feel like those charges wouldn't fare very well in there. So what are you in for? I was using a VPN to access my For You page. I don't know. I was just trying to do the challenge. Oh, word. What's TikTok? I've been in here for 17 years. Why did they throw you in jail for using a clock? Oh, no, it's like an app. It's like you take the little app. It's like, no. It's like, do you know what YouTube is? I only know what MySpace is. Oh, I don't know. Yeah, I don't think that'd end up well. Ba-da-ba-ba-ba. Hasbro, Disney on the high too. Bro, Disney's up like $4 since that layoff news. Now you in my space. Oh, what's that mean? 40.44 on the futures. So back to 40.13 again. 40.10 to like 4,007. That's like a little mini range. I mean, you've probably heard me say that many times over the last couple of weeks. But you're working your way back up after hitting a new high, selling back off to VWAP. Now a random bounce again. No news. No news. Nothing else driving this move. Just low volume. Everybody feeling out the situation. You know, good 7 hours. How much time we have left? Oh, we got an hour, 50 minutes, bro. The rest of the month, well, it depends on PCE. I mean, this month, I think we are going to get a lot of back and forth. I think we're going to get this high level of uncertainty. However, I don't know which way it's going. I don't think anybody does. And why I say that is because you have a host of events. So not only do you have the PCE, which is, priced in pretty high, but there's also CPI, non-farms, another PCE, and then anything else that happens, and then it culminates with FOMC. And then FOMC also gets the report on SVB. So all of those events are going to have the ability to drive you up or down. But I think the movement, I'm expecting a lot of what we're seeing. Is the only way I could put this to you. Like this back and forth, small movement, moving on nothing and then freaking out once something arrives after nothing and then recovering the freak out off of nothing. Like, you know what I'm saying? Like that's just, it's just Powell. Like you got to I think the market will trade equivalent to how Powell messaged everything. And Powell's message on last Wednesday, you could argue it was confusing, but more so it was uncertain. That's it. And Powell, because Powell, as the leader of the Fed, he did not give you, he's Tom Brady. He does very good at many, many times. He knows how to answer the questions, and he's skirted around a lot of things. But if you truly understand what Powell said on the last Wednesday, oh yeah, I forgot about earnings too. Thank you for that. But if you understand what he said, he did not if that was your boss, if that was your significant other, you wouldn't want that answer. I couldn't, you know what I'm saying? I don't know. It's like if you went up to your girlfriend and you were like, we're going to listen, there was an external situation and now we have to break up. And then she's like, well, what if it doesn't happen? Well, even if it doesn't happen, we still going to break up because I don't know when it will happen. And you're like, what? It's very, again, if your boss told you that and said, hey, yo, so I want you to take some time off a little bit because we might go out of business. But then even if we don't go out of business, I'm going to sell the company and you still lose your job. You're going to be like, what? Oh, wait, what? This makes no sense. So that's kind of just the messaging of Powell. And I think the market is going to be in a weird spot and we're going to have to react to a lot of data to get there. So I don't know which direction we're going. But I do think I think the destination is going to go do a lot of back and forth. And we're going to get a lot of reaction to nothing and a lot of maybe overreaction too. I think an overreactionary environment is the best way to say it. I don't even it's because, again, we have these data events, but hopefully you realize why, Friday is so important with the PCE, because in a weird way, it's not even about data, because whatever data set we get, it's fueling one side or the other. So if we're not reacting to banks, we're reacting to inflation. And then if we're reacting to inflation, if something comes out about the banks, now we have to deal with that. Now, what happens if the consumer slows down? Well, you see what I'm saying? It's just like every piece of data is just like, they're all connected in a weird way, but these are all the alternatives. So it's like when we want to respond to the alternative or look for the bright spot, sadly, it just connects in a very negative way. Credit Suisse board announces withdrawal of proposals for AGM. Biden and Xi conversation will happen at appropriate time, says Kerb. What stock in your long term are you the most proud to hold? Abivai. It's paying us a solid 6% from where we bought it. Every single year it's gone up 60% gain. It's a great industry. It's recession proof. It thrives even when money is cheap. So I think that one's a great one. And we went big on it early. That was our biggest position in the long term ever. Before anything, we owned more Abivai before we owned more Snapchat, and that was one we kept buying throughout, and it did good. It did very, very good. But I really like that. And then my big long term, I'm very proud of my my early Meta plays and my Amazon, because those are a big fan of those. But mainly, I'd say for the YouTube one, Abivai, hands down. Abivai is solid. But it's down today. He's not doing as well today. He had to take a break. I think Abivai, you wait. Like I said, every year there's a couple of big drops. Maybe we already had it here, but you'll get a random news flush or something like that, and that's what we did. That's the last time we bought Abivai. That's exactly what we did, I believe. Our last big purchase was October 21st, 2021. We just waited. It ran up a lot. It was chilling here, and then October it dropped, and then that's just wait for one of the big red candles, get your discount, and you'll be good. Longeveron created my stake. Ooh, was that around the same time? It's beautiful. Ulta is just running up. We have that one's 100% in the long term, but I wish we added more. Would you have Tesla if it went back to 100? I would trade it, but my long-term price on Tesla is very low. It has to be very compelling. Otherwise, I'll cheer you on. I will cheer you on. Compass, a lot of people like it. So out of Zillow, Redfin, and any other, like even Open Door, any real estate related company, Compass is favored the most among analysts. People believe in that one a lot more. So I'm not like, I like Redfin better, but I think Compass has compelling, the fact is people like it. That's the only thing. Like otherwise, I would say I'm not a big fan, but the fact is you have a lot of popularity with it. Yeah, Tesla. I need Tesla lower. Tesla a lot lower. But that's it. We wait. I mean, we still, this year is going to be faced with a lot of challenges, and we still don't know if stocks are going to calm down and go up a lot more, or if stocks in this banking situation and the yield curve, if all of that shit starts to materialize for the negative. Our cost basis is like 90, and then on one account it's a little lower. It says 96, and that's including all the drip buy-ups, and then 88 on AbiVi. I love it. But AbiVi, it's paid us so much. Like, that's why I like it, because, like, this is all the drip. So take a look. Not only is every purchase up, but every single drip has made you money. That's why you want to drip and have compounding dividends. You got to realize, like, there's shares that we got dripped on that have doubled up or went up 50% with it. So not only did we get, a free share at $96, that share went up $48 in gain. So every single drip we have gotten has led to a gain. So not only did you collect, I think we're collecting like $700 a year on AbiVi or a little bit more. But the best part is that the equity value has actually gone up with everything else. We looked at GetAround. No. I'm buying the stock. You like it? My thing is, for long-term, anything like that, I need it to, hopefully be more official than not. Like we were just saying, you don't need to find the needle in the haystack, just really buying it when it's popular and once it's actually proven itself as a business. Like, so even if it was like Netflix at $10, you could have bought Netflix at $100 pre-split in 2014 when it was already running up, 2015, and like everybody was already using Netflix. So it's just like some of those I'd wait on that, but I've never heard of GetAround. UWMC, yeah, I do. I think UWMC, I want to get over, like, UWMC, I would have probably bought UWMC if MPW wasn't yielding so much. And I do like MPW, again, with their history and then now, but the last couple of weeks, with the banking stuff, REITs have taken a beating. They've gotten an outsized beating just because they're related to all of it. Would you sell out of AbiVi? Probably not. I want to hold that for at least 10 years. And at that point, really I'm hoping AbiVi just becomes something that we could generate a lot of income from and have nice equity on in the long term. Just because, AbiVi is never split. We've already held it for 3 years. The stock is going up. Little by little, who knows where that could end up being, but it's just a great addition to have. The yen, well, I'm waiting for everything else. Again, I'm going to start with bonds. The yen is going to be the emergency valve pretty much at this point until it becomes cheaper. Wouldn't REITs be the ones to buy now since they've been hit hard? To a degree, because they still have the risk with everything else going on. But, REITs are a little bit more stable, but then they, use your imagination. That's what's scary. If you use your imagination on the banking crisis, REITs are next. You see what I'm saying? So that's why they've been getting beat, but they do present a certain amount of value. But not all REITs are created equally. And that's where, you got to just like the banks. If you find the good ones, you'll be good. But there's definitely risk out there. U.S. is aware the relationship with China could be better. That's a good comment. Enphase again on the high. They've been running all day. Bonds. I think bonds will ever be discounted. What do you mean? I mean, there's discounted bonds every day, but it's just, are you talking like a discount, or are you saying, well, bond yields go lower? Small caps to materially underperform if recession prevails. Hot dog. Look for smaller, high beta stocks to suffer significantly more than their large counterparts if a recession outcome becomes the reality. In the past month, amid the banking turmoil, the S&P has managed to eke out a gain, while the Russell 2000 has materially lagged a performance of down 7%. The main benchmark index is outperforming the small cap stocks by the most since August. Meanwhile, high-yield credit spreads are widening. To some, this serves as a leading indicator that a recession may be looming. The 30-day correlation between small caps and high-yield spreads is strongly negative, and it's getting deeper since the banking crisis. Conversely, S&P's correlation has started to weaken. These stock moves tend to have higher volatility as measured by beta, which implies the Russell index could move 1.1% for every 1% swing in the S&P. If a credit spread suggests a recession is coming, then small caps may get hit harder. That was an update right now. Hate these slow. Well, it'll probably be like this till Friday, unless we get news, and then even after Friday, I mean, God knows what's going to happen over the weekend. And I could wait a little. EPR play, it's still kind of alive. I mean, it shot up 20% in the morning and then came down. I've not done anything with it. I'm still holding it. Oh, no, I'm talking EBS. EPR, yeah, I'm still in that. I might want to sell tomorrow, because then if we hold it till tomorrow, we'll get the dividend, and then we'll just see. But AMC went down. They're still holding up. Even though the pop on it yesterday was related to the AMC news, a lot of investors are thinking long-term on it. So they're using this as a safe haven to the second biggest leaser of that REIT. EBS, that's the one I was saying. I'm holding that one. I'm still going to hold it, but I wish it held up the gains, but it might be able to come back. I mean, again, biotechs are inherently just volatile. LRCX, lithography companies, 5%. It's kind of chilled. Even Intel's still at the high. ON's on the high now. Gensler's testifying ahead of Appropriations Committee. U.S. still wants Blinken to get on a plane to Beijing, says Kirby. The CDTX is down, but it's been coming up the last couple of days. ASL machines are... I've never used the ASML or LRCX. I don't know if they even do the same thing. AMAT, Okta. Okta had that pop, but no news on that. ACAM still holding there. I don't care if the market closed. The market is felt like it's closed already. Sheikh Khalid named Abu Dhabi Crown Prince. That's breaking news. Bro, I was really tempted to nap during the bank thing. After like the first 20 minutes of questions. Because those are usually the good questions. But then I was very tempted to just I moved my chair and I was just going to just fall asleep. You know, just listening to this nice speeches that were being given. The baby they're doing a conference call on the baby babas, but we don't know yet. SIVBQ running. I'll keep my bankrupt stocks running. SBNY, are they trading? Yes, the baby babas, very big news. Again, that's why we're up today. Without baby babas, I think we would have just been dancing exactly where we were yesterday. But that's it. The China baba news is the sole reason why we are up here and at least comment. Again, lack of banking news, that's negative. Throw that in with a 15% gain in China or baba domestically and then overseas. Like, that's it. Remember the hype around Galaxy phone posits? Oh, yeah, that sounds kind of familiar. SIVB no longer exists. SIVBQ, when a company goes bankrupt, they put a Q behind it. So just these are the bankrupt assets, and now it's done so there's a reference value. That's why they have it there. So now all the brokerages and people who made the trades on it, now you actually have a legitimate reference price to be able to attach it to. But the company's bankrupt. That's it. So it might even trade for a little bit under SIVBQ, but it just all depends on the results of once they finalize the bankruptcy and seeing what creditors get what, and then whatever is left at the end of the day for shareholders. But chances are what you're left with is that 90 cents or whatever it is. First Solar again. I want barbecue. KBB sounds pretty good. ASML again on the high. Hubs. Oh, where's Workday? Remember, they were on fire all day today. Midstream plays. I mean, I think oil for a swing could be decent, but not for the long term. Until maybe unless Exxon goes back down to like some of those really, really low levels, or Oxy, but no energy plays for the long term for now. Where's Tessie? Tessie 191. Boop, 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 boop. Did anybody complaining about an ad yet? Because I need to go to the bathroom, and I feel like this should be the time. So follow me on Instagram at the Trading Fraternity. I love you. I hope you're having a good day. We are almost at power hour, an hour and a half left in the market. So let's bring it home. Let's bring it home, Chad. Let's bring it home.
Check in with Natalia Knijevic, who's been tracking all the moves there. Natalia.
So it's a different picture across the board. So let's start with crude futures. WTI futures are down by 0.3%. There are a few stories here. So we got this weekly EIA report, which showed that these stockpiles for crude were down by 7 million barrels last week. So this could be bullish for crude. However, we also got a very weak data on demand for products such as distillates. So that is why crude erased earlier gains. In terms of gold futures, they are down by 0.2%. This can be related to a broader risk on sentiment. Natural gas is also down by 2.4%. There is a lot of volatility in terms of natural gas today. Some futures are expiring for April, but at the same time, we also got a weather report which shows that April will be cooler than expected, and it can be actually bullish for natural gas. And finally, wheat futures, they are up by 0.7%. The biggest story today is that Cargill and Viterra, two big agriculture commodity traders, they are exiting Russian market and they will no longer trade Russian grades. So that is why futures are up today. Katie, back to you.
Natalia Knijevic, really appreciate it. And I want to welcome our next guest, who's a venture capital investor with new investments in agriculture. We're talking about Oscar Decotelli. He is the CEO of DXA Invest. It's a platform in Latin America fully dedicated to private investments. Oscar, it's great to see you,
Thank you, Katie.
On set. I'm going through
Thanks,
the notes. I see you were last on March 6th, which was 2 days before the world changed. How has your world changed as a result of what we've seen over the past 3 weeks or or so?
I think there's a couple of different impacts, right? Of course, in a general overview, we start to see, is there a capitulation happening in the years to come, right? Is it a year away? Is it 10 months or 6 months? We are also talking about kind of a general kind of recession in the U.S. So there's just like this big macro picture and what that's going to drive investors' sentiment in general. But do remember that Latin America is coming from a very low base on people's portfolio, especially when we're talking about private markets. So it's a matter of having either zero exposure, 1% or 2% exposure. So we are, in a way, talking to a lot of investors about the opportunity of start their investments into LATAM or increasing that, but at the same time, everybody's very much scared of what's going on. We didn't feel that much of the impact of SVB because of the saving of the deposits, and that kind of helped out everybody on that sense.
Well, that's really interesting, sort of the psychological effects of the last 3 weeks, even if, it didn't necessarily have any direct correlation or direct link between what happened with SVB. But
direct link. Yeah, the Pope to be hospitalized for pulmonary infection. Yeah, that seems pretty crazy. The Pope. Market reacted decent to that. I don't know if that's appropriate, but yeah. Right, I think all of the solar plays today are doing very, very good. They did that last week, and then they gave up with a little bit of the volatility, but just depends. Puts on Chick-fil-A. The Lord's chicken. That would be the one who would suffer. He only has one lung. He had an illness when he was young, so it's more severe. Really? I did not know that. Credit Suisse. I would just buy UBS if that's the case. I mean, that's what it's going to become. I think UBS in the long run is going to profit immensely off of the Credit Suisse deal. That's it. My girlfriend's going to get so mad at me, but this is just all based off of the logic that the Swiss are stupid. I know my girl is going to, don't tell her, but that's it. I think they were panicking and they were scared of it. It was way too big to fail, and they at least let the deal, again, they let it be handled with private money, or for the most part, give or take, but that's it. It's an asset worth a lot of money, and they just gave it to them for pennies on the dollar. So in the long run, I do think they are gonna, UBS will profit off of the Credit Suisse deal a lot. I mean, you saw what happened with First Citizens and even New York Community Bank. These are the other banks that bought up everybody else. I mean, they're the ones who got good. Now, granted, that was because the FDIC bore a ton of the losses, but you had a similar situation in, Swiss with Credit Suisse. So we'll see. But as of now, if you wanted Credit Suisse, you're better off buying UBS. I mean, it's the same thing, the same conversion ratio it should be. But in the long run, and I'm talking years down the line, UBS should profit off of it. Mini Shrek. Oh, you're up, 7 points from the low. Again, 407 to 410. You're past that. 4018 is the high. 4017 is the level. PBR halted due to news pending. ENTG, Visa's on the high now. They were low earlier in the day. Where's XLF? XLF, 1%. Not bad. Regionals are still kind of like selling off. FRC's trying to work its way up right now. So is the SPY. Regionals are actually getting a pop right now. Wall, FRC, even Microsoft, and then all of your solar plays. Enphase is just dominating the high ticker right now. For the new banks, aren't they still acquiring their cost basis on the bonds that were bought at low rates? Is the only difference the better leverage? I don't know the full details of it, but it should be where they're buying. They should be getting that debt at a discount. So that's like the beauty of it with any of these banks like First Citizens, is that if you have the ability to actually hold it till maturity and somebody gives you, $1,000 for $900, you're making 10%. So I do believe they're getting them at a discount. I don't think they are absorbing the bonds at cost basis. I mean, the face value of the bonds at maturity, that should always stay the same, but I don't think they are buying it at the same price that was paid. Baba back to 150? What? Again, everything's taking a pop, even regionals right now, even Roblo. Nat gas, I mean, the time might be coming. Just it all depends here on the data and really how both the economy, banking situation, and Fed policy plays. But now we're close to a rate cut, or excuse me, a rate pause. So that will that will kind of be the signal or the get on deck moment. Yeah, JP Morgan's kind of been struggling all day. Goldman just gapped and held. I mean, Wells Fargo and Bank of America, they're doing a lot better. Yeah, PBR is halted pending news. Repeat on that gas. Just wait for the pause. I mean, it's something we've talked about for a while, but it's getting close. Baba. 100's big that day. Again, it was big when they sold off 100. They went down to 80, and now they're back up. But it's big hype for Baba. Again, even the volume right now, you're getting more volume on China stocks than even the beginning of the year, and people were loading up on them, going for the recovery. Boeing getting a little bit vertical cheek lay. I don't know. I haven't checked defensives. For real, patience with that gas, it's been months. It has been. I mean, it's not. I mean, take a look at the dot plot or the Fed futures. That was just the similar shit show. In the beginning of this year, we were pricing in rate cuts. Then we priced in more rate hikes and abandoned that. And then a crisis magically throws us back into there. So, unfortunately, yeah, it's required a lot of patience, a shit ton. With everything going on, but it's not as if it was, it's spreads. So it's not like it was only unique to UNG. It's like what we've experienced so far, even in the last 3 months, alone. This will probably be a quarter. You'll probably have to wait 10 to 15 years to ever see something like this again, where Fed futures and bond volatility ever does what it just did, or even to see expectations swing from commodities and energy all the way down to tech and bonds, which is kind of wicked. It's very wicked. Gasparino, bro. So I read his tweets because I was trying to get the screenshots for yesterday's video. Bro, all that guy does is talk shit about AMC. It's kind of funny. Like, Gasparino just goes in on AMC. He, finds the people on Twitter who, love AMC, and then he, retweets them and just talks mad shit. So very weird that he dropped that rumor yesterday. Not to mention Gasparino is just, he's the amount of rumors that comes out of him is wild. Yeah, you were saying it. That's why I got to read it. I was like, dude, what the fuck is this? So very, very odd. Very, very odd. Biden tweeted about EBS? What? How? What did he say? Did he say something about Narcan? Ba-da-ba-ba-bop. He didn't know. I think he knows how to use Twitter. So Baba keeps going up. At the 101. Unit? No, I haven't. What type of? I'm assuming it's a REIT. In the long term, I know it's speculation. I know it could be worth 1 or 52. Yeah, that's it. I mean, they may not let it fail, and I think there's a heavy interest in not letting FRC fail. But at the end of the day, you don't know. I mean, because it's just like when we look at it, it's like even SVB shouldn't have even happened. So it's like, yeah, like they won't let it fail, but if push comes to shove, they may still probably have to deal with it, unfortunately. So it just all depends. But like I was telling you, it is $1 or $52. That's it. No in between. Are they going to pause? It depends what happens here with everything else, but most people, it's either at least one more rate hike and then pause, or depending on if the banking situation dissipates and inflation goes back up, maybe that scenario changes just as fast as we initially got to here. Just think about how fast we've already flip-flopped on this idea. Why stop hikes? Well, that's the whole debate. Again, this is exactly what Powell said. They are, even on the dot plot, they are expecting that the banking situation will have a similar effect to raising rates. How much, they don't know. That's what they're monitoring. They're expecting GDP to get affected by at least 0.1 by the end of the year, and then 0.4% by next year, just simply based on what's going on, added to just how the economy has been. So why they would stop or pause is because rates are high, so they could keep them there. And then if the banking situation leads to a tightening of credit, that would be a pseudo rate hike. And then they're hoping that could help bring down inflation naturally through economic pain. But if it doesn't happen, and the banking system, we brush this off and we never hear about it again, then they would have an incentive to keep raising rates and then, again, go back to the primary focus on inflation, and then making sure rates and interest rate policy, aligns with that goal of making sure it doesn't go out of control. The banking system is sound and resilient. That's why Powell said all that. What the hell is this? Is EBS? Why is there's an update on EBS? So Bloomberg just put out an article on EBS. Shares rise after the largest jump since March 2020. After the approval, FDA says it's the first naloxone product approved for use without a prescription. Shares of EBS were down 25% year to date. Stock paired most of its earlier gains by Wednesday. Wall Street is largely cautious on EBS, even with FDA approval. Our view is while we believe the OTC switch of Narcan is a long-term positive for EBS, we remain cautious on EBS shares until we gain resolution of the debt refinancing and the long-term revenue outlook for its smallpox and anthrax vaccines, said Cantor Fitzgerald, who is neutral. Company has no buys, 3 holds, and 1 sell rating with an average price target of $16.30. Petrobras mulling reviewing strategic plan. Is this the calm before the storm? Kind of. But, with what bonds, the bonds are saying something's up. And I think in the meantime, we're going to watch wicked bond swings right before the hurricane, I guess, if it's a storm. ENVX again. Netflix is running on the high. ENVX, Enphase, both of those are at the high right now. NVIDIA, Tesla moving, but some names moving a little bit more than others. You just hit the high again or right below. Healthcare went green again. Tech is now number 1 on the day. It has surpassed real estate. But real estate's number 2. You were right below the high. I think you actually hit the high. So, yeah, you wicked right into the high, but you did not set a new high. I'm still in Iova. We were just talking about that a couple minutes ago. So I'm either looking for like $8 on that one, or potentially we could hold till November. So if you want to wait 8 months, 8 months, Iova has a PDUFA. I don't know what you're into, but that's just if you could be really ahead. NCR, Raul's coming. Well, Shrek is fighting first. NCR Pop, yeah, with volume. Baba keeps going now. I think this is helping us get lifted up here, too. It's weird because not all the other China names aren't even up like that. I already sold Netties. It's around the same price. What was the Pinduoduo news a couple days ago? Didn't Pinduoduo get clapped the other day? Oh, I think it was Google suspended the Chinese shopping app. That's what it was. 10 minutes till power hour. And then Pinduoduo said they strongly reject it. That's what it was. Disney big breakout. I'm almost ripped after losing 100 pounds. Damn, you actually lost 100 pounds? That's crazy. Yeah, EBS has already been approved. That was this morning. Biden spoke with Tennessee Senator Blackburn on Covenant shooting. Do we know where Jack Mo? We saw him the other day. Remember, that helped out a lot. That's literally the last 2 days. I mean, it was just seeing him. Troika. Oh, you guys remember this one? Y'all were loving this a couple of weeks ago. So that thing's moving up. Maybe you get your round 3 or round 2. Again, you hit the high. You didn't set a new high. Actually, you did by 0.005. And then back to 40.17. And then 10 minutes till power hour now. Takeover offer for Troika. Troika. What's Troika even worth? 79 million? Troika. Let's see. Offer approved by GNS board, proceeding subject Troika. Go ahead or not. Yeah. Genius says they sent Troika Media non-binding acquisition offer. It's not a guarantee. It's one of the multiple companies. It's all from Twitter. That actually seems pretty good. It's the tweet from the CEO. Should we do it, Chad? Lord, forgive me. top tick Josh. How many did I buy? Damn it, I did it again. I bought 5,000 shares at 24.5. I don't even know the fucking price because it's a penny stock. Let's see. I mean, it was up at 80 the other day. I know everybody loves this one. I said be careful on this one, but that news is it's just hitting now. But be careful. Top tick Josh might hurt you. Troika, you've heard about this one. Everybody was asking me about this every single day last week. I never said the word troika in my life. I've said trachea. Sorry. It reminds me of that. It's really fun to say. Troika. I don't know if that's how you say it. Even spy popping now all of a sudden. Oh, there it is. New high on the day. 40.20. Yeah. Yeah. Moving up here. Let's see. 40.39 now. 40.34 to 40.39. And power hour in 5 minutes. So let's see. I believe volume is still low. Yeah, volume's at 47 million on the day with an hour. We're probably going to do similar volume to what we had yesterday. SPY broke 50 DMA. What did you buy? I bought Troika off of that news. We're at Powell zone. We're getting there. Again, we're making our move towards the Powell high. But just watch out. Every single high you've hit today has instantly been met with some sort of sell-off candle. Except for this one right here. And it lasted for 4 minutes. And then once you hit the next high, then you started to dump. So just be careful on that. You took the plays off the screen. Yeah, everybody just kept asking me. I mean, there would be plays like right in front of people, and they would still ask me. So it's like if it wasn't even being used, I mean, what's the fucking point? I mean, I'm down to bring it back. I'm down to bring. We'll see how involved the chat is. You know what I'm saying? We'll see how it is. Making money off Troika. Well, good luck. That's moving. I mean, the news is just early. It's a tweet from the CEO, but it's still sketchy. Just be very careful. I'm still not I don't feel good about it. I honestly, I might end the stream early so I could go shower it off. But other than that, just be cautious and we'll see. But if you've been in the chat, you probably witnessed every day 2 weeks ago, this stock was getting brought up. So that headline came in, and I just know the source and how it played out. It was early, so we will find out. And then last time it went, yeah, you might be able to double up. We'll see. Make it free? I don't think it'd be free. I think I spent $1,000 and I'm up 170 on it now. So I think I'm up 10 to 17. I don't know what I'm up on it actually. Troika. Sorry. What is that? 12%? 12.9? If it halts, I'm surprised they haven't halted it. But there's been no other. Right now, this is all just traders and then, again, the news circulating. Troy K, the CEO just tweeted that they got an offer. And apparently this is what it was. And then the thing about Troika, remember people were talking like it was like some naked short shit. It was just a hype play. So Roger James Hamilton, CEO of Genius, tweeted that his company has sent Troika a non-binding offer to acquire them together with a proposal on capital restructure. We don't know. They just sent a proposal. So the CEO of G&S is the one who tweeted it. Again, and this is G&S going down as that news is sending the stock up. And then SPY's still going, so you have yet to get a sell-off candle from hitting the new high. Meta's on the high too. Wait for NVIDIA and everybody else to go. Even Micron's about to go. Intel's already running. It looks kind of squeezy, but like I've told you, somebody asked why we even say that sometimes. And today doesn't really look like a squeeze day because you just gapped up. But if it runs to 40.34 and like keeps going, it could turn into a squeeze. But right now, it's kind of just doing this back and forth. I mean, I'm waiting for the sell-off after hitting the high. I think you're going to get a stupid candle here pretty soon. So Petrobras plans review to comply with firm's previous obligations. Window dressing day. It's a couple days before the quarter, so this is where things will settle. But I'm sure even this Friday is going to get really exciting. But we are expecting the quarter rebalance, then start a new quarter, and then Friday's data will actually be packing a punch in terms of volatility. No stops. EBS kind of working its way up, but not like it was in the morning. Apple's still on the high. Bonds are coming down now as we're starting to run up here. 40.21, that's a new high right now. Again, you're getting to the high point of Powell. Like 40.24, you had some stability for like 30 minutes here, and then you got the breakout. So very big, very, very big, Habibi. Where's Baba? AMAT on the high. Baba's working its way up still. FDIC moles squeezing biggest bank as it plugs 23 billion hole. What? Whoa. Something's coming out right now. What the fuck does this mean? FDIC is mulling squeezing biggest bank as it plugs $23 billion hole. Bro, what does that mean? The headline is they are squeezing a big bank. Huh? Bro, what does that even mean? The FDIC's industry faces special assessment. Politicians are pressing agencies to spare small banks the cost. So facing almost $23 billion from recent failures is considering steering a larger than usual portion of that burden to the nation's biggest banks, according to people with the matter. Yeah, JP Morgan. Oh, there it is. They're going to make JP Morgan and the other guys pay it. Go for Goldman. Goldman, I think, still has more meat. Yeah. All right, took 50 on Goldman. That's kind of big for them, but it's still not near the lows, so I'm kind of happy with that. Yeah, they're posing $128 billion. That would add to the behind the scenes. They're looking to limit the strain on community lenders, according to people with the knowledge, and they want to have an outside portion to the much larger institutions. So representatives from JP Morgan, Bank of America, and Wells Fargo declined to comment. So that's what they mean. So they're going to make the big banks pay more. We'll see. I'm going to cover that Goldman, though, pretty quick. I'm hoping we just get some more news hype with it. Because I want to be short on them, but I really don't. See, we're already bouncing up too, though. 30-19. Yeah, Bank of America and Wells Fargo. I don't think Goldman was listed in there, and even J.P. Morgan's lower. I went with Goldman because they're the ones with the most meat on the bone there. And then it's like, it's pretty much what? I think this was around the same price from Thursday, Friday, or a little bit before that. So we'll see. J.P. Morgan dropped big. I'd watch Bank of America and Wells Fargo still. They're kind of holding on. Again, that was the stupid drop on the SPY, and now it's instantly getting eaten up right now. I shorted the shares. I shorted 50 shares of Goldman. Not a recommendation. KBW Bank Index pairs gains. FDIC moles squeezing banks. Again, watch JP Morgan, Bank of America, Wells Fargo, Goldman. The news is that the FDIC wants the bigger banks to pay more money in terms of like replenishing the FDIC insurance thing. Yeah, JP Morgan quickly turns negative, hits session low. Let's see if the SPY comes down. Again, XLF was up 1.5. Now it's only up 1. It's good for regionals, but I think even KRE is dropping on it. But now this is an update. I mean, it's kind of bearish. I mean, or at the very least, you're finding out how they're trying to pay for this. So remember, I mean, the FDIC is taking mad losses on a lot of these. They're trying to say it's not borne by the taxpayer, but you know it looks like what they're going to try to do. Again, that was a big question everybody was asking today. They're like, why should our constituent banks pay for this? And now they're saying, well, you're not going to pay for it. We're going to make the big banks pay the most. So it's an update, but it's quite interesting. Troika. Troika's still going. Wow, 42%. Shit. I don't think there's any more updates. I think it's just moving. Raul inbound. Coin huge Clifford. Not too big, but I think it just started dropping with that news. Again, keep an eye on the big banks, though. See what they do. Because it's kind of having like that immediate reaction, but then they're like kind of in shock right now. Hey, where was it? This was the previous high. I guess it was here last Friday. They look like they got hit by the banking sector. At what price? I'd sell Troika now. I would chill. I just thought it was gonna move, but I'm kind of down 20%. Not so bad. Not so 18. Thoughts on Wells Fargo? I think they'll get affected. I think right now that was bad news for the big banks. That's like your next update. It could turn into good news if we find out it's not going to be that much. JP Morgan, they're selling off a little bit more, but so far, again, you have that shock reaction and then they're holding. And now tech is still running up, though. So watch out because you guys know what's going to happen right now. I would actually look for tech. I'd look at Amazon, Apple, Microsoft, because if those big banks are going down or have a reason to, motherfuckers are going to go straight into tech. Yeah, Netflix is moving up 330. MS is coming up slowly. I feel like we haven't heard about Morgan Stanley in a while. Bank of England man says we look at credit conditions. on all the time. Ford at 12. CRM's going up. Oh, CRM keep killing it. CRM, I wish you were cheaper, Habibi. CRM at 200 could be a big deal. U.S. approves possible $350 million sale, military sale to Bahrain. And then SPY, I mean, we're still at that big bank stock candle, or when that news just came out, it was like, what, 5 minutes ago? 10 minutes ago? And you're still above 40.17. ARM. Troika's still there. It's about to hit 30. Bahrain, no. He's from Qatar, I think. Or what did he say? I forgot where Abdul is from. 40.17 is an important level, yeah, I would say. I mean, we haven't even been above there since Powell. So, like, 40.17, that last sell-off day after Powell, you couldn't even get this high. Even on Monday, we gapped up. We did something like today, but then we ended up selling off. So we actually held today's gap up and went above 40.17, but I would argue it's a pretty important level. I mean, it's holding it decent right now. And now big banks are already recovering. Goldman's already up $1. Micron, new high. Hasbro on the high. Dude, Micron's in 7.8%. And then Intel's up about to be 8%. What'd you miss? Not much. I think you're chill for now. Troika. Oh, what is that? 25% now? All right, I think we're good. I don't even know what this thing is priced in. Where is it? Oh, there it is. Did it get halted? Or is it still trading? No, it's still going. All right, I sold out of my Troika like 27%. So I made like $300. I'm gonna just go buy a PlayStation or something. Fuck out of here. That was fun. Got some movement today. That was cool. You know what I'm saying? That was kind of cool. Oh, there you go. I gave you a little top tick too, so I'm gonna give you another 10% by me selling out. I got you, dog. I got you. Imagine you wake up and it's $3. It could happen. And I'll be like, damn, that's crazy. You know what I'm saying? I'll be like, it happened again. Don't forget, it was just like 5 days ago. I sold out for $40 a share, and then that bank stock went up $300. So, yeah. And so it happens. You know what I'm saying? I'll be like, oh, damn. That's crazy. Penny stock foul. What do you mean? That's not even penny stock. Did you hear what he said to me? He didn't even say if it went up to $1. My guy said it goes up to $3. You know what I'm saying? He wasn't even like most people. They're like, I got 1 million shares. If it goes up to $1, I'm a millionaire. He was like, it's going to wake up at $3. Yeah, that's $3 million. You know what I'm saying? Yeah. Okay. What else was there? EPR. What do you think we see? Do you think lows Q2 or Q3? I think it's possible, but it's again, how or when we go there is going to be very difficult to determine. So it's just like, dude, we have so many things going on. I think everything is going to be accelerated, and we are going to have a lot of opportunities for a back and forth of overreactions. So 40.21, you're about to hit a new high now. You're half a point below it. 72, 75, 73, 70, 76, 74, 69. Come on, hit a new high. It's about to do it. 40.21 again. You got about like 10 more points to the next level. NVIDIA, yeah, I want to kind of shorten NVIDIA, but I think I should just step away. I think I should step away from the computer screen because I don't know. That NVIDIA 270 is very tempting, sir. Very, very tempting. I'm trying my best. I'm trying. Micron's hitting a high again. Intel up 8.5 with zero regard for life or fundamentals. Awesome to see. Even Quali World went nuts right there. You short, I'll buy. Hey, man, one of us will win. You know what I'm saying? I changed the video 3 times. I don't want to worry you, bro, but you might be hallucinating. You might be hallucinating. So you should get that checked out. No, I'm just messing with you, man. But, yeah, I wanted to fuck with you. I don't know if you trip out. Like I said, like the craziest tinfoil, like just imagine that like I'm not even real and that all of you guys are like, you're like, oh, you see this guy named Josh? Like I don't even exist. I'm just like an inner voice in your head and you think you're watching the stock market. All you're doing is sitting at home right now trading and like you might have voices in your head. SPY high, everything's running. There it is, 486, 40.23. Wait till we get to 40.29. 40.29 is the level, and then 40.39, or 40.33, and then 40.39. What about the chat? It's all in your head. So that's all your subconscious, and every name you see in the chat is like a part of your subconscious. So like when you see like people that you agree or disagree with, it's not even like you're mad at somebody. It's just somebody in your it's like your subconscious. You know what I'm saying? It's pretty wild. It's a trippy concept, dude. Trippy concept. $40. Now it could get a little squeezy, but I think we got to get above here. Like I've been telling you for 2 days now. If you get above here, mother effers are gonna run it up. If we turn that around, Josh is talking to himself for 6 hours a day. I mean, sir, I'm not really that far from it. Like, I am sitting here 6 hours a day. I'm in a room right now. You know that? I'm by myself in a room right now, just speaking into a cylinder box, just going, hello, hello. So I'm not too far from that. You know what I'm saying? Mm-mm. 41.3. Is that 401? Yeah. 40.26, Chad. It's moving. So get ready get ready for the stupid red, but this is kind of like that last rally, but like as you could kind of see it, these candles are a lot more aggressive. Now Tesla's playing along. Goldman, oh my gosh, even the big banks are running off of that. Yeah, XLF just rocketed. I think that's why you're getting fuel from it. Bro, I think that just turned into bad news. I think that just gave a shit ton of fuel for the market right there. That's actually insane. Again, all the big banks just ate that up right now. Maybe JP Morgan, not as much, but like Bank of America, Wells Fargo, every big bank is already doing it. I didn't close my short. I'm still holding it. I'd be down to hold it overnight, but I don't want to hold it, to be honest with you. But I'm down to ride it out for a little bit. I think that news, if we get a little bit of bank panic after 3 days, we'll see. Again, Tesla's running, Apple, Nvidia at 270. Don't do it. Please don't do it. If one of us go in, then we all go through it. Man, I really want to, but I'm not going to. Baba puts, Apple leading, Meta stuck at 205. I think the XL, that just fueled up this rally right there. That little pop, that had to be the banks because that was a very quick turnaround. Mm-hmm. Yeah, we are approaching the Powell level. $40.27. So you got like another 10 points though, or at least you need 8 points to get to 33, and then like 12 points to get to the high of Powell. But even 33 will be a big one. One more and it's squeezed. These candles look different. That's why I'm blaming that bank news right there, because you weren't moving like that up until like right around that occurred. And then now these candles, I mean, you've moved more in size here in 1 or 2 minutes than I think any other point all day, maybe except the morning. You're watching history. Watch as the greedy get executed in public for everyone to see. That's super dark, bro. But first you have to watch them celebrate and win, just to add more to your plot. So that's why it's kind of, you know what I'm saying? It's not the type of scary movie you're imagining. Like, you know what I'm saying? Like, some people are walking in, they're like, woo! I fucking love this shit! And then some people may not ever have anything happen. Did I tell you? I have a friend of mine, and his mom, she was like at first, when her son wanted to get into trading, she was worried. But this lady's a multimillionaire, and like she has like a $5 million, I think it's probably worth $12 million now. She got one of those nice like brownstones in New York. Like, this shit's worth a grip, right? And guess how she made her money? You'll never believe it. You'll never believe it. She got caught up in the 2001 tech bubble. But she never like was into stocks. So she got into it for a little bit. She got in on the 01 hype. And then one day she was like, you know, I'm up millions of dollars. I'm going to sell out. Never traded before, got super lucky on the tech bubble. And then she sold out, I think, like 3 months before everything collapsed. And now she is a multimillionaire, and she's been like that for the last like 20 years. So why I'm saying that, because even then, even in the final moments, there are opportunities. And again, like you're saying, all the greedy pigs are going to get slaughtered, but don't underestimate. I mean, there's some people who get in and get out, and even right before anything, I mean, just a couple of months of timing or a little bit early is all it takes. So I don't advise you to try to time that shit, but, you know, just to add a little bit to the story. It's a pretty cool story. Yeah, she's super, super chill. Like, and she just never traded stocks. So I remember, again, it was like her son was, I'm friends with her son, and I was helping him involved in it. Like, this was like in, I think like 2016, maybe 2017. And she was worried because she was like, are you sure the stock market? And then she told me and I didn't know this about her the whole time. And she was like so scared. And she was like, I just got really lucky. But that's it. How long hold Troika? Username by GME. Yeah, this is going to be awkward, sir. I already sold out. I don't want to offend anybody, but I'm out there. But did she know the banking system was sound and resilient? I'm not too sure. I think she did. But yeah, I already sold out of Troika. We got 25%. Took a little bag. It's like $300. I think my investment was only $1,000 though, or a little bit more. So not bad. I find that people that don't use their real names kind of sus. Yeah. Like, I think they put it in the indictment. I think they found out that Sam Bankman-Fried wasn't his real name, right? No? Is that, I don't know. That's, because I feel you on that for sure. Like, because, you know, like, because if they smile and like, and they look at you and they like tell you they're totally legit all the time. I like, yeah, like, I don't even know if his name was SBF. I don't even know. My name's Joe. Yeah, that's my name too. That's just what's fucking popping. No, Sam Bankman is not Squidward. I use that designation for his girlfriend. Because the parallels are uncanny. But Sam is, I don't know. I called him Swamp Monster the other day. But other than that, I don't really have a nickname for him. Like maybe Fake Vegan. But, yeah. No, tell me she don't look like Squidward, though. For real. Like, you know what I'm saying? Tell me she don't look like Squidward. It's cool. Nothing wrong with that. Like, it's, you know what I'm saying? I don't even, like, that's cool. Like, Yeah, I feel like Swamp Monster is kind of appropriate. Don't make fun of God's creation. Like I was saying, I just said there's just uncanny parallels. I'm not really making fun of her. You know? Like, I didn't say, ha. I was just like, you know, she looked like Squidward. That's it. Like, I look like a lizard. I look like, I don't know. If you, like, took, like, a lizard and a pterodactyl, you would get me. And then if you receded its hairline and then took super glue and put, like, little curly hair strands on the side of the little lizard ears, it would look like me. So that's not, I'm not even like, you know, I'm not even clowning on myself. I'm just trying to paint a picture, you know. That's all. Bruh, stop. I don't know. I'm just trying to paint the picture, man. So Green Goblin, nah, he got better features. I don't know how to describe it. You'll see it one day. You'll see it. You look like Drake with some pimp curls. Nah, I'm weird like Drake. Like, Drake is a weirdo. I don't even think I'm as weird as Drake. Drake is kind of sus. Not like in the sus way you're thinking, but like Drake is kind of weird, bro. Like, Drake got too many songs where he like, I'll buy you a Birkin. I love you, girl. Let me buy you something. I bought this. I got a diamond ring. I got a necklace with all the like. Why he want to propose to every girl? I don't get it. Like, it's just still like I do get suspicious towards Drake. Where are my recession boys at? Just read the room, dog. Read the room. Bad timing. Okay, we're going up right now. You know, we'll see. But 427. 10 more points. 10 more points. Can we play Pump It Up? I told you, Pump It Up at 4,300. That's the only way I could justify it. Otherwise, it's just purely offensive. Because I would be lying if I played the song. There's no way you could tell me to play Pump It Up when we were at the same level as Thanksgiving And then now even worse, just don't forget, today is March 29th, right? You feel me? So March 29th to April 6th, we were at the same price we are at now of 2021. So I can't lie to you like that, playing pump it up, when low key the market has remained stagnant for roughly 3 years or 2 years. Q1 butterfly. I mean, if it goes up, man, I think we could find another butterfly here. But we just got to let them show up. Actually, I wonder what they're worth. Let's see. Let me try a little butterfly. What's the date today? March. Let's see, May. I don't even know if May will hit. Kind of feeling June. Ah, I found one. This might work. Same exact butterfly, free. I just don't know if it's time yet. For June, you would actually get paid. You get paid $90 and then commissions $26. That butterfly is decent. Same exact butterfly, a little bit out of range. So let me try another one. Oh, that one would be free too. That is a broken wing, yeah. And that would be for $360 by June. Is that June or May? No, that's June. I'm kind of down with that. Will they give it to me for $0? Let's see. All right, they gave it to me for free. Tied up $1,000 though. And then again, your max gain on that, I have no idea what it is. Max gain is $5,000 for every 1,000 that you put up. Let's see, plus 10, 365s. The max loss, I think, is $5,000. So here's the play. No, max loss is $1,000. So max loss is $1,000. Max gain is $500 or $5,000, and then it costs nothing. So you saw me do this before. I remember at one point I was going. I think it was like we were up like 9 or 10,000 or 6,000 out of 10,000. So yeah, you just pay commissions, and then it ties up $1,000. But it's 2 months of time. So we'll see. They're 3 months of time, really. I want to wait though. I only did one. I didn't think it would fill me. That's why I just did it there to see if it would fill, and it actually did. Bro, that whole time we've just been chilling at this high here. That's crazy. Oh, shit. There's only 30 minutes left. Nope. I was up today, then came back down. Meta's still running. Now Wall, regionals. Regionals are getting a big pop here all of a sudden. So they're getting some end of the day runs. The butterfly. So we've done this play before. It's just pretty much if the SPY goes down to 360 by June, you get paid out a ton. But that's it. It's a multi-leg option strategy. And I would say we'll look at my other video. It's from last year or like October or August. And it is, I don't know what it is. Like, how do you say? I forgot what the title was. But it's a broken wing butterfly. $5 wings with an extra $1 to the downside. You lose if the market goes below 364. So the only way I could lose on that play is if the market drops more than 360. Or so if it goes to 354, excuse me. All right, says, well, you got to do it, you got to make sure you sell 20 of them in the middle. I'll make a video on it. I mean, I have an old video on it, but if you don't know what a butterfly is, I mean, just be careful because this could tie up a lot of money. The last time I did it was with a lot more size. So last time I did it, it was on 100. So yeah, it was a similar bet. Wow, this one you have to put up. Damn, man. They're making you put up 10 grand. I'm kind of down with this. So this one, $5,000 to make. It's the same trade. So it could be 25. If you have to tie up $5,000. The market drops, max gain would be 25K. How much? I made nothing last time because I got greedy. I was up $6,000, $7,000 the day of, and then that was the day, October 13th. That was the day where we flushed into the low and then popped right back up. So I had about like 5 to 15 minutes of profit, like max profit almost, and then the market just did one of those stupid bounces, and then we never saw that level ever again. But it was free. That's the thing. It cost me nothing. Oh, yeah, I remember. You did the week ahead, and you hit it open face. Yeah. I think a lot of chat, it was great. I mean, it was a solid play. Like, you can't, like, there's nothing to complain about it. Yeah, last time I did it was like right here. So I made the butterfly here, and then it shot. The market kept shooting up for another week. And then from August to October, we had free protection. It cost me $0, and every day the market would go down. That put gained value. So even before, you still get some protection by it. But the only downside is that you have to pay for commissions, and then you tie up a lot of money, and you could still lose on it. So like if it goes below 354, you'll lose the max gain. It has to close there though. Market is sound and resilient. Amen. I'm getting scammed. Go watch the other video if anybody has the title. I think it's called How I'm Turning like $20,000 for free or something like that. Wouldn't shorting shares be better? Well, shorting shares would cost you more money. You'd have to pay to short the shares, and then you take unrealized losses. So, like, I can't lose on this play. So, like, here's the best part about that play. Like, let's say the market, like, if you shorted it and the market goes up 10%, you're down 10%. If the market goes up, I don't lose anything. Even if the market goes down, even if we stay in a range, there's nothing. And I paid nothing for it. So, all I had was premium. I mean, technically, I spent what? That's on 50. I did 10. So technically, commission. I spent $26. That's my only fee for this play. So unless the market tanks to 350, that's the only way I'm going to lose. Otherwise, it cost me nothing, or $26. So that's what there's not too many plays out there where you could get, you know, a very good downside protection, but having to pay for anything. The max loss is 2,000 if it goes to 350. So that means the market would have to dump and then go another about $10 to $15 lower than where my initial strike price is. You could sell out whenever you want. So that's the beauty with butterflies is that, is the max gain 5K? Oh, yeah, it is. 5K max on that. But, like, the beauty with the butterfly is that, like, let's say the market drops 5% tomorrow, that butterfly will still go up in value. So you could sell it out whenever. But for the most part, I mean, it was nice when we had it. Last time I bought it, I loved it because when the market was going up, it cost us nothing. And then if the market wants to get stupid volatile for no reason, you got this crazy protection play. Remember, you like soccer? Ryan Reynolds' team, Wexham, is playing Man U. I only like Ted Lasso, but I didn't know that we had soccer games here. Chad, you can check an options calculator. It'll show you, yeah. The risk of getting exercised early is non-existent on a put that's like 10% out the money on an index. Bank of England man says getting back to 2% CPI is challenging. My company decided to not accept LOCs from FRC and requested current tenants move to another bank. Commercial real estate company. Think this is the start of the fear. I think it's prudent, but yeah. I mean, everyone's already worried on FRC. I think that's just smart by your company. They just don't want to take the risk. I played the last butterfly for 20 and you got exercised early. Really? What brokerage were you on? And when did you get exercised? Because that shouldn't happen. You legitimately, on that play, you should not get exercised. There's like no way, unless even if it goes in the money. I mean, we held it to the very last second. Yeah, you're on Webull, so I mean, maybe that's why, but even I'd be careful with Robinhood, but usually that should not occur. It's too far out the money. So right now, until we get down to 360, that there should be zero risk in that. Yeah, you have to tie up the collateral. That's the only downside. You probably shouldn't take the trade if you don't understand how butterflies work. Yes, but this is what happened last time. I mean, this is what happened with Bill. I could bring up something to y'all, and then we're going to get like 17 minutes of straight questioning on it. And then we're like, all right, wait a minute. So then what happens if I do? Okay, now what happens if Kevin Durant gets injured and then I make the play on Webull, but then my mom makes an account on Robinhood? What would be the max loss? Is that I don't, and then we do that for about 17 minutes going through it. But I didn't even want to do it. Somebody said butterfly. And then I was like, let me take a check. And then I saw the similar butterfly was available, and it said there was a huge spread on the play. But there's a huge spread on the play, but then it filled for free. So I said, why not? Bonds are selling. I mean, ever since we started rallying, that's where the bonds gave up a little bit, pretty much where they opened. Yeah, we're probably going to talk about this every day. Anytime I bring it up, there'll be like 15 to 20 questions. Go watch the original video. It's dope. Because that play actually worked, at any level. I think this play, I didn't want a butterfly till we went up to 430, actually. So believe it or not, I want the butterfly at 430 or 420. I think that's a way better price to do it at. Because then you could actually probably even get paid on it or just get a way, way better play. I could make another video on it. The dollar should start tanking if we do print more. Just depends. Again, even the news today, they said they're going to It looks like they're going to try to stick the big banks with the bill. We'll see. How do I sell TRK? Troika? I think you just sell it. All right, another pop. 15 minutes remaining. Yeah, Amazon on fire. Again, regionals are starting to move there. Even the big banks, they gave up a little bit, but even XLF in general is holding. So big banks help them out and get clapped for it. Yeah, they should. I mean, in a weird way, but like a lot of the congressmen today, they were bringing up good points. Like if the FDIC is losing $20 billion on every one of these bank deals, and then you're going to go to like a random regional bank in Michigan and be like, hey, y'all got to increase your insurance payments to the FDIC because we had to use it. So like, honestly, I mean, it's quite... I'm a Californian, but this is where you should probably get mad at California. Because like you got to realize it. This was one bank in San Francisco. Every single one of these banks were well capitalized, sophisticated investors, and big money and uninsured depositors. These aren't even like normal citizens. I would argue these are like mega rich, ultra rich people. So it's like if you're really gonna go and then penalize the smaller banks that didn't engage, like they actually followed the rules and all of that. It's a pretty shitty deal if that happened. All right, you're ripping up here another new high. We are not done yet, Chattadonia. We are not done yet. 40.27. Again, 40.33. 15 minutes. I don't know if we're going to get to 40.39. That would be insane, but definitely 40.33 is in target right now. Taking bank problems and inflation out of the picture, what is any reason for the market to go to the moon? I mean, if there's no banking issues and no inflation, I mean, there's companies making $30 billion every 3 months, or more. So that's why you would, that'd be very bullish. I'd be very excited. You mean no inflation and no banking problem? What do you mean, bro? I'll get me some crypto too. I buy maybe another NFT. Fuck it, man. I might even buy me a used car. You know what I'm saying? Just sell a used car. That'd be great. I don't know if that's the answer you wanted, but that's sadly the reality. I mean, that means we wouldn't really have much problem and companies making a lot of money. It must be good. Must be good. Airbnb's going up. I mean, other travel plays did very good, though, like Marriott and Hilton today. Snap got crushed after leading, but then Meta's starting to run up now. Again, Google was ugly in the morning. Actually, they're still kind of ugly. They didn't really do much. And then Tesla's working its way up. Peabody Energy halted, news pending, BTU. That's interesting. BTU halted, pending news. And then Toronto. Air Force to end Lockheed-led hypersonic missile program. That doesn't sound good. Yeah, LMT. Watch out for LMT there. They just had like even a failed launch the other day. Or like the data things. Does that mean sell silver? Why? Okay, 2 minutes. 2 minutes. It's your boy. XLF is breaking out now. Goldman's kind of at the same price, so that one's not squeezing the same way. EPR went up. Where's Coinbase? Coinbase, still 3%. Amara, Riot, Starbucks on the high. The other coin or crypto plays are moving up. Oh, missiles. I didn't know that. That was a high-level joke, bro. That one just went way over my head. No earnings talk. I think there's a couple of earnings today, but I don't know if they're that big. Microsoft's running now. High ticker's on full blast. You might get your squeeze. You're on full blast coming into the 10-minute rigged right now. 40.29. You are 4 points away from the next level. You got one big order here in 10 minutes. It's breaking through before 10-minute rigged. They're not even waiting. Wow. NASDAQ's up 1.9%. You got a 2% gain on the NASDAQ right now. Habibi, very big. Very, very big, Habibi. High ticker printing, holy. It is 1 minute, 30 second, 5 minute velocity is through the roof. And these candles are getting big now. So get ready, 20 sec. You just cleared out a lot of orders there. I believe volume is still low, though, unfortunately. So you'll do a little bit more volume than yesterday. Maybe you might do like 10 million more, which was all from the first hour. Apple breaking out, new high, team on the high. Again, high ticker is just going insane right here. Healthcare is still struggling a little bit. So there's 10-minute rigged. I don't know. It might go. That was a very aggressive launch into 10-minute rigged. The green machine. On the next episode of The Stock Market Hates You, traders woke up to Xi Jinping pumping the stock market. I thought China is banning everything. They're not banning it. We're going to the moon. Recession what? They were fighting. No, it's supposed to go down. It's a bear. The banks are failing. The banks were failing. What are we going to do right now? No, it's all fine. Everybody knows you should buy right now. Buy the dip. FRC. It's great value. I don't know who's Jim Cramer. Who's the banking system was sound and resilient. Tune in to the next episode starting tomorrow, 6 a.m. 1.2 billion to the buy side. So that means we might sell off then. GDP tomorrow. Yeah, tomorrow got a little bit more data. So that's good. You have initial jobless claims, GDP, and then core PCE could help lead some things. Honestly, we'll get an idea about Friday from core PCE. Core PCE quarter over quarter. Again, 9 minutes left here. You're right at the level. I mean, 10-minute rig didn't stop it. You even got bid support after clearing some big levels here. Or at least some big orders that were put up there. Got the Air Force news. 10-minute rigged. Just usually final 10 minutes, there's like a lot of balancing trades and we get a lot of activity. And we've just noted, we've noticed you'll get like crazy moves in the final 10 minutes. Even the final 5 is what we call it. So there it is. They're moving up now, nonstop, 40, 30. 3 more points, Chattadonia. 3 more points, technically 9 points to get to the real breakout level. And that will mean we are above Powell now. Rum is up 4.6. Baba just led the way. That's it. Now it's a domestic American. China did start selling off there towards the end. Even Microsoft 281. Again, Peabody still halting pending news. Recession is over. That's cool. That's cool. Still holding EBS. Mobileye, DT, big pops on the high ticker. A lot of things are running. Oh, Nuhash. Let's go, baby. Amen. 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 Ba-da-pop-pop-pop. Market on close is there's a lot of traders and funds. People put market on close. So people will put in orders where they just say, execute this trade, buy or sell at close, at market, no matter what. So especially with the rebalancing, you'll get a lot there, but it's just a type of order, and there's usually money waiting at the end of the day that is set to those orders. Okay, 2 minutes till the final 5. Bro, I want to shorten a video so bad, but I know I'm not supposed to. I already took gold. I don't want to short anything. I don't even want to do I just know it's a trap. Everything's a trap. Let's go. You dodged the gift. Is that good? I don't know. Regionals moved up a lot. Short Tesla. Play your gut instinct. No. I don't know. People give you that advice sometimes, but I don't know. I'm just like, nah, man. You know how often I poop? Like, to trust my gut is honestly a bad idea, sir. I'm just saying, like, I just gotta, I gotta balance it out, a little bit of emotion, mainly go with what you know. Like, that's it. I like the risk to reward, but then I think the risk to the upside on NVIDIA is a little bit more unknown. Oh, that's final 5. You want to short Intel? Dude, I don't know how these shitty chip companies are just getting away with 9% rallies. I'm sure some of you are more pissed off about it than I am. I realized it quickly. It cost me $100 yesterday with Micron's abysmal earnings. And then when it die off of that, bro, after seeing a negative 36% margin and the stock shooting up 2%, that's when I just said this isn't gonna work. Citizens Unit investigated for sales of savings product, CFG. You got a Citizens Bank, or what is this? Citizens Financial, CFG. Investigated for sale of savings product controlled by troubled financier Greg Lindbergh. So they're being investigated. It's not related to anything regional. Probe comes as customer funds have been frozen for 4 years. Brokers and Citizen Bank branches were major sellers of annuities. Massachusetts regulators are investigating them. CFG. And then final 5 brought you down here a little bit. Ba-da-ba-ba-ba. Ready for landing, baby. Oh, Robin Hood earnings. It's game time. God bless you, Shelby. Thanks for all the donos. We love you. All right, ladies and gentlemen, we're making our final approach. As we make our final approach, you guys are holding on to any bags. Please stow them in the overhead bins above or firmly beneath your seat. We'll be coming through the house with a trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in the description. That's going to be your nightly watch list and main channel layover around 4 p.m. Pacific time. And then we're going to be taking off promptly around 6 a.m. out of sunny San Diego, California. So we make this final approach into San Diego International Airport. It's about 59 degrees, slightly raining on and off. Just depends on where you're at. Otherwise, a good day unless you thought the recession should be on. Instead, it looks like it was canceled temporarily. We are no longer under COVID guidelines, so no masks are required. But we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate your guys' business. If you're interested in your Cole Rapid Awards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the Colt, and hopefully have a wonderful evening. Let's go, baby. Let's go. Where did the day go? Today was like fast and slow at the same time, but at least today kind of moved. The second half here, the last couple of hours, you at least got a little bit more movement. Unless we end up at VWAP, then I'll just vomit everywhere. So I don't know. But otherwise, if you at least you got a little bit of movement, I could get behind that. I could get behind some movement. You know what I'm saying? I don't like these little days and then we stay the same, but we'll see how this range treats us coming into Thursday and Friday. Got a little bit of data on the way. Chad, you got to hear again from the banks. We even got more updates on the banks and what is required from the big banks. The China news carried us all 7 hours mixed with all of that. So wrap it up and bring it home. 1 minute. Go, 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 go. Ladies and gentlemen, boys and girls who do not have much time remaining, you got to bring it home. Data in the morning. We're going to find out what happens overseas. Maybe we get some bank news after hours, but you have less than 30 seconds. You got to finalize their plays. If it's an option, if it's a future, if it's shares, you better know what each one provides, but you got to bring it home. Speak now or forever hold your peace, Chad. You got 2 more days left in the week, so wrap it up. Let's go. What are you gonna do? 5, 4, 3, 2, 1. Ding 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 ding. Or nah, let's go, baby. Wow, we did it, we made it, we did it, we made it. Ladies and gentlemen, boys and girls, let's go. I need a GG. You made it. 7 hours in the books. Good game. It don't matter if you made money or lost money. I know you learned something. Everybody who contributed, all the members, all the non-members, all the stream alerts. Good game, baby. All the laggers, all the lurkers, all the lovers. Stop being shy. Why are you being shy? Why are you being shy? I need a good game right now. Stop being shy. Let's go. You made it to the bell. Let's go. Good game, Chad. That's what I'm talking about. Way to hold it down. All the people contributing, all the plays posted, all the news source. Go. I see YouTube, Twitch. God bless you all. YouTube, Twitch. Shout out all the donations, all the members, all the people supporting, all the people holding it down. Good game, baby. That's how you play. That's how you play. Beginning to end. Oh, first to wake up, first to leave, or last to leave. Let's go.
They don't mean a lot. Man, my money on stats, I can show you the top. Every bottom I bought, both the key and the lock. Don't believe me, just watch. Use my freedom a lot.
I need me to rock. You won't see me a lot. Monday to Friday, you need me, let's talk. Wow. Yeah. Come music. Okay, don't let me get too hyped. Don't let me get too hyped. Chattadonia. That's the day. How do you feel? Tell me how you feel. I want to know how you feel. Hey, guys. I hope you didn't forget about me. You remember I'm your therapist, so if you have any feelings on your mind right now, feel free to let me know right now. I know you're probably going through a lot of emotions here in the market, and it could definitely be overwhelming. So how do you feel about the market going up today? You feeling hyped? That's good. Hype is always a good feeling. Make sure it doesn't go too crazy. Amen, amen. You're feeling grateful. Wow, that's beauty. That's a beauty and that's a blessing. You know what I'm saying? Amen, amen, amen. Amen. Yeah, amen. I feel you. I feel you. That's good. That's good to hear. All right. Well, just in general, though, we're glad that you're here. If you got to get going, I hope all of you are feeling good. Oh, almost 2,000 likes. That's something I could give a horn to. Can I get a horn? Let's get a horn. That's the therapist horn, you know. But thank you for liking the video. And honestly, before you guys get going here today, I just want to tell you thank you. And thank you for supporting this channel. Thank you for being here. We appreciate your time, whether you gave us a second or if you gave us 7 hours. We really do hope it was the best, okay? And I hope you learned something. I hope you smiled. I hope you're feeling relaxed right now, too, and in control of your emotions, feelings, or passions of the soul, as Rene Descartes would list it. But we appreciate you, and thank you for being here, and thank you for liking the video, and thank you for being positive and respectful to your fellow Chad mates, okay? So thank you for all of that. We love and appreciate you, and I hope you have a great, wonderful rest of the day. And I hope you have a little bit of peace. Don't ignore a little meditation or a prayer at the end of the day, okay? Amen, amen. All right, good to hear. All right, I'm going to give it back to Josh, but I really do hope you guys are calm. Amen? Amen, okay. Am I good? Bro, of course I'm good. I've been screaming. I don't know. What if you guys aren't real and I've just been screaming at my monitor for 7 hours? That'd be wild. But Chattadonia, for real. Thank you guys all again. Members, non-members, it don't matter who you are. If you for real came in here and made the most of it, contributed, seriously, I appreciate you, man, and all the people with a good vibe, the people I could call my friends. I hope I know that I love and appreciate you day in and day out, and it is truly an honor. So God bless you and thank you, my friend. But check out the links. That's it. Actually, I don't want to waste too much time. Check them out. First link, Scream Alerts, Bootcamp and Real Estate course. Free alerts or paid alerts if you just want to support. Second link for the watch list. If you don't watch the watch list, you'll be cursed for 10 years. It's like it's an email thread, okay? I don't know. I don't think you'll get cursed, but somebody sent me an email yesterday and they said if you don't forward this to 10 friends, you'll be cursed. And I said, "What?" So I didn't want to get cursed. So I didn't know. You never could be too safe. So I don't know. Maybe is that joke too old for some of the guys in here? I think some of the young. If you have a full hairline, you don't understand that joke. Honestly, if you have a full head of hairline, you have a full head of hair, you don't understand that joke, and you will probably forward it to 10 people because you don't want to get cursed. I don't think they're aware of it. Yeah, you know what I'm saying? I don't think they understand. I do, and I have hair. I don't know, man. I'm not buying it. Okay. What are you telling me? Are you telling me the banking system's sound and resilient? I'm not buying it. I'm not buying it. I say we gonna need a hair checkup on Kirot. There's either that or you're just maybe you're an old soul. Maybe you're an old soul. I have okay hair and I remember. That's fine. Okay hair that makes a lot of sense, man. That makes a lot of sense. You know what I'm saying? Oh, it was RH, not Robin Hood. They're going back and forth, but anyways, I love you. God bless all of you, for real. Thank you. Check out the link, the second link, third link for that membership badge. Shout out to all the members, baby. Check out the merch. Check out the new channel. Sadly, there is no Cult Real Estate tonight. Tyler and Trey, they're at the meeting there, so they're leaving you guys today, but it's okay. I might be able to step in today and host the Cult Real Estate. It depends because I'll be in the car, but I might be able to stream from the car tonight. We'll see how we play it out. But Chad, make sure you check out all the other links. Make sure you check out the watch list. Follow me on Instagram at The Trading Fraternity. I am the private account, so don't fall for imposters, but ever since we went private, we have not had to deal with any imposters, so that has been good. And then how option pricing works, great tutorial. How to set up the long term, great tutorial. And then the prayer request wall. Me and my mom, we just like to pray for y'all. And that's it, Chad. If it can't flow through you, it won't flow to you. And thank you if you've prayed for me, okay? You know, as much as I would like to tell you that we are here to pray for you guys, you know, it's one thing because, you know, you see it, man. People show a lot of love to this channel. A lot of the Chads, man, they are really real ones. Not whether you have a badge or not, but you could see it sometimes through the badge. And, like, for real, man, thank you to everybody who's always looked out for me, okay? So, for real, like, that's it, you know, because, I love my mom. And I love my mom, and I thank my mom for praying for me. And it's always good to have somebody in your corner. But, for real, man, the people who have just showed just genuine love and affection, the people who have sent me good vibes, and the people who have actually prayed for me, man, just thank you. You know what I'm saying? Because it's like it's one thing for me to tell you I'm praying for you, but I thought I'd take this moment to thank you all out there who have actually sent a prayer my way and just genuinely looked out for me. So thank you guys, and God bless you. I really appreciate it, and it really means a lot, and it works, baby. Oh, they don't feel me, man. You didn't approve me. What's your Instagram? DM me. Like, bro, holy, like, you gotta DM me and like let me know, and I like give me like 1 to 2 weeks to like go through everything. But like if I know you in the chat, I don't know your Instagram, like let me know that it's you. Otherwise, I don't know if it's like a bot or something. But cause like, bro, you know, like Nadruk, bro, he was like, you didn't accept my follower request, and then he DM'd me because he said it after hours, and bro, Nadruk is ripped. I didn't know. I thought this guy was being bearish about the market 24/7. I thought Nadruk was I thought he was going to look more nerdy than I did. And this guy is just jacked, bro. He is fucking jacked. And I'm like, what the fuck? I'm like, yo, that's crazy. So we'll see. We'll see. But just let me know. Let me know. That's it. That's it. But Chad, that's the day. So shoot me a prayer. I'm going to pray for you. And that's it. I'm not ripped. I'm just like swole. I'm getting mad about it, bro. because like I took that little cardio break and like I stopped trying to eat and like I lost a little bit of weight and then now I'm just like lifting heavy again. But like I'm huge, but like I have so much definition that is just hidden by Chick-fil-A and McDonald's. It pisses me off. I'm telling, I need to. It's like it's there, but I'm just like I'm swole. Like I got size on me, and like I could lift there, but like I don't. I got the horseshoe. I got like the whole horseshoe. Like my triceps are crazy, but like it's still not like. It's just like, oh my gosh, if I just like was shredded, like I should be looking like one of them competitors right now, man. What am I weighing? I think I'm in at like 170 right now. But it's good. A little bit of fat around the stomach. Everything else is muscle. You know what I'm saying? Maybe I need to get that Ozempic. Probably do. Honestly, low key. But man, it's crazy. It's okay. You know what I'm saying? It's crazy. I already skipped breakfast. I don't know what it is. I'm 170 at 5'6", and that's it. And I can still throw up 225. So I'm back to that. Dude, I was curling 40s yesterday. I was doing it in public, too. I was at the gym just looking like a fucking asshole, just doing 40 hammer curls, bro. I could curl it, hold it halfway through, go slow on the, ooh, it's nice, but that's it. No, bro, I should be ripped. Anyways, now you guys got me talking about this. Now you guys got me talking about this shit. That's all. Well, I'm letting you know I'm letting you know my internal dialogue every time I look at the mirror. I'm not I could bench 225. I weigh 170. It was at like, I lowered it down to like 160-ish, 155, and then I gained the weight back. But now I feel very strong. I feel really, really good again, but I don't like, I should be way more ripped. Like I'm just like skinny fat. It's just not, they're haters, bro. Like I'm telling you, I'm haters. I could curl 60s. That's good. I look up to you. You know that? I curl 50s. That's great. I've done 50s on a video. I was curling 50s on the video, but like what I try to do though, like I feel like anytime I lift heavy, that's how you get injured. So like I've just been going really, really slow and just making sure I don't even care the weight. And I was trying to do more reps, but now I'm just like starting to like lift heavy again. And now I'm like, I don't like creatine. You have strong legs? Kinda, not really. So yeah, but anyways, I love you. God bless you, Chad. That's the day. I hope you enjoyed it. And God bless America. Okay? Okay, cool. Let's see. Let's see. What can we get? No, let's get it to him. Let's hit him with it. All right, I'll be right back.
Yeah. Go music. Benny, yo, Benny, you bullish. But baby, I'm not from Chicago. Heard me talking about IV and dripping the bad. They thought that I came from the hospital. No, I just came back from trading. Just to the sun, no vacations. I'm really not trying to be flagrant when I tell you that most of my calls will be naked. Funny when I make a bad play, I get a standing ovation. It's like I'm addicted to antibiotics to try to get rid of this clap. But fuck it, I always come back in the AM. To the GG, what's that stand for? I am not a drug dealer, I'm a landlord. On my Tennessee the roof, that Mercedes-Benz don't need one. I went from Bailey to Bel Air, from the slums to the Ville to the top of the hill to a street where you can't park a car without a parking pass. I'm just trying to chill with my boys in the island off the coast, bar hopping like it's Alcatraz. Watching make moves like a salsa class. Plus I got so many bars like the 1 minute chart. I already know you can't handle it. You ain't making moves, you a mannequin. You ain't got that flame, that candlestick.
They ain't got that flame. Tell me it's a cold, not a game. Walk through the mud and the rain, just bring a little hope to the people in pain. I don't want lies, I want honesty. Negative vibes bother me. Stay up on your grind until you make it out of poverty. You ready? I'm ready. Let's get it, my bag on heavy. I'm zoom to the Fetty. My pockets look full, not empty. You loaded, I'm loaded. We never gon' fold, you know it. That's fast right there, go quote it. It's coke, we goated. Different level, it's level, untold. They watching, we popping like options. You know, it's real, it's really real. Like PHILO time. Cause you can't help but make a meal if your people blind. Restless, cause I've been up grinding, I just want the Lexus. Cooking up like I'm making breakfast. Oh, I'm eating good, but you know I had to bless it. Looked inside the mirror, told my demons hit the exit.
That was Benny, that was level. Fuck the demons, fuck the devil. Throw the pebble, be successful. You can't tell me code ain't special. I got rich, I made a stencil like a chair. It's really simple, the framework is intellectual. Ay, like Curry on the chain, my brother, you know, wait, I know you know the name. You ain't never seen my face, probably watch us in the game. Did it with a couple plays, let me kick a little lesson. You ain't never get a chase. What's yours, you always get what I'm really trying to say. Longer that you want the stock, more that's getting safe. You like to shit I say, I ain't trying to make it stay. Hey, I'm hitting plays, I'm hitting weights. Your portfolio all day, mine's filled with mostly grace. Apple, Amazon, and Facebook. You probably know the names. You probably thought that you should wait, then went and bought a course to trade. Benny, get some clothes and buy to close this shit. Clap them if they talking on some hopeless shit. Cause I've been there and going back. I told y'all that I'm focusing. I know they getting mad. The news is fair as well as motivating. Let's go, and a shout out to the vets. Hit the players, then we sending in the jets. Don't be shy, you could send a pray request. And the list got everything you missed. I love y'all, baby. It's a cup. 2020. But talk to me in 2030.
You know what it is, baby. Cold music, 2020. We coming. Watch out. On the radar. Tell them I just want the Lexus. We out here making moves, baby. Let's go.
Oh, Chattadonia. What's up, baby? How you living? You living good? You feeling good? Amen? Amen, amen, amen. It's time. Oh, Chad. Welcome. It's PHILO time. It is. It is. And I'm excited for it. I am so hyped for this PHILO because I liked yesterday's PHILO. So I got another one for you. I usually got a lot of just random like PHILO to go over with y'all, but this one I'm very excited about it. And I'm really hyped, honestly. I am gonna get you hyped, okay? I'm gonna get you hyped today, Chad. Because I want you to understand the truth of something, okay? Are you ready? Is everybody locked and loaded? Are you ready for it? I need to incorporate the horn. This is gonna be hype. You know what I'm saying? Like, this is the PHILO. Are you ready? Are you ready? And some of you may not like some of the language I use, and the language I'm referring to is the big man, finger to the sky, God, right? But it's okay. You can find a way to really understand the truth of what I'm saying. It's very simple. Chad, if God could do it for them, why can't he do it for you? Oh, y'all don't feel me, Chad. If good things can happen to people every single day, why is it stopping you from having good things happening to you, baby? Oh, let's go. Let's go. Chad, did y'all hear me? If it could happen to them, it could happen to you. Let's go. Let's go. Nah, for real, though. For real, I don't want you guys to ever forget this. And I really, really want you to think about this one. And I hope you ponder on this because we've gone through a lot. You've seen a lot. And I hope you get the reality of it, man. There's blessings everywhere you look. And it don't matter, good or bad. The rain shines on the just and unjust alike. Same thing for the blessings. And who are you to say, oh, they should get blessed or not? What you should realize is if it could happen to them, it could happen to you, baby. Oh, amen? Amen. Y'all feel me? Y'all feel me, right? That's positive. That should make you really look at things a little different. I really, really hope it does. But do you agree? If it could happen to them, it could happen to you. Do you agree? Do you agree? Just let me know if you agree, Chad. That's amen is usually an agreement. But do you agree? Seriously. I want to know. I want you to tell me you agree or not. Yeah, good. A lot of agreement. I love it. I love it. I love it. I love it. There you go. Amen. Amen. If it could happen to them, it could happen to you. Now, great. So you know why I'm telling you that? You know why I'm getting you so hyped and why I'm making you agree? It's because I'm trapping you, Chad. Yeah, that's how this philo's going. I know, because that is the truth of the matter, and I really believe in what I just shared with you. However, my friends, there's another side to the coin. You know why? Because it goes both ways. Oh, they don't feel me. See, I wanted to see if you agreed, and I know a lot of people do. It's funny. Well, I hope as funny as it is, that it helps you realize the truth of what I'm about to tell you. Because guess what? The same thing applies on the reverse. If God could bless them, he could bless you. But go look through the history. You could read the book. You could go look around in the daily world right now. There is good people who have to suffer. Yes or no? Tell me you haven't seen somebody who doesn't deserve a bad thing and that happens to them. Yes, it is the plot twist. It's the same thing applies. So that means, why are you, like I said the other day, a lot of people are going through stuff. So instead of thinking you're like, oh man, it's the only one. No. That means bad happens to good as well too. You know, I heard this the other day and it tripped me out. If you believe in the story of Jesus, like you realize that, okay, God's son, and he had to go through pain. He had to go through temptation. He had to deal with people. He had to be uncomfortable. So if God put his own son through that, what do you think is going to happen to you? You know why I'm clapping, though? Because the point is very, very important. I hope, as we think deeply, and even after yesterday's philo, I hope you could understand this. You know why you're going to go through good and bad? But why even on the good thing and the thing we could focus on for the blessings, it's true. And if it can't happen to them, it can't happen to you. But it doesn't mean you are going to be spared from the things that are going to make you great. Oh, stop playing with me. You know why? Because your character is more important than your comfort. Come on, let me tell it again. Your character is more important than your comfort. Oh my gosh, let's go. Oh, you feel me? You feel me? It's funny because I shared that verse with you the other day, because even in success, your character gets tested. But going through fear, doubt, temptation, going through all the twists and turns of life, and you're like, oh man, this sucks sometimes, and it really does. But that builds your character. This is what I was saying with the discipline thing, and honestly, this is what I realized in a weird way, bro. Not even in a weird way. I think it's kind of obvious. I think I'm a little too comfortable. And that's even where I had to look in the mirror, and I was like, I feel like for real. Like I don't even want, I don't even want to be comfortable in it. You got to fight against comfort, Chad. You know why? Because your character is more important. And what you go through and what it builds out of you, the things that build character are usually uncomfortable. The thing that is going to give you the longevity to stay around, not only in the markets, but really just like pursuing the best of yourself for a long time. Oh man, the work of character is an ongoing process, and it is not comfortable. And we talk the mind and the soul, right? The body and the soul, and one's good for the other and vice versa. Well, think about it. That naturally implies there will be times where things will not be comfortable. But I hope you don't fight for it or fight against it. And I hope you realize it's not as if you are being targeted for things negative to happen for you. And that's why they say this is a blessing for endurance to grow your character. So that's why I'm really hyped on this, Philo. And I hope you get both sides of the message, because I think it's beautiful. I think there's two sides to it. And I still believe the first part. As much as I wanted to get you guys to realize it, it's true. If other people have been blessed, and if that's the story of the world, look around. You can be blessed too. I don't think there's anything stopping you. And if God has done good for other people and people who have, or you would even say this is the dangerous game because it's not based on works. But, you know, you look around and you're like, man, why? I feel like it can't happen to you. A lot of great things you probably can't even fathom will be able to happen to you. And that's what I've even been able to see, and it's mind-blowing. But then also on the reverse, don't let the things that are going to build you for greatness in your character and the things that take you out of your comfort zone and disturb your comfort, do not let that take you off of the path. Because if even God had to go through that, they put Jesus through it, God's own son had to go through it, and he put his own son through the ringer. So then it could happen to you too, I guess. But what comes out is the most important. And that's what I told you, Chad. If you put it through the fire, if it comes out, it is gold, ladies and gentlemen. That is your character. That is your future self. Put it through the fire. If it comes out, it's going to be gold. Fire will not be comfortable. But I hope you see where I'm coming from. So, Chad, God bless you all. I hope you're ready for another exciting quarter. I hope this PHILO could build off of yesterday and you build that discipline, fight against that unraveling ball of yarn and stop knotting it up in your head. And I hope that you keep the discipline to set your limits for your soul and your body and find the balance between both of them. You know what I'm saying? I hope that you could apply the discipline and understand that that process will not be comfortable. And at times you will be faced with it, but that's okay. We should all be expected to go through it. And then at the same time, on the reverse end, you should expect the blessing as well, because look around. People have been blessed. People are getting blessed. But also people are going through stuff. And people have to deal with pain. And you're going to have to go through pain as well, too. Remember, do you want to drink from the cup? So let's go, Chad. I hope this inspires you. And I really hope this helps you build up that discipline that we could take into this next quarter. And let's really run it, all right? Are you with me, Chad? I know you with me. You feel me, baby. Let's go. That is your philosophy, ladies and gentlemen. So read the books. Do what you need to do. Get on with whatever you need to get on with. I'll see you on the watch list, but that's it, Chad. I love you. Read Richest Man of Babylon, Proverbs New Living Translation, and The Strangest Secret in the World. But don't ever forget why we're here, why we keep going, why we expect a blessing, and why we even expect discomfort so we could build our character, and why we know that faith, hope, and love ain't ever going out of style, baby. Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Let's go. So, Chad, that's the day. I love you all. I'll see you on the watch list tonight. Have a wonderful evening. Again, no cult real estate today. If I could surprise you, I will. But at the very least, watch list in tomorrow morning. Peace out. Where are we going out to? I want to go outside, out to Outland, Badland, outside. Wait, listen, hey, seriously, I mean it. It's not hyperbole. I'll tell you a story. I went to the train the other day, and then I got on the train, and then NASA was there. I said, why is there a spaceship if we have to go roost up the roosters? And that's what my grandpa told me. I'll never forget what he told me that one day. He said, you got to put the pedal to the metal and the metal to the aluminum. You know, there's a bad, but you better watch out because it might disintegrate. And if it's going to disintegrate, then you got to get right back on that horse and chase it. And I learned that. I was inspired that day. Okay? Oh, EA laying 6% off. Best jobs market is just Bob market, best Bob market in the world. All right, I love you. I gotta go. I gotta get going here.